Welcome everybody. Welcome. Good evening and happy Easter, everybody. If you guys can take a look at it, uh, if you can take a look at the YouTube and Discords and the Twitters and see if all the sounds are coming all right, making sure there is no echo coming, there is no issues on it. If you guys can take a look at it and if you can respond back, I would appreciate. YouTube, yep. See if you guys can check YouTube.
Yeah, I'm listening in Discord. It's loud and clear.
Okay, Discord is clear. Okay. Sigma, your mic. Okay. How about YouTube? If somebody can verify YouTube, that will be great.
Hey Josh, there's a minor error in the title for the Twitter.
Yeah, go ahead. What is it?
It's it says earning week spelled WEAK.
Oh
Just
shit.
want somebody to get the misconception that there's
Okay. Okay. Let me.
earnings being bad this week.
All right. That we can leave it. Actually, is true. So we keep it like that. Can't delete that, but sorry, we'll keep it like that. People would understand. I mean, I'm sure people have common sense. They will figure it out.
Yeah. Are you
Because
still holding your positions in snow?
yeah.
Yeah, I was looking at entering.
We'll talk later bit about on that one. We will start the process and then definitely we'll talk about a lot of things on positions and all. Let me get going on. Let me get going on other things on it. So what we'll do is right now I'm gonna start. I'm just. It's almost 7 o'clock, right? Yep, 7 o'clock, and slowly people are joining in. And YouTube's also just. I just want to make sure somebody goes on YouTube and respond back that the sound is not echoing because it used to be earlier and people used to complain. So if somebody confirm, that would be a great. Then I can start going on YouTube. So let me just a second. I'm gonna share this. Okay, just a second. Okay. Alright. So no echo on YouTube. Anybody can respond. If anybody can, the link is on. So let me. Okay. So let me show you. So you guys can see on Twitter. Let me pin this one actually first. Pin to the profile. So that's the live. Okay.
I want to show you a chart whenever you're ready.
Okay, just a second. I got to start first. I think I'm hoping that everything is okay. Sound checks good. Okay, somebody responded on it. Thanks, team. I appreciate, man. Okay. All right. So, guys, we will welcome to Top Trading Edge. And happy Easter to everybody. They will start with the disclaimer. This video is for education purpose only, not recommending to buy or sell any sort of stocks or investment. For your financial advice, please consult with your professional financial advisor. Okay, so we today what we'll be discussing, and I think everybody knows that I did tweet about it, and we will actually, you know what, let me get it off here and go back to the chart and the S&P 500. Also we're gonna talk about it, the markets. So everybody knows that market is right now in a mode where everybody's thinking what's gonna happen next week, right? And I'm very positive that market is heading in a bear trend. If you look at it completely, we did not even try the 200 moving average last 4 days. So just to give you a little idea. Okay, so altogether today's itinerary would be like we'll be talking about the bond and stock market analysis. So if anybody interested, if they want to hang in here, I'll be talking about the bond market and stock market. Why? Because bond market is so important in our field, where exactly, because bond market, all the market makers, that's where they go and do their many activities. So we will be talking about the bond market as well as stock market today, and we analyze that what exactly happening, because bond market is the market where we can navigate ourselves for future, where the market is heading, so that will be the one of the topic. Then second topic we'll be discussing what market makers are playing basically, so we'll discuss basically what market makers are pretty much in equity market as well as bond market, what they are doing. And the third topic I'll cover about, because many people were asking me about the semiconductor stocks, and he said, Josh, a lot of pent up demand in semiconductor and why stocks are falling and stuff like that. So we will try to analyze in depth into the semiconductor. And then also there is a few earnings coming in this. I think Tesla earning coming in, so we will talk about the Tesla earning as well as some mega cap earning. So we'll go through some of those stocks also. And then also very important thing is about where the mortgage rates are going, where the housing market heading, because people have their position probably, or they are holding house, or they're holding the mortgage and all. So we will go through that also a little bit, so people get to know some ideas, because what I like to do is I like to educate from different angles. That is the only way we can navigate ourselves. Otherwise we always will have the same question, Josh, what is your price target for Nvidia, what is your price target for Tesla, what is your price target for Palantir, right? Because I want you to analyze it. I want you to understand that what should be your price target. Otherwise it's like when somebody asks me the price target, I feel like I'm a fortune teller. It's literally I'm telling them, and the whole Twitter works on that manner. That, hey, what is your price target? Man, there is no price target for that. You have to analyze by just like Kathy would post, my price target is this. I hate that when somebody says this is the price target. How can you tell this is my price target based on just like that, and that to horizon given 5 years? So that way anything can happen, anything. So I do not like that way. So we will discuss that thing, because many people are following on Twitter, and I've been analyzing Twitter's last few days, what and all people post. And then I feel it that I feel like people are not either confident, or people feel like, oh, let me pump it up because people like it, other people like it, or they have their own positions, some reason, or maybe somebody trying to pump it up. So different scenario, I think, when it comes to the social media. So but we don't want to go in too much into all this politics in terms of social media, but I like to teach since you are here, I like to teach everybody the right manners. So we will we'll go with that. So first thing, we will start with the where the stock market exactly, what exactly happening according to me, what exactly happened and what is going to happen, right? So as you can see, this is the chart you have front of. I'm hoping everybody's here. If they join, if they have any questions, what I would tell you guys is just raise the hand, and then slowly when I keep moving a little further down, then I'll be able to give you opportunity to speak. Meantime, I'm gonna start with my agenda, and then we will add you up on as a speaker. Okay, so. Let's start with the S&P 500, because that's our main. S&P 500 is our Fortune 500 companies, and we will, that is our main indicator for the market, equity market, which is all derivatives. So as you can take a look at it, what exactly happening in this S&P 500, where as you can see, we started from the January right here, and the dates are here, and if you can see here, my price point, which was S&P 500, was $480, and since then we grinding lower, and then in last few weeks back we try to grind up, and then now we are going basically down. So we're gonna pretty much right now concentrate on these bear trend. As you can see, this is a bullish trend, and we used to trade at that time. Now we are in a bear trend. So what exactly, Josh, this thing happening right now? So as you can see, we broke this is the purple line, pink line, that is our 100-day moving average. These are all simple moving average, guys. Okay, so this 100-day moving average we broke, 200-day moving average we broke downwards, and we also broke 50-day moving average right here. You see this blue line. So keep these things. I always, whenever I look at the daily chart, when the market I take a look at it, I always discuss these are major indicator, and these are the indicator being set on most of the bar system, right? and that's where the market maker also, you know, they also target based on this also. Anyway, so if you notice last 4 days, what do you see here? Last 4 days we did not even try 200-day moving average, we did not try 100-day moving average, we could not close. Basically one day we close here, this is a green candle, but last 3 days we could not close above the 50-day moving average. So what does that mean, Josh? That means the pressure is downward. And if you look at it, there is no wick on the red candle, means full bearish red candle here. So what does it mean, Josh? Tomorrow going to be a red? No. That's not tomorrow, because remember, we are not targeting only tomorrow, because tomorrow market maker can have a different agenda. But overall, the trend, we have to go by the trend, right? So the trend is super bearish. Then based on this is telling me that we have almost more than 50% stocks on every index. They are entering into bear territory. They all triggers into the S&P 500, even QQQ, the Nasdaq, and Russell 2000. Most of the stocks now they are entered into, more than 50% stocks are they entered into the bear territory. So what happens in the bear territory? When they enter into the bear territory, means there will be a less buyer to be a bullish on this particular sentiment, because that's how the software works. It's not about you and me, it's about like how software has been designed by big guns, right? Big institutions, and those are the software, they sell it to their hedges in the middle, who are managing the people's fund, like 401k and small company who manage 2 billion, 5 billion, 10 billions, 20 billions fund, and those are the company, they use those software. So in their software has been triggered. Now what I like to show you something here, look at these lines. Okay, you see this 50-day moving average line, we cross down on 100-day moving average, right? Then we also cross 50-day moving average, cross to 200-day moving average. That is our death cross. Now what does it mean, Josh? Death cross means a very bearish trend started, means most of the indicator kicks in when the death crosses. That means it's going to be a really going to be bear, going to be approved by the bear. And as you can see that these are daily charts, and as you can see 50-day, the MACD is also pointing, signaling down. So this is our oscillator. So always look at here, guys, because we are in daily chart. Remember, this is all almost like from December, right? From December to here right now, 4 months. So this is the oscillator, which is 70% from here to 30% right here line is. So 70% to 30% right here. So where are we right now? We cross these, which is our MACD is pointing that the bear trend. And if you look at the gap between the signal lines and the MACD is further gapping down and pointing towards the down. So most likely we are right now heading into, you see this zero is our trend line. Once we cross the zero line bottom, that is also proving that 50% is right there, and we are crossing right there, and probably next week you will see that also. So it's pointing right there, we are entering more into the more bear territory, right? Now one more important thing here you need to watch about. Yeah.
You're saying 50%. You're saying 50% on the MACD.
No, not MACD. 50% of what is S&P 500? S&P 500 is 500 companies, right? So most of the 500 companies right now, 50%. So this is oscillator, which is oscillator is 0%. So 0% above is 70, and over here is 30, right? If you look at this, is right here it's 30 basically bottom line, and over here is a positive 70. So we are right now in the zero. You see 0%. We are crossing right now here. So we are even. We are entering, pointing down at even 0%. So we are not even positive. We are not very MACD. This is MACD point. We are not talking about right now this. We are just talking about the MACD. Now,
if we continue to go below zero into the negatives, then that means sellers have taken over.
You got it, because I was about to explain you more. So now I can show you what I think that. So this is how it is basically. So. It's a good question though. So I always like to explain the people so they understand. So look at this right here. So if you look at here, one, then this another one. So I'm gonna just give me a little time. I'm gonna create something for you so you can all visually analyze what Josh is trying to show you right here, right? Okay, So what do you see here? What does this mean? These are the falling tops. You see that? Falling tops. Whenever you see the chart, everybody need to understand the common chart. Anything you want to buy something, you open a chart, you always need to understand what exactly chart look like. Do you think the tops are going up or going down, right? So this is S&P 500, guys. We're not talking about Russell 2000. Those are Cathy Wood stocks. Over here is Fortune 500 company. Those company have always positive EPS, excellent balance sheets. Okay, that's what we are. This is our main indicator for the market. So when main indicator of S&P 500 is falling tops, that's very bearish sign. Okay, so now we try to raise here, this, but again we try to, because this was we all know what actually happened. These were a trap, and market makers setup was, and now again we are right now falling the tops again. If you see that, we are going, the trend is still long way to go, but I'm just giving you, this is 3-month process. We just started this now, like 2 weeks ago, right? Like not even 2 weeks, yeah, probably 2 weeks, right here, 2 weeks. So the moment you see this kind of thing falling tops, that means the trend is bearish. Just to give you a little idea, this is simple visualization where you can understand, very simple. There is no brain demand, you don't have to apply too much brain. It's simple, falling tops. Now as you can see, this is purple line is 100-day moving average. Do you see a difference between purple line and the red line? Red line is 200-day moving average, and 100-day is purple one is right. Look at the gap between here and here. The further we go out, what exactly happening is, we are about to cross 100-day moving average, about to cross 200. So 200-day moving average would cross above the 100-day. That is very bearish sign, guys. That means 100% confirmed right there. So we already crossed 50-day. 50-day is a shorter period, right? 100-day is a little slower. So now 100-day going to cross 200-day, and so 200-day will be above the 100-day. That will be more bearish sign, as you can see. And if you look at it very closely, there is this line right here, blue line, is trending down. You see the pointing like now diagonally going down like this. You see this, and over here the gap is getting wider. From here to here is wider, and from 100-day to 200-day moving average is narrower, right? So that's what exactly we need to keep eyes on it. What exactly happening is, no matter market tomorrow becomes green or 1 or 2 day become green, and we think, oh, Josh was wrong or was blah blah. I'm not saying Josh was wrong, but just in case, because there's always bear and bull territory, or bears and bull cycle always go through. There is a cycle right here. You see this cycle, then again bear, bull and bear. So the cycle will be there, but right now I do not see crazy thing happening at this point, because we could not try last week, though it was a month end. Remember the month end. So we will see how things market is rolling as the time goes, because still we are in a bear territory. So this is our market. What I see right now at this point, that is looking very bearish to me. And if anybody comes in, even if the market maker goes tomorrow green, or day 1 or 2 day green, you can play intraday, that different game. Okay, you can play intraday, that is different game. We'll see how things are, because there's a pressure here, and I want to show you the pressure. So the pressure, if you want to see, we need to go back to the bond market. Okay, so that's why I say, we're going to talk about the bond today. So that way we will understand what exactly, because this is just the equity market, but bond market is most important part is here. So if you take a look at it, okay, let me go to the 10-year treasury yield right here, right? So I think I discussed about this one, and I'm going to go to weekly chart. So you know that, and then I'll go to another chart also. So those who are new here, or maybe visiting first time, see what happens is, every time market crash, this is the bearish. So okay, so this is basically US bond 10-year treasury yield. This is the yield. Where what is yield is? Yield is rate of return when somebody bought a bond 5 years ago, 2 years ago, yesterday, or 10 years ago, or 20 years ago, or 50 years ago, right? Those who are holding their bonds, when they hold the bond, they have they can, their rate of return, yield right now. You know what I mean? Yield, rate of return is right here. So what happened is, when they bought it, at that time they locked in for 10 years, 20 years, right? So this is 10 years, for example. So when they hold it there, when they bought it at probably right here, you see 0.30, somebody bought it here, somebody bought it here in 2016, 2020. I mean 2020. He must have the coupon rate of his bond would be a half a percent 0.60 right here. Interest rate is right here. Now we are heading to almost 3 right here. You see what happened? So we need to go back to right here 35 40 years ago, 1988. From here right here, every time this resistance line, you see this resistance line, and every time we test this resistance line, we always heading into some sort of correction. So I made a little video also, and I hope everybody knows that little video, and I think is very very important. I hope everybody go through that video also, because I need to show you that important thing, because even CNBC was talking about, and I thought probably they would right here. So I'm gonna welcome to Top Trading, guys. Today CNBC was talking about bond market is broken. I've been saying this many months, and let's listen what they're saying.
I think that's exactly what you want to see if you want to be bullish for this back half of this year, which, by the way, I am. You want to see these things sell off in a meaningful fashion and flush some of this, exuberance out of the names. I will tell you, though, that the bond market's broken. I've said it many times. I'll say it again. It's absolutely broken. There's no way, again, in my opinion,
okay. So I don't want to take you too much time, but what does it mean bond market is broken, Josh? We have to have a knowledge of everything. Then only we'll be able to analyze this market. Otherwise, we always will have a price target, just like every Twitter, everybody goes price target without any fundamental, no foundation. My price target is this, and that's what everybody talking it. And I don't like that way, because people talk and people get trapped. You know what I mean? Because they think, oh, price target is this, so we're gonna go there, right? All the analysts go there. So anyway, so over here, as you can see, every time we hit the resistance or try to hit the resistance, and the market had a big time correction on this bond, right? Because these are the bond yield right now. This is 10-year. I'm not even to take and looking at the 20. Same thing happening. So we will have a now reversal, and we are heading up.
Josh, can I make a quick request?
Yeah.
In the bottom right corner, you have that little gear symbol of your screen.
Bottom gear symbol.
Right. Keep going to the right. The bottom right corner. Yeah, you click on that. You click on that and just set it to price.
Oh, set it the price. Okay.
Yeah, and then so with the and if you set that to is it set to price?
This is the bond. I don't want to set a price. I want a rate percentage.
Okay, so this is showing that as it's dropping, the bond yield is dropping, or the bond yield goes up as the price goes up, as the price goes down.
Yeah, so this is yield. I'm not looking at the bond. Bond is different. I will show you a little bit later.
Okay.
Yeah, no problem. So this is the yield.
And Josh, just a question. So now since it's going, so is there any going to be pick out, like do we any historical circumstances where we can see when it can pick out?
Absolutely. So I know, man, if everybody wants to go super fast, 120 miles speed, I'm gonna show it to you guys. All right, no problem. I have everything lined up, guys. Okay, no worry. I will show it to you. So just be a little patient. That's it. I'm gonna show you guys. So just hold your breath, and I'm gonna absolutely show you what exactly happened, previous history, because I believe in proof. I believe in exploring the old data. I believe in comparing the previous data with the current data. Then only, I don't just believe in based on future, because future can be made anywhere, because that's how we lose. I don't want to lose money. I don't want you to lose money. Forget about me, man. I don't go crazy. But if people are, when I see people are losing their $250,000, and many people are, when they text me and I see those kind of messages, I feel like, man, there's a lot of pump and dump happening, and people are losing their shirts and pants, and that's the reason. And it really boils my blood, man, when somebody pumps, like particularly celebrities like Kathy Wood, who she should understand, man, that hey, when I do that, somebody losing their houses. Believe me, that you should have a common sense what you're doing to this, when the Tesla is already $1,100 stock, and you are still pumping that gonna go to $3,000 or $4,000, and then somebody based on that, so people buy Tesla, and what would happen? Tesla goes to down. She's not gonna go back to her whomsoever buys the stock, and that's ridiculous, man. So I don't know, man. I'm a small guy, but if I'm powerful like Khan Academy, then I can have my voice raised, and I can bring it to I can fight with the people who are trying to, messing around with people's mind and losing money, man. And that's how market makers are minting money, because that's why they come to equity market and people lose tons of money. Anyway, I don't want to go take too much time. We have a lot of things to cover, man. Today is going to be a beautiful day to understand this, how things are happening. So if you look at it here, guys, like you see this, I hope everybody can see my dates are here. 1989, 1994 markdown, 2000 .com bubble. If you guys remember, look at this. We are close to resistance. So market crash in 2008 when the subprime rate was, remember 2008, many people would know, probably, I'm sure many people would be here who they would know. Then again in 2018 everybody know here, right? 2018 we had a market corrections and we try to hit the resistance right here. This time we broke the resistance right here. We broke the resistance. Where are we heading? We heading way high, guys. Okay, this time we are heading way high. Okay, and I will show you to why way high. But so what exactly, Josh, why do I look at this chart? All right, we need to understand this is yield rate. So when the yield rate goes in 2018 we had a different scenario about the interest rate. So what was the interest rate at that time? So if you look at the history of 2018, I'm gonna go to the history 2018. Sorry, I got to go scroll up a little bit so I can show you. So everybody has to be on the same page to understand. 2021, 2020, 2020, right here. So pretty much at that time our interest rate was 2.5%, 2.25, right? September is the important month. We go and look right here, September, right? 2018 September 2.25. Right now we have a 0.25%, guys. Okay, remember we are way bottom, and we have, and at that time September 2.25 and 2.50. But what did we do at that time, guys? So what did we do in 2018? Right here, let me bring the chart here because I kept everything ready. So what is this, Josh? This is interesting, man. This is $10 trillion which I've been talking about, the balance sheet, which Fed going to shrink the balance sheet. Okay, so okay, so what exactly you trying to show, Josh, on 2018? Right here, if you can see my cursor, the bottom here is the date, and this is the value. Now these are in millions, becomes trillion right here, right? Okay, these are M. So when you see that, when you see 4, that 4 is trillion, right? Okay, and then the next two is 291 is a billion. So if you look at September, just look at the date. I'm gonna bring it to September right here. We started quantitative tightening at that time, but that time we were tightening like a very small amount that time. If you look at it right here, somewhere in 2018 September, October, November, December, right here, we pretty much, how much we did that. I would say about 200 billion we did probably at that period of time, and maybe total we did probably 400 billion from 2018 to 2019 time right here. Okay, now let's go back to what exactly happened at that time. So that time, let's go back to the stock market, what exactly was happening right in the stock market. So let's take a look at it. Apple. So I got to go back to the daily chart and I can show you Apple right here. So 2018 September right here. So September, look at the date on the bottom, guys. Okay, keep eyes on it, and if you can see that date in the bottom is September right here, when they were trying to increase 0.25% interest rate, and they started quantitative tightening. And what was the number they were tightening? They were tightening 40, I think they did 40 billion total 40 billion at that particular quarter. 40 billion. This time we'll be doing 95 billion, B as in boy, guys. Okay, so what exactly happened in September right here? So if you can see this right here, I'm gonna just draw again one more time so you guys can see that. So we were here at September right here, which was Apple was, this is before split, guys. Okay, price is $58. So this is the bottom right here. So we, that time from September, look at the date on the bottom, pretty much September right here, September, October, and then we here is January 19. From September, October, November, December, January, pretty much January what? January 3rd. No, so you can count 3 months, guys. October, November, December. Okay, so October, November, December, 3 months market. Apple stock, I'm not taking look at any Kathy Wood or Tesla or any stock. I'm looking at our stock market, the best stock, which was Apple, right? Everybody has believe in Apple. 39% stock was dropped right here. I hope everybody can see that 39% right here. You see this 39%. See that 39% right here, right? 39% at that time drop. Okay, so what exactly happened before also? Because there was a, remember, they was as they keep going like that. In June also they did that. In January 2018 also they did that, and that time Apple was dropped 16%. Okay, so just
to find a difference, can you compare Microsoft or Google along with Apple?
Oh yeah, absolutely. Why not, man? That's what we have to do that. So January right here, February. No, this is 2020. So we got to go back to January, November. Microsoft that time was like a super duper cheap stock. Did not like nobody care about Microsoft. You got to take a big name, like if you want to see that. So let's take a look at the Microsoft. So Microsoft November right here is October right here. So November to October. This Microsoft dropped 19% at that time. But that time Microsoft did not have the big name like this. So I would go with the Google also, who has a big ticket. Big ticket is, how about Amazon? Amazon was expensive that time?
Yeah, the reason I'm saying, because Trump was having the China issues and Apple was down due to that reason as well. So I just want to differentiate Microsoft, Google and Apple on the same line. Because if they all drop by more than 30%, that will be more consistent, Josh.
Okay, absolutely. So let's take a look at the, I already look at the September, October, August. So let's take a look at this one. Amazon. I'm going to look Amazon because everybody needs the product Amazon. So people were buying Amazon. So Amazon was down 36% right here. Amazon down was 36%, right? But only these 3 months, okay, constant 3 months, but then again goes up, then again down, little bit game goes on. So we have to keep in mind. Then I will take a look at it, Google too. So let's take a look at the Google. What was the Google? August, September right here, this one right here. So Google was probably 20%, something like that. September, August. Google started from August basically. They were slowly doing from, people were feeling August. So Google was down 24%, something like that. So what we need to keep in mind like that now what would happen here is quantitative tightening will occur. Probably they will announce. Okay, they will be announcing in this May month with the FOMC meeting coming in. On that time also they will announce that, hey, we will increase the 50 point interest rate also, and we have to keep that thing also in mind, that 50 handle, what that would happen, what exactly can happen 50 handles. So 50 handle, I did tweet today, right, just now, and I want to show you that what exactly can happen. And we have to, very important guys, okay, this is very important, man. Where did it go? Right at top, and right here. Okay, so everybody need to see this. Higher interest rate would drive up the record-breaking deficit, and that higher, right? Because we have the moment you increase the interest rate, what happens is, right? What would happen? The debt we have, the government has a debt because they keep taking the bond, they keep selling the bonds, and those bond holds the value. So we have a huge debt, guys. Okay, now what are the debts are? Okay, right here, let's take a look at it. Federal government spending on interest rate payments are right here. Right now these are the interest rate payments we are paying right now. These are must. Food stamp is must, disability insurance is must, transportation is must, interest rate is must. These are all interest we are paying. What is interest rate? Means when they sell the bonds, right? When they give you the bond, they have to give 1%, 2%, 10-year treasury, 2%, 20 years treasury. That interest they have to give it, right? There is no ifs and buts. These must go. This must. Fed has to spend money right here. This is must. Now in this scenario, what would happen right now? Now this is must scenario. Now what on top of that, what would have is, we have inflation to fight with it. So the Fed wants to control the inflation. What they have to do? They have to decrease the buying power. How do they decrease the buying power? They have to increase the interest rate. But if they do that, what would happen to the market? Okay, right here. So if government goes and say, Fed goes and say, I'm going to increase the interest rate higher. So let's look at it. What would happen to the market? if they increase the interest rate to 50 handle. Right here is 50 handle. One, this is scenario, okay, 1%, 2%. What was the interest rate in normally, is 2%, 2.5%. And when you have a high inflation, when was the high inflation? Okay, high inflation was in 2000. That time we used to have 2000 right here. You see the high inflation, whenever you have, your Fed rate has to be always above the inflation. It cannot be down, otherwise pointless, because the bond, nobody gonna buy the bond, and people think the bond is garbage. All your existing bond loses the value, right? Because then it's a pointless. So that's why the Fed rate was 11% when we had inflation was higher in 1990, 84, 85. You see this? That time Fed rate was higher. But just to show you,
Josh, is that why Japan announced that they were going to stop buying U.S. Treasury bonds?
You got it. They just announced last week, and they are smart people. They know exactly what would happen, and that's why I showed you the video. The bond market is broken, but people do not understand that word impact. What that word can impact the market, because just like Fed announced that, hey, we're gonna do quantitative easing when we were all locked down and nobody knew, everybody thought market gonna crash, and everybody was crying, oh, how come it be V-shaped recovery? But people did not have the knowledge fundamentally. That's why they did not know, and they were not able to buy. But many people bought because they have macro level knowledge, right? They know exactly what quantitative easing would be, right?
And then in order for Japan to want to buy U.S. Treasury bonds again in the future, they would have to make them look more valuable by bringing up the interest rates.
Yeah, so right now what happened is many countries, they do have the bond holding right now. They are holding, but they are losing money because due to the inflation. So when you have why people buy a bond? Why they cannot buy Tesla stock, Apple stock, whatever the stock they want to buy? Because they are vulnerable. When any circumstances happens, then Tesla stock can go $1,000 to $200. Anything can happen to the equity market, right? Equity market is more vulnerable. Credit market industry is also more vulnerable than the equity market. So then they go to the bond market, right? I'm just trying to show you guys that there are different market where different leverages, different safety and securities applies. So when it comes to bond market, U.S. Treasury bonds are they have a AAA rating. So that's why all these big institutions worldwide, they go and buy a bond, though you can only make 1%, 0.5%, 2% coupon rate. Normally coupon rates are very low. Whatever the Fed rate are, that's your rate would be, and that's what you make. But safety is your $100 you give it to government, U.S. government will give you that $100 back for after 10-year Treasury or 20-year Treasury you buy. Your safety is there, but what you get is 1%. At the end of the year, you only get $1. Say for example, $100 you put it in, you give it to the U.S. government. U.S. government gives you $1 every year. Right? So that's how the system basically went. Now people realizing, man, hey, I put so many billions of dollars in US Treasury. Now the Treasury is losing the ground. What exactly happening to the Treasury right here? So so what happened is, let's go back to indexes now. So if I go back to indexes right here, which is, so for example, I would just go about 2-year Treasury right here. So I want to go back to 10 years so you guys all understand in the same scenario. So this is, I'm going to make a weekly chart again back to that. So what happens is now the yield is going higher and higher. So those people who already bought it here, they are holding at the 0.56, 0.6, right? Right here, those who bought it here, they are losing their value now. Okay, they are losing their value. Those are since what, 2020 right here, they're losing value, and whatever the rate they bought it, but now this is skyrocketing. Yield is going higher and higher. If the yield goes to 5, who gonna buy the bond who bought it here? Because they are losing the value. They already made some money from here to here. They collected the coupon, so they're holding the bond value goes down because the yield is going higher. So nobody gonna buy, and there are many different type of bond available in the market. Those will be hold very low value. Some bonds are like holding probably 60 cents a dollar also. So market, that's why they said that bond market is broken. And if that happens, what happens is everybody will say, many people think, you know what, let's get rid of it, take a loss, right? That's what normally we do, right? When the stock goes down, then we sell. Stock goes up, we don't sell. Most of the people don't sell.
Yeah, and the Josh, when the news came out right on Friday, which Sim mentioned that Japan is now not gonna to buy. So the moment gold future gone up, so that's how that happened, very instant. So it's like always linked to each other.
Then this is what I those who follow me since what few months, they already know when the nugget was $47. I tweet about it and I told that the gold is the only hedge right now. If anybody say about the bond, dollar, and even the dollar going up right now, I do not believe in dollar, because that if you look at the M2 report, you come to know. So that's why I said how much you can suppress. You know what I mean? It's all dressed up. Everything is dressed up and suppress market here, and they're trying to say now. That's why I say bonds are bottoming out, and gold will fly high. Many people think, no, Josh, Bitcoin gonna fly because it's inflation. Bitcoin is not a derivative, guys. Bitcoin will go to the dirt cheap. I'm not saying the Bitcoin is garbage. No, Bitcoin is a great technology, but you need a power. You know, this everything is work with the power. Do you see what Putin has a power? Do you see what America has a power? Do you see Japan? Do you see Europe has a power? Look at the one sanction, what can ruin the Japan to Russia, right? So it's all about power, guys. We can, you and me cannot have the power. Like you have to understand this. Let me bring this picture to you. Those who are on YouTube, they can see, not on Discord, guys. This picture. So look how many kettles are here, thousands, and how many guys are here? 5 guys. Who has the power? These 5 guys or these 1,000 kettles? Right? These 5 guys the power. They are taking all this. For example, they are taking to the slaughterhouse. They would not even know they are heading to slaughterhouse. Right? They don't even apply their brain. But so what I'm trying to explain you guys here is, though if you look at by the naked eye, you think, wow, they are 1,000. They have the power, right? This is army. For example, I'm just putting cattle here. But imagine if there is thousands of people, they have the power. But it's not. These people have the power, right? That's why they are taking to the destination wherever they want to. So what I try to teach you guys is, those big government, they have the power. You and me do not have the power, guys. Even though no matter how much we can raise the voice, if they cannot approve this as a security Bitcoin, then no matter what happens, it's gonna be like that. Even though they're not gonna come out and say yes or no, because they need votes. They will come out and say, I support Bitcoin, I do this. But hey, why don't you go and make a law? Make it law, and then I'll trust you. Go and vote. Then I'll believe you. So what we need to do is, Bitcoin will also not hold whenever the market will have a liquidity crunch. Basically, Fed job right now is to dump all this. They have to start quantitative QT, right? Quantitative tightening. They will start. What would happen? They will happen just like 2018, guys. 2018 is a small number. This time we have double. And plus interest rate is also only 0.25% right now we have, and I'm gonna add more things. So all these things will occur multiple time in a different ways. So gold will fly sky high, not the Bitcoin, not the bond, not the equity, not the credit market. And all these big banks, some smart banks, they exactly know where to put the money and where to go, and that's why you see parabolic move here. Yield, why yields are going parabolic? Because that's where they are putting their money. So if you can take a look at the TNX, look at this. I've been saying this, TBT. I was saying TBT. If you remember my price target, if you remember the TBT, I don't know how many people remember. I said that, and this look at this breaking out 200-day moving average, gapping up. Look at the candles. This is weekly actually. Let me go to the daily chart so you can understand. Look at the parabolic move right here. So remember, somebody was asking me, hey, I'm losing my NVIDIA stocks, and I bought it, and now I'm on leverage. How somebody go and leverage? How do they do that? Because some Jim Cramer was pumping, I remember that, and at that time I was super short on NVIDIA, and I said, no, you cannot be this high, because valuation, everything has a valuation, just like Tesla has a valuation, and that's why I'm not bullish on it, because anybody can pump and dump. That is a period of 1 year, 2 years, 6 months, 3 months. There will be a time when you will see that Tesla will collect the dust. I wouldn't say collect the dust, but there is a proper valuation, right? Just like I explained you guys, Google has a forward PE ratio is 27 times. Apple has a forward PE ratio 29 times. Google has 22 times. Microsoft has a 27 times. What else? Google 22, Apple 29, Microsoft 27. How can I pay 100 times value on Tesla? Is this Tesla is made of golden shoes? Like, remember, I always keep giving example of, if you want to buy Nike shoes, it should cost $100. It should not be $10,000. just because somebody says that. So just like this here, we have to be very careful here, and that's what is gonna pay for it. So if Nvidia, somebody trying to be, Nvidia was 80, 90 time value, I'm not gonna pay 90 time. People paid for it. Now they are suffering. Same thing happening with the Tesla. There is a time. There will be a time. Everything has a your balance it foundation. Tesla's foundation is weak. They need to make more money. If they make money, then yes. But people like Kathy Wood and some people come and pump on social media, and that's how the stock price is. So I would not trust that price. And you have to understand, Tesla is not about Apple, not about Microsoft, not about Google. We do not want to create any celebrity. We want to pay by their earning. That's it. This is what we should believe in. We should pay by the earning. If somebody wants to pay more, then let them go and pay more, but we should pay by the earning. That's what I teach, because you never know when that will collapse, because microeconomy, foundations, all this, that parameter can wipe out all these fundamentals and technicals. Whatever Tesla says, if tomorrow recession starts, to 2023, everybody gonna go buying Tesla cars, then people would be afraid of buying, spending that much money also, right? So we have to look at everything. I have seen, man, guys, I have seen from bullish to bearish in 2000. Man, you don't know, people used to be a super spending money like 2008, 2004, 5, super bullish. Anywhere you go, every people spend money, tons of money in their pocket, and then all of a sudden it become recession, like people did not have the money to spend. 2008, 2009, oh boy, $5,000. I used to buy a house for $5,000, $10,000 house in Ohio, Indiana. Can you believe it? That bad time it was. People were leaving the house, and bankruptcy, and a lot of issue was going on around. So it's just same thing can happen, So, and we have watched time this time anyway. So this is what I was trying to say. Hey, this is where all these our big guys, big banks, that's what they are right now playing. They know exactly where the safety is, and this is where they are playing right now. They put money because this is bond market, guys. They exactly know where the bond market. Look at the parabolic move, and look at the growth here. You see, double the money right here soon, and I will remind you when the time will happen. You will see that. Look at it. We were here right here. Look, I said the bull right here, bull flag right here, $18, and then broke. Then again bull flag, again broke. Look at these parabolic moves, right? From here it has been going, $18 to $24, right?
And do you own any TBT, Josh?
Yeah, this is TBT. This is 20-year treasury yield.
No, do you own any yourself?
No, I do day trade, I don't know, but I will try to add some positions too. But just to people look, you have to choose the path, guys. There is a day trade, there is a swing trade, there is a long-term trade, but don't just be right now. That's what I tweet today. And what did I say? This is the slaughterhouse, right? Our equity market is a slaughterhouse for our retailers. What do you mean, George, slaughterhouse? Because this is where all these market makers. How come all these banks they come and their earnings are great now? They already lost $2 billion in Russia, and still they beat the revenue, they beat the EPS. How the hell that happens? Do you have an answer? Do they have printing machine at their places and they become profitable? And that too, they have exposure to $2 billion, almost $4 billion actually, $2 to $4 billion, and they're profitable. Citibank. All the bank basically, they all local bank losing money, but the international bank who are exposure, they are profitable. Can you believe that? How they make money? Because they come in our equity market and they slaughter our all the retailers, because we are cash cow. That's how they make money. So we have to be just little bit, we have to understand here when we go and trade, you have to trade safe and sound. You have to choose the path. Don't trade 100 items. Unless you are a day trader, yes, but if somebody who wants to be a safe and keep their portfolio green, don't trade everything I post or everything I talk or everything anybody else talk. Just find the path, have a slow speed, but make sure your portfolio goes green. Choose safe, look for a safety. Don't just jump on everywhere, every bandwagon comes in. Look for a safety and just go in that route. You will be it'll be safe. Just like I said, this is also safe, just like that. If you want to be, this is where market makers are right now playing. What they are doing in bond market, because they exactly know what's going to happen. Bond market, same thing. Mortgage market, I've been saying this. So you can short mortgage market too. MBS, what was it? Bond market, let me see. right here. Right here. This is mortgage market. Look at this mortgage market. So Josh, you think it's done this? Man, this is heading to this will, you know what this heading? Mortgage market is gonna be a waterfall, guys. This is nothing. This is nothing. This is gonna go all the way. It's gonna break the floor and it's gonna go downhill because why it would go? Okay, so I was talking about mortgage market. So I can explain you more about the mortgage market. So what happens is now all these mortgages we have, right, $18 trillion mortgage market we have in the market. Fed says they're gonna dump 35 billion mortgage backed security into the market. They will be doing. Right now they did not. Still they are doing quantitative easing, guys. Okay, right now as if we are talking, they are still doing QE at this time right now, at today's date. Okay, so if anybody says that no, they are still doing the quantitative easing at today's date. So they still did not stop that. They will start right now. They did not start the quantitative tightening yet. All right. So what would happen now? They said 90 out of 95 billion, around 35 billion will be mortgage-backed security comes into the market. So what would happen to those mortgage-backed security into the market when they come in? Those are like, remember in 2020, Fed announced that hey, we're gonna give you mortgage for 2.5% because interest rate was zero. When you become interest rate zero, mortgages become available bank pockets 2.5%, whatever the rates were, 2.5, 2.2 based on your credit. Many people locked in for 2.5. Many people did not lock in. They just wanted to have a 5 years, 1 year, whatever the loans are. Some corporate, they got a big loan on index base. Index, arm rate will be whatever the index rate changes, your rate will change because bank doesn't want to take a risk. So those index rate, they would also now rate goes up, right? Same thing here, mortgage also. Those who took the mortgage who did not locked in for 30 years, they will be, the rate goes up. Then mortgage backed security right now, Fed had it those mortgage backed security 2.5%, but the mortgage right now 5.6%. Why is going like this? Because they see that we have inflation is 8.5%. Bond market yield is going to skyrocket. How the adjustment? You have to add that yield plus the Fed rate and that the inflation rate. So that's why this is gonna go to the parabolic move. Look at this water flow, like a straight arrow. And how far we did not even started yet. Quantitative tightening. When they start this, all this mortgage-backed security comes into the market. On top of that, whomsoever is right now buying from the market right now, those also will be coming in the market because market now don't stop. Right now still people are buying. People think they have power and they will buy. Those also will come in the market. So all these monthly, and these are all on a autopilot right now. All these mortgage-backed securities are on autopilot. Means every month it's not yet out. Okay, it's not been announced yet, but from May month they will be coming in the market. Look at their market. $18 trillion market we have, guys, mortgage-backed security. Out of 64% people who are on paycheck to paycheck, and if they are vulnerable, their mortgage is vulnerable. Some reason if they lose the job or their mortgage go up and down here a little bit, because I know this is the most vulnerable market, guys. Our equity, this is the bigger fiasco we could happen because this is sensitive. These are real votes. This is all political votes are here because these are the people, they don't do the stock. They are purely goes to the job market and do the job, $20, $30, $10, and they get the mortgage. And if something changes, if they lose the job or some reason their rate changes, they will be vulnerable, guys. This is the danger right here. This is danger. So this was I was talking about. That will be affect to our housing market as well as mortgage market. So this was the one of the topic which I was talking about, that we have to be very, very careful. This is very sensitive area, guys. Okay, this is very, very sensitive. And keep that thing also in mind. Okay, so yeah, anybody has a questions? Last two topic I discussed about the bond. Yeah, go ahead.
Josh, if you want to pull up an Amazon chart, I want to go over something with you. I want to show you something and get your opinion on it.
Yeah, right here.
Yeah, this is something me and Dell were looking at earlier today. If you go to a 1 year, 1 day, is this a 1 year?
This is daily.
Okay. 1 year, 1 day?
Yeah, that's fine. You tell me what date.
Okay. I'm gonna take this one, but okay, you see that green candle that we closed on Thursday?
Last one?
That right on Thursday, yeah.
Mm-hmm.
Look at that big green candle.
Yes.
Okay, put a trend line on the top of that wick, and if you, yeah, and then go left with it. Go all the way to the left, and you'll see where it lines up with the other support. Yeah, and then right on the bottom of that green wick, put a support.
Mm-hmm.
And you see how we're in between that range, right?
Mm-hmm.
And okay, now let's go to 5 minute, 5 day.
5 minutes.
Also, yeah, I have VWAP on. If you want to add VWAP, you'll see something that happened on Thursday with the VWAP.
Okay.
VWAP. Actually, go to 1 minute one day. Sorry. With the VWAP. So you see, in the morning we had a big candlestick, and we broke above VWAP, and below VWAP means that sellers have taken over, right?
Mm-hmm.
So just zoom in just to Thursdays, yeah.
Yeah, right here. This
Thursdays.
is Thursday.
Yeah, so you see how we remained underneath VWAP.
Whoa. This is Thursday. This is Friday. This is Thursday.
Market was closed Friday, so we just want to look at Thursday.
Yeah, I'm sorry. So this is last one, Thursday. Sorry, this was Thursday. Last.
Yeah, my chart looks a little different than yours. Is there a way you can zoom in or something? But if we look at that, we could trade below or between those two resistance and supports, the resistance and support you just made, and if we break below that support, then we could free fall to like 2,700.
No. I agree with you, but that's not the right way to go, because you are taking that. There are different support level. That I understood that part. But look what happened here also. Just to let you know. So same thing here. Let's go back to 30. This is what I would normally.
5 minutes.
So intraday, yeah, I know you are focusing on intraday, but right now people are Sigma. They are not focusing on intraday right now. So what I do right now, we are consolidating in this area for time being, which is very small. But let's see if this floor breaks or not. So let me analyze it, and I'll tell you right now something about it. Okay, what I see right now, what exactly happening here is.
Like I'm looking on the 5 minute, and right now, if we open and remain under VWAP, then I see continued selling going into Monday.
Yeah. So what happens is right here, this is the trend set up last 4 days. Every chart you look at, SPY everywhere. This is the trend right now set up. So market can be trending here. When the support breaks, then it can go down. So we agree, but you need to pick the when the market start, we will analyze that how to trade. But we do not want to look the moment you anticipate that I want to be a bullish, or you think I want to be a bearish. That's the wrong thesis of those people who are listening. I just want to tell them, do not try, because many people tweet, oh, these are my list and I'm super bullish if this, and I'll be bearish this. Look, that's not the way to trade. That's not the right way to tell somebody. You got to let the market start.
Look at that. See the support that your cursor's on?
Yeah.
Now, what happens when we break below that and we remain under VWAP?
No, VWAP is a exponential movement, which when the day starts, right, when the market moves, right, that is I do not trust VWAP when it is when the daily chart, when you viewing at the daily chart. We have to view as a minute chart, 5 minute charts. That's why
5 minute. If you pull up a 5 minute and you look at that the support you just made at 294.
Right.
Now, if we break below that, you might have to zoom out on your chart.
No, I see that right here. This is 1 day, 2 day, 3 day.
Where's the next resistance?
Right here. This is right here. 31.19, 31.20.
No. Below that, the resistance you made at
on the below the support. 29.94.
Sorry.
29.94.
Yes. So below that, let's say we break that. with and sellers take over, I mean, it looks like a free fall, baby. Like, where's the next support under that?
Yeah, but
You know what I mean?
okay. So this is what what I do is this. I tell you something about instead of VWAP, I go with the my profiles, volume profile. That's the $1,000,000 profile I use. I like that because I want to see where the buyers and sellers are fighting. I don't want to. VWAP is also only gives you a direction for a particular, but when you have the real volume here, then we will see where exactly fights are going on, and then based on that we will see price and resistance. Our price right now, our price control line is 3035 right here we have. So what exactly happening right here? We are basically trending in between here. Look at this, one day down, this up.
Right.
Yep, right here we are trending.
The way I'm looking at this is you could play between that support and resistance based on your VWAP MACD indicators, whether it's bull or bear. But if it breaks in either direction,
Yeah.
you know what I'm saying?
No, okay. So point is, if the direction is here, how would you know my bulls is here going up tomorrow or going down tomorrow? Still there's a huge gap here between here to here. If you choose in the morning, say, hey, I want to be a bear, and you go from 3060, well, say for example right now 3036, and you think it gonna go up, and then it goes down, still there's a huge gap right here, right? Because a huge gap here. So yes, I agree right now on a trend is right here in between, because you see this all price of control line 1 2 3 4 5 last 5 days we are pretty much trending in between these. So yeah, we will so trend is here, but it's a huge gap in between, right? So we will see bear or bull we need to play on a Monday.
Do you still have your VWAP on?
No, I can keep it.
But if you look at the VWAP on Thursday,
this blue line, I mean the brown line is VWAP.
Spike above it in the morning. Remember when I went bull, and then right after that, boom, it just stayed underneath it, and it was just downtrend all day.
Yep, so we will see the cloud actually, and the cloud is basically does the same is a combination of VWAP, combination of lagging indicator.
Yeah, look in the morning there on the VWAP. See how right at first people were bull, and then boom, the rest of the day it was bear.
Yeah, but you have to compare with other days also. Everything is not one day. We have to compare with many other days also. But yesterday was Thursday was a beautiful day. It was constant grinding down. As you can see that it got rejected one time when it opened up and it went up, and then let me switch it off. This one VSVP. So if you see this, it started up, but it broke the upwards, and people think, oh, it's gonna go. Look what happened, rejected right here, right? And then it went down. Yeah, so we have to. That's why I always say we need to wait for the day. We need to wait for the proper confirmation. The earlier we do is not good. That's why people lose money in the morning. The market opens up, oh, going, and everybody start loading, and then boom, reversal. So that's why you gotta be careful.
That number one support though at 29.93 or 29.94. If that breaks.
Yep, you're right. Yep, absolutely. That's the perfect.
I mean, perfect short.
That's the daily break right here. You can see this daily chart. Yeah, we'll keep in that mind. Okay, let's get going. Actually,
George, I have two questions. So if Sigma is finished, then I'll go next.
Yeah, go ahead.
Okay, thanks Sigma. So George, I just wanted to come to my first question again. So when you were talking about the 10 years yield, right? So if we look at the price at current, right, with the Fed rates, so do you think it's going to peak out close to 5?
Well, right now, my question, I'll ask you the question. When you want to buy a bond yourself, when you have a bond you already holding, right, and you bought a treasury bond, you think you have a faith on US treasury bond. If inflation is 8.5% right now, and your yield rate is only 1%, how much you are losing on your bond?
Yeah, so if I see the difference, that's a huge, right? But if you look at 2018 and I look at the chart of TBT, right, which you are presenting, and you had a price target of 41, if you go by the number, right, and if we compare everything and comes to some number.
Inflation you need to add, guys. You have to remember, do not forget the inflation. Right now, that time inflation, we did not have the inflation. We have right now, inflation is the bigger elephant in the house. You forget the problem is the inflation. That time we did not have this war, we did not have these energy issues, we did not even calculated that hit. See what happened is the bigger problem is politician. What happened is when we have a Republican party and then Democrat party come, Republicans I believe in oil, then Democrat comes I believe in EV, I'm gonna do this and I'm gonna do that, and by the time Democrat comes, but if the bill don't pass, how the hell you gonna do? You only capex the oil. Now we transition is not easy, man. From oil to EV transition, it would take a years and years, and you have to pass so much policy. Look at China is completely control over their people, their party, their money, their everything. Still, they could not even transit. They could not even transit right now completely from oil to EV. Still, everybody needs it. We have a big way to go from oil, oil to EV. And now again, new if the again Republican comes, then they say, now what? Look what happened. What did you do, Democrat? You came here and you tried to do EV, and now look at the oil price went up. Oh, okay, let's go and pump the oil. So we will be again going back to 4 years backward. Then again Democrat comes, oh, okay, we're gonna get rid of oil. So this is like a politics. Who will suffer? You and me. You follow?
Yeah, Josh. Yeah, I got it. So my second question is, I wanted to add like two shares. I wanted to play puts on Netflix. I wanted to see how Netflix is trading with the earning this week, like coming week. And second, I wanted to add Disney to my long-term portfolio. So if you can take a look at Netflix and Disney, that will be great, Josh.
So you want to short the Netflix, right?
I want to short the Netflix and I want to add Disney in my long-term portfolio. I see the price are lucrative, so I want to take a look at both.
So you say you want to short the Netflix for only for the earning or long term?
Only for the earning.
Oh, only for the earning.
Yeah.
Is earnings this coming week?
Yeah, this right here, Tuesday.
Tuesday.
So hold on. Forward P ratio still 32. Yeah. I mean Netflix looking weak to me so far. Still 32 forward P ratio, and EBITDA is 6. So therefore, yeah. 20% net profit, that's fine.
Yeah, and if you can see the next gap down, right? So that will be the
value. No, gap down is not only important. Yeah, inside of the only 1.4, 392, 32, 33. So okay, so Netflix is expensive than the Apple. Netflix is expensive than the Google. Netflix is expensive than the Microsoft. Okay. So Netflix has to is little based on this, the way the market conditions are. Based on that, Netflix can go, but particularly earning, what I believe is these guys right now. Okay, the way right now you see these, the tops are falling. Remember what I say here: tops are falling. Tops are falling here in these cases. So that's the trend setup. But particularly earning day, you have to be very careful with the market makers. Remember, market maker, they might take this air out of the balloon. I feel this mega cap this time they're gonna go down. I feel like they're gonna this earning, they're gonna take them to the downhill, and I feel like that. So right now it's little expensive. Now you're talking about the gap to fill. Let me see gap, where the gap is. Where do you see gap, buddy?
Yeah, so if I look at it, comes way below, close to 270 range, Josh. So
270. I don't see any gap.
I had a look at my Webull, so I don't exactly remember.
No. Forget about right in front of you. Are you on YouTube?
Yeah. I'm watching YouTube.
Okay, so show me 270. 270 comes here. 270 right here.
Close to that.
Okay, so I do not see at all any gap on Netflix, guys. Okay, I do not see any gap on Netflix from 250 all the way to up. So I do not see any gap. Period. I don't see. 100%, guys. Trust me, man. Okay, there is no gap. No gap, because we already are right now. Netflix is at already here. We are already here at 340, and then you said 270. So there is nothing here, so it has to be in this group. So if it is 270, but still I will check here if anything in between here. If it is here in between also, I'll check. Nope, 100% no. So there is no gap on the Netflix. Perfect, no gap. I mean, there is no way I can see any gap on it. Okay. So
Josh, can you look at close to 250? Because I forgot, sorry, but it was close to that range. So just wanted to make
just
sure that
just click a snapshot and send me, and I'll take a look at it and I'll
okay,
respond you back.
no problem, no
Okay.
problem. Yeah, we can go to Disney for long term, Josh.
So what I do is I don't teach anybody to play earnings on it, because a risk versus reward, and I do not like to cultivate anything playing on earning, because earning market maker handles the steering wheels and we do not have a control over based on the calls and put scenario. They will play the games around, and then you have to analyze that. Okay, so keep that thing in mind. It's not about what you are; it's about what market maker. They will see how many calls and puts have been bought. Just keeping those in mind. But yeah. Okay, Disney, you want to be a long, right? He said.
Yeah. Disney, I wanted to add in my long term portfolio.
Yeah, Disney is also falling the tops, but let's see earnings. $1.06. Disney, nope. I mean, for me, oh yeah, $1.06, they got it. $1.06, 120. Okay, so they are expecting better earning next quarter, and now the summer is coming too. The gap is already been filled, and 130. So if you look at 130, Disney. Okay. Disney forward P ratio is 31 time. So if I have to take a look at it, you are paying more than the Apple price. So a market maker would not allow these kind of company to go outrageously higher and then have the Apple and other company go lower, because the Apple and all they hold in a 401k plan too. A lot of companies, so many they will also adjust that. So based on this, actually Disney revenue is lower than the Netflix. This company only making 12% net profit basically. This company and Disney has the highest debt also. If you compare with other companies, they have 54, so almost 4:1 ratio debt they have. So they'll be paying little more debt and little more interest as the time goes by. So forward P ratio is 31 time. If they increase the ratio, if they increase their EPS in the next quarter, then it can hold. But right now, whatever the price is very, very fair. I do not expect Disney to fly high back to 177, because it's 30 ratio. Everything is all economy, guys. If the economy is flying high, then EPS also, then the forward P ratio fly high. But if the clouds are darker above the head, then I don't expect that market maker would allow to fly Disney high, because they do accountability. They see that. So I do not, but if you want, it's up to you. I do not feel like, and that's why all the tops are also look like falling. When it reverses and then the game changes, then yes. But right now there is no reversal, there is no support. If they let the market decide, let market take the find the support, let the reversal. You see this, market will find support and you will see reverse curling upwards. Then I would buy. At this point, I would be a little bit away, because it's already priced in at this price. It's already a little higher price of current condition. So I would not, but don't feel bad.
No. Just a question, Joe. So still, it's a future investment. So just wanted to be little
Yes.
curious first to do that.
Absolutely. Okay.
Yeah,
So
thank you, Josh.
no problem, and thank you very much. So okay, so I think I covered my area. Now I can take the questions, guys, from you guys. So one at a time, guys. Raise your hands, and then yeah, D2, you can go ahead.
Hey, so yeah, we were talking about that, buying those puts. I know you entered in on Snow, and we were also checking out Alibaba for the gap fill as well. If you wanted to go over that real quick, because I haven't entered because my money was in a position which was the JPM puts, which I actually was able to close for profit.
That was true. Actually, I remember now. Kai, now you know your symbol. So when you left, and I saw the JPM was like bearish, and it's going down, and I tried to recall you, but you were not here at that time. But
yeah,
okay.
I set a stop loss above my entry because I saw it was moving more bearish. And
Good
then
to hear that.
Yeah.
Okay, so right now, remember, always anything you do buy calls, guys. Now the new week start. Remember, the whole week is starting, which is fresh, new weeks, new month for market makers. So they're gonna write the history. They're gonna start writing the new history. So they're gonna set up a trap. So we will see how the market is starting as the time goes by. Though it look like a falling knife it's falling. Market can create a little bull also. We will see how the market goes, right? But what I tell right now here, long term snow is bearish. Okay, you can see long term is snow bearish, and that's why I say FOMC meeting is coming. And market right now, if you ask me, everything looks bearish. And why? Let me show you. Look at the EPS, right? 12 cents, 13 cents EPS, and now they are expecting to be go lower. So that based on this EPS, this stock deserve to be way low. How much, man? I know this. I would not even pay $50 on this one based on the EPS. So long term perfect shot. Long term perfect shot. How much it is? Look right here. I'll show you. Long term. Okay, when market will thank you. This. Sorry, go ahead. So this forward P ratio is 1,004. You basically 1,400 time you are paying at this price. If you buy based on their earning, based on what they are making EPS, earning per share, you are paying value 1,430 time. 1,430, and that because they are not making money. And look at the loss, EBITDA. Their revenue is 1.2 billion and their net profit is 700. So they are burning all this money. On top they are burning these 700 million from their pocket somehow, and look at they have the cash in hand so they can survive. They don't have much debt, but they still need to sustain this whole economy the way cycle goes through. But EPS is way outrageous low. They need to increase the revenue 100 fold. That's how I pay, guys. I don't like to be burned in my life, and that's what I teach you guys. If there's 1,000 millions of flight to catch, why you want to catch each and every flight? You want to catch the safe flight? Then look all the numbers. And if this negative EBITDA, they are the first one in my short list, because when market dumps, these have no foundation. You see this? No foundation. This is no foundation. Why? How can I build a building of $200 building on negative EBITDA? No way, Jose. So gotta be careful. That's what we are here for. Foundation has to be strong to be long. So weak foundation. That's why I'm shorting this.
Yeah, I agree with you. I was looking intra-week. I just wanted to see how the market performed this week. If it bounces and goes maybe a green for a couple days, hopefully it'll pull snow up so I can get a better entry.
Yeah,
but for the long term of shorting it, I think now wouldn't be too bad.
Mm-hmm. Yeah, always whenever you want to short, wait for the green day. Market always create the opportunity. One or two green day. Whenever green happens, that time you don't want to short it at the bottom. You want to short it at the top, and you want to buy it at the bottom. Always remember, the foundation is your first analysis. We need to do that, and then based on that, we want to go long or short. So when you want to short, you look for a green day, and when you want to be a long, going bullish, then you make sure the day like this red day, as long as your foundation is strong and you're finding the support, that time we need to prefer. So meantime, guys, those who are here, please, if you go to the profile and click on this the link, and if you can help to retweet this live, we are live, so people who are across, they can also see that they can join the group, guys. We are only here for another 1 hour or so. So if you can help me to retweet click on my profile, and if you can first link, if you guys can help, whomsoever are here, please retweet and like so we can reach to the bigger audience, and I appreciate your help. Okay.
And then the second one was Baba, if you have time for that gap fill.
Baba. Okay. Yeah, Baba is still look like a falling right here, and the gap is here to fill, as you can see. And let me take this support out. There's a gap here to be filled, and but again, it's a new week start, so just be careful about if you wait for any reversal. Whenever your opportunity you get, there's a gap here to fill. 82 market maker can also see the gap, and they see, oh, everybody gonna be bearish, and they will take a U-turn. So always, guys, when you see a profit, don't be greedy until the gap you see. Get the money, man, and get out of it. Just keep. There's always opportunity. There's always tons of stock we go through every day, and we analyze it. So
thank you.
Mhm. Okay. Now next, you can raise your hands or you can just jump in, and if you are not a listener, if you are a speaker. Okay, I guess nobody has a question. Look like. Yeah, go ahead, Gurdeep.
Yeah. So yeah, I was just waiting for everybody to ask questions so that I can ask the next question. So since nobody has questions, so the next question, George. So you were calculating the EPS and you're coming to the point, right? So whether it's
Gurdeep,
a cheap or
Gurdeep. Sorry, interrupt you. Sorry, I did not take a look at the YouTube. There is a lot of people ask on YouTube, so
okay,
just
okay,
let,
go ahead.
let,
Yeah,
let me go
let them.
through. Yeah,
Yeah,
because
let
we.
them go.
Okay. Sorry, I'll take your question also later on. So no echo. Okay, sounds good. Like the video, please. No one takes time to explain impart knowledge like Josh. Okay, thank you, Annapurna. Thank you very much. Appreciate. Josh, will you discuss QQQ, please? I want to go long in the morning for intraday trade. Okay, remember whomsoever it is, Sola Nantrio 70. Sorry, I didn't want it to butcher your ID, but always remember, do not go early. Say, hey, I want to do bulls, I want to short, because the pre-attempt you think I want to short QQQ. That's not the right way to do it. You all let the market decide the path. I agree with you, because tomorrow market goes up, then you will have better opportunity to short it from the top, right? So why just wait for a little bit? Just give a 30 minutes, let the market decide. I'm always live here. I can help you. I always analyze charts every minutes while I'm live. So if you want to be here, I'm live on YouTube morning also. So it might as well you can come and join. Uh, and you can ask me the same questions, and basically you'll be able to see, because I'm always, my QQQ chart will be on all time, and you'll be able to see QQQ, because we also trade QQQ a lot. So you'll be able to see QQQ. So for example, if you want me to take a look at the real quick QQQ, what exactly QQQ doing, like I said, all across, S&P 500, NASDAQ, every indexes, they are basically, if you take a look at this, look like a royal flush. See this, 1 2 3 4, and they are all daily. If you take a look at 30 minutes, they all going to flush, you know what I mean? So that's why they looks bearish. But remember, there was a month end over, right? Now the new month starts. So market maker, they will be writing new book. Now how they will start the process, bearish or bullish, that what we need to see. So let them go first, and then we go behind. I totally understand market is super duper bearish, but let them go first and see what exactly happens. So you can, if it is a market go little bullish, then you can have a better entry point. Otherwise, in the moment you buy immediately in the morning and market goes opposite, then you're gonna lose you're not gonna feel good. So let them go first. That's okay. If they go first, that's fine. But go, always give a little time. Don't short intraday. Okay, just give a little time, like 1 month, 2 month, 3 month. I would go with couple of months. Safety side, 1 month at least. Go with the May, somewhere in the May end, so you are safe. FOMC meeting and all. Believe me, go a little longer. You might not make, you might pay little more, but that is fine. Just stay in the money if you want to be, but go a little longer if you want to be. But yeah, perfect time now. This is the time, guys, starts pretty much. And market gonna, I think the mega cap air will be out of the balloon too, and that's how they will start probably. So yep, you will, I'm gonna take a look at so basically QQQ is falling, and how far it can go. The next support line is 317, and we already broke the support, so we will go and test that, and then we'll go one step at a time. I'm always live, guys. Okay, so we help you every time anytime you have questions, just come by and I'll help you out. Can you take a look at the UPST, Ron? Okay, Ron, I'll take a look at UPST. UPST is testing the floor, guys. Okay, and we just broke the floor. UPST looks very weak to me, but remember, this is the longer period of time. Okay, UPST is 89 cents, and now they're expecting 53 cents. So they are losing money. UPST, I mean, they're thinking that next quarter will not be good compared to previous quarter. So Let's take a look at the UPST, what UPST is doing. UPST is $851 million. Their revenue is, EBITDA is 150. So they're basically making like around 18% net profit. So they are a little bit profitable. Outstanding shares are very, very low float, 84 million. That's why it's holding the price UPST. So UPST does not look bad, 1815, but I want to see how much their EPS is not there. So I need to analyze it based on the 53 cents. So if I had to analyze it, I'm gonna give 55 cents, and if I calculate it, comes out so 82 divided by 2.20 comes out 37 times. So still UPST is 37 times you're paying. So they are still expensive than the Apple, expensive than the Google, and expensive than the Microsoft right now, UPST. If based on a 55 cents earning per share, but if they can achieve this number previous quarter, if they achieve this, then this is fair value. So UPST is not going to go crazy until the earning, just it's gonna play around here. Maybe it can, if market really collapse, it can go to here, probably 76, this support line here, and then probably, but I do not expect UPS to short crazy, just because the EPS looking, I don't know, market, you think the product will sustain, they will achieve this number. But if these people don't achieve the number 50, expected is 53, then stock can go down. So basically I expect the stock to play around here right now, between right here. I cannot be I'm not long on UPST right now. Okay, I would not expect to be a long in these upcoming market conditions. Be careful, because it's already priced in based on the fundamental. If I look at it, I think is priced in. I do expect to go little down also. So it's not going to go, I would not short, and I would not go crazy long. This market is just waiting for this earning probably, and if the market cloud get darker probably upcoming months, then this support can be broken too, because it's still expensive than the Google and Apple. Okay, so that's how I look at it. It can break this one also. If the market tanks, then UPST will go with it, because it's little expensive than the other one. Okay, then okay, George, could you check Costco, COST, Costco is okay, real quick. Costco 590. Costco is parabolic move run right now, and recession comes, Costco 292. So Costco is testing this. Probably market will take this one out to your Costco. Let me tell you why. Costco, COST, Costco. Whenever you want to short this kind of stock, you got to be very careful about their premium theta decay, because they have a huge stock, and if you cannot buy 1 week, 2 week, you have to buy 4 weeks apart. So when market goes down, then you benefit. So Costco is super expensive at this time, but they are recession play 45 times. So but in recession people go and do Costco shopping. So I would not go and short Costco, and I will not go and buy Costco. That's what I can think. If anybody was asking, because they just look at the Costco. So Costco is right now, for me it could be a short, but when market has a weakness, I would not go and short like that, because they have the balance sheet is healthy, their EBITDA is 9, so they are making they're making 10, almost 9%, 5% net profit. So profitability is very less, 5% net profit. They have good cash in hand. So I do not want to go long on Costco. There might be a point where you will see Costco goes down, but I do not recommend to go and short also Costco, because you'll be paying theta. It's crazy theta on Costco, high range, and has a good balance. It is not bad balance it, but forward P ratio is too high. So I do not recommend either side. Not a long side, not a short side. You got to be very careful. Short market maker will win, though the trend is bearish. And if you take a look at it right here, to short, but be careful shorting, guys, because eventually we lose the money on these. Then YouTube has a, okay, I think I'm gonna look at the, George, could you check Costco? Okay, I'm gonna take a look at the question from Twitter, and then I'll go back to YouTube real quick. Okay, people are waiting on YouTube, so I had to take the questions from Dean, you got any questions, man? Dean, what's up, man?
Hi Josh, how are you? Could you check Zscaler, please? Ticker ZS.
Okay, so GS is a cyber security, guys. Okay, remember this. Right now, they are in play, I think, but they're very horrible balance sheet. Okay, horrible balance sheet right now. 13 cent EPS. But we have Russia play right now. Russia is threatening about the security, so that's why Zscaler is benefiting out of that. But if you ask me, this stock deserve to be below $100, below way down. I don't even pay 100 or forget about 100. But the problem is, the market right now, when the market starts selling, and looks like it's selling right now. What is your position, long or short? Oh, you trying to be long? Okay, so be careful. I'm sorry.
Yeah, I'm trying to be long, but it's expensive right now.
Yeah, because look at this, how much you paying, you know that based on this their earning per share, 11 cent. Let's say for example, how much what they received last quarter? 13 cents. So wow, that's expensive. 11 cents into comes out 44, 45. Let me take 45 to 30 divided by 45. You paying 511 time value. 511 time. Apple is offering 30 time, 29 time. So I would not go long because financial fundamental is weak, very weak. When market tanks, this stock will tank too. Right now, just a little war going on. Because of that, this price is holding, but the clouds are not looking good at this point, buddy. So I would just catch another flight which is safe, where the foundations are stronger. This one doesn't have the foundation; is very weak. Though demand is there, but remember, demand is not only important. You need to look at the foundation, because right now there is no stimulus money coming in a market where people will pump. Right now, institution investing money into the company, and the institution take a look at the balance sheet and they say, oh, I'm not gonna pay 511 time. That's how things are, guys. Okay, they always look at the EPS. They don't invest based on the Russia attack on can attack on US and then stock gonna buy. Those are social media. How to get all the social media slaughters? That's why those headlines are there. You don't need to follow those headlines in US, otherwise you lose your shirts, and then next other thing, you know what I mean. So we don't want to lose money, guys. Okay, this is, you got to look at the earning per share. Every company has it has to have earning. If they don't earn, they don't catch the flight, because that flight is risky. There is nobody forcing you.
Okay, thank you so much, Josh. And obviously, based on your comments, what are your thoughts on CrowdStrike?
CRWD. Wow, main crowd has also, they right now they're benefiting because of this same thing. Look at the EPS is 20, 30. So I would not touch that. I would not touch it in terms of, but I would love to short, but I don't want to short it because we are about 200-day moving average. So I would not, either way, I would not touch this because foundation is super duper weak. Right now market maker, they are taking off, and when there will be a no floor when the market maker decide to take it down, because there is no foundation. It's only 20 cents and stock is 235 times. So you basically paying about 500 times right now value. So it's very risky. That's why I like to stay out of this game. All cyber security guys, they are right now flying high, but there has to be some sort of fundamental, right? There has to be some sort of income, right? Market maker, they can take it high, and if you want to wishy-washy in this play intraday, you can play with it. But if you want to hold it overnight and you wake up one day in the morning and then they say market tank, and then this stock also can tank, then what would happen? Because of the weakness in their foundation, 20 cents is nothing, garbage. That's how I look at it, because I have seen in the market, man, when their foundation is weak at 20 cents and stock is $230, nope, I do not. For me, I do not put my dollar on it. I would not even put $100 on it. And market takes time, guys. Okay, remember Nvidia used to fly $350, and then now is $140. Like, and same thing. When the table will turn, it takes about a year or 6 months. But when the table turns, we will be the first one to get slaughtered, because then you're not gonna have a floor. And that's why, if you want to avoid this, then stay away from those kind of stock. That's why I always teach here to have a strong foundation, not based on these news and events, because that that you can play intraday. That's it. If you want to play intraday, yeah, absolutely you can. We were long on crowd, we were short on crowd, but those are intraday. But if you want to be a long, then be careful because of their foundation has a crack. It's not. They need to make a lot of money to be justify this price.
Hi, Jose. Good evening. How are you?
I'm good, man. How are you? What's up, man?
Good, good. Hey, I have the three tickers. I'll just go quickly. CEI, which is Camber Energy. There's a lot of trending. That's an oil company.
No,
CEI.
I mean, these are sand company. There is no foundation. I cannot. I mean, it's looking good right now. It's gonna break the 200-day moving average, which is 96 cents. Once that breaks, it can be bullish. So you need to break the 96, 97 cents.
Oh, okay. Yeah. So other ticker is GEVO.
GEVO. GEVO negative EPS. Oh, this is teeny mini company, man. Look at their revenue. 54,000. That your salary must be higher than these people. They made only 54,000. I don't know, man. This foundation is weak until unless these numbers are wrong. But it's 80,000. They are not even making any money, and the stock price is $5. These deserve to be few cents.
Oh, okay. Yeah.
Foundation is weak. Okay, I'm not saying no, but I know it's a EV play. So
Yeah.
people can play a pure pump and dump.
This is not EV play though. So
Oh, this is not EV play. GV.
no. GEVO is like aero. The
Alternative fuel, right?
yeah, that's right. Yeah.
Yeah. So EV play. Alternative fuel.
Oh,
Fuel.
okay.
Yeah.
Okay.
Yeah. So basically, this is right now. I mean, it's not a low. Okay. So if I do technical analysis right here. So if you look at it, it looks right now upward rebound, and it's a EV play, and people are right now basically wants to go bullish. You see this little bullish trend, so bounce and can go upwards. But based on these, is horrible to me. This is like a laughable. $80,000 only. People can have more salary than their revenue. So
That's right.
right.
Okay. Yeah. Third one is Roblox or BLX.
Are you long or short?
I didn't buy anything, but I'm just checking. So maybe we can to buy long.
Wrong. I mean, sorry, long. Okay, if you look at their EPS or the revenue is 770 million, that's good. But why their EPS is negative 25 cents? They missed. They could not even achieve 12 cents. That means they are losing money, and now they're gonna lose more money. The revenue going down. So this stock is heading to the downhill, guys.
Oh, okay.
Yeah, the pressure is downward because of the revenue. They are not making enough money. They are losing money right now, or they must be putting money back into the company. Something they are doing. They're horrible balance sheet. So right, based on these, it looks to me, based on the EPS, I would say right now. Whew, no, man, they are losing tons of money. 325 million they are losing every year at this point. Good thing only they have cash in hand to burn as the time goes by. So I would not stay away, because there will be no institution would prefer to buy this stock based on their balance sheet. It's a weak balance sheet. Roblox.
Okay. Got it, Jose. Thank you, buddy.
No problem. Thanks, man. I gotta take a.
Josh,
What's up, man?
if I could, I just want to know about Datadog, please. I'm just asking about, all these high growth companies, because I'm a fairly new investor, so I just want to know, because I feel like they're good businesses, but then obviously they're very expensive right now, so we'll have to wait as time goes on. But I was just wondering, besides Zscaler, CrowdStrike, how is Datadog looking like in the meantime? Thanks.
No problem. Okay, so Datadog is reported is 20 cents, and EPS and 11. Wow, 337 and 330. Okay, so they have a growth, but slowly growth. But if you look at their balance sheet is horrible. I mean, profitability is horrible. I mean, excuse me, just let me drink of water. Sorry. So if you take a look at it, 20 cents they reported. That is way low based on this price. Okay, So if you ask me, 11 cent 337. So the growth is there on revenue is growing, but it doesn't look to me good. Excuse me, guys. Okay, Datadog. Yeah, okay, let me see. So this one is okay. Forward period is 263 time value you paying. Apple is 30 time. Google is 21 time, and this company is asking 263 time based on their current value. So it is outrageous price. They are currently losing money, $10,000 yearly. They're losing on top of their revenue. So for me, expensive stock right now, this one. So this company, that's why you look at that, the tops are falling. If you see tops falling, tops falling, tops falling, tops falling, now this is another top, and if that falls, this is a major support area, and if this breaks, then it can go down, and where it can go is this right here. It can go to here, and still it can go further. If the market crash, then this can happen here too. So I would not be long on Datadog. No matter, just to guys tell you, be careful of this. We create celebrity in our mind that hey, this is the best company. We do not want to invest based on that, guys. Very careful on social media. People don't have any knowledge, and they just pump because they just whatever people do that. What you need to do is you need to find the foundation strong. So if you're a new investor, you just mentioned, that's why I'm trying to rewind the tape, that always before you invest, always look at the foundation. Anytime anybody wants to invest in the stock, make sure foundation is strong. What happened is here in the market, people are investing in a different way. Oh, Twitter, Elon Musk is buying Twitter, and people want to jump in. No. Those are the stock you want to stay away. Why? Because there is nothing running away. You are basically playing pure events. You do not know when the rug will be pulled, and you'll be the first one to lose the money. We do not want to play because it takes a lot of time to make money, and then you purely play, and then when the rug will be pulled, you would not be when you wake up, you will see everything down, or that stock would be down, right? So we need to avoid that, man. So what I teach here is you need to play safety. Safety is the first rule should apply. If you don't make money, that's fine, but we should not lose the money. That's why anytime you choose the stock, you need to be very careful picking up the stock on social media. Anytime you go around and people say, hey, it's gonna this happen, that happen, but look at the foundation. It's simple, man. We are, when we want to build a building, right? $1, $5 stock, $10 stock, $200 stock, $300 stock. But if the foundation is weak, guys, believe me, man, the rug will be pulled and there will be no floor. And I have seen this in my several times in my life, and I'm trying to teach you without any charge. And I go live and explain everybody, right? And I like to do that. Okay. Only thing in return I ask your help is to share my, let's make it bigger, this group. Okay, so we can reach to the bigger audience, because there's a lot of stupid people, dummies people, they're losing a lot of money on the market, and I see that. And I want to, I cannot stop the people who are on Twitter and social media. They are pumping on YouTube, they are pumping the stock, but they don't know they are pumping. They just think, oh, I'm gonna make some money on YouTube, then I make some, whatever they're trying to become their celebrity. But you need to have the foundation. You need to learn how to analyze the stock. So people are doing that to become a superstar, but that's the wrong way, guys. Just like Kathy Wood, that's the wrong way. Just like Jim Cramer is wrong way. I would not pay. People are paying $10,000 to Jim Cramer's or anybody else. Is I think is wrong. But anyway, so same thing you should apply, guys. Stay away from this pump and dump, and look for, if you need my help, I'm always live here. That's the reason I interact with you guys. I'm not going to be on YouTube and you cannot interact. You can interact with me, ask the question anytime you have, and I can analyze, and then you can also do your due diligence before whatever I say, and then after whatever I say, and then you check, see what it is. Right? You don't need to follow. You don't need to follow Jim Cramer or me or anybody else. Just follow, your thing, but look at your foundation first. Whatever you want to buy. That's how I would say. So Datadog is very expensive. Okay.
Thank you so much.
No problem, man. Thank you very much. Anytime, any question, guys, I'm here. Okay. I like to help the community and grow the community bigger. That's my goal, and help me here to grow the community so we can reach to each and every audience. and tell everybody that this is the way to invest, not the pump and dump way to invest. I'm gonna take a question from you.
Sometimes,
Go
because
ahead.
sometimes like I see the bias like this person say on Twitter or that person say on Twitter, and then so like I just like come to ask you questions because like I'm learning from you, like instead of looking at the company, like I need to look at like the balance sheet first, like instead of like getting in the story. So same like I guess like with Nvidia and AMD, how you said it's like similar to like look at the balance sheet right first of the companies before looking into the story of the company.
Yep.
Well, you also want sorry.
Yep.
I don't want to butt in. Hello, Dean, Sim, Josh, KRK, everybody else. Hope everybody's doing great. Josh, thank you for having me on the stage.
Yeah, what's up, man?
I got. But Dean, finish your thing, I guess. I already
No worries.
forgot
Nice to meet you, D3 Code. I was just telling Josh about like how to try to eliminate biases, when looking at the stock instead of the story, to look at like, the balance sheet, for example. And then I was
So
just
you
going to
said
ask
look
him.
at the balance sheet. You're looking at how much money they've raised. Okay, so now you should also look at the founders. And now,
so I was just going to ask him what he thought about AMD and Nvidia, because that's also to do with like the founders and the CEOs.
Okay, well, so this is a loaded question, and I'm gonna get very broad and narrow it in like 60 seconds. So, like, being a Bitcoiner, I don't think stocks are great because you don't actually. So this is why, like, me being younger, I found Bitcoin because I couldn't buy full stocks because I didn't have money because I couldn't. They didn't. Basically fractionalized the way Robinhood does now, but at the end of the day, it's still digital, and you can't actually hold a stock, and you can't custody your own stock in like your own wallet. You know what I mean? So like that turned me away from the very start, like before I even graduated high school. And now, can you restate your question again? Because
who manages this?
Okay.
Hold on, Sigma. Dean. So the stock. Okay, so the Nvidia thing. So you know about the hack that happened, correct?
The Nvidia, the company got hacked.
Do you know about it?
I knew a little bit, like briefly, but not so much.
Okay, so I don't know too much, but from what I've heard is basically all their toolbox is gonna be released. Right. So all the cool things that like they were able to do that nobody else could do, that's out there for people to reverse engineer, to play around with, do this and that. So that was basically released into the world, like the toolbox, kind of like when the CIA and the NSA got hacked and their fucking shit got released, and like now it's being used to hack them. So the Nvidia toolbox will basically, people will play around with it and they will release free products that are so like people will be able to do this production stuff Nvidia was doing just for free. So like I don't know what that's gonna do. Do you know what I'm saying with that?
Okay. Dean, I have a bunch of questions from YouTube also, so I have only I have a few minutes left. I got to get going on it, so I appreciate, man. Okay, just a second. I got to add another speaker, so I have to take you off the speaker right now, and I got to take the question from YouTube, guys. YouTube question is from Eldwin. Eldwin, your Overstock. I'll take a look at Overstock. So Overstock. So Overstock basically right now is like taking the falling the tops, and if you take a look at it, it's going downhill. But their EPS is 36 cents, 36 cents here, 27 cents based on this, and the price is fair on this. Now there's a gap here to fill, so pretty much $33. Be careful on Overstock, guys. Okay, I cannot be long on Overstock because look at that. 29 cents they're saying, and then now they're forecasting EPS is lower than the previous one, so a little bit cautious here. Let me take a look at their balance sheet. if I look at their balance sheet, looks to me, EPS, it looks a little horrible. They used to have a good, but they don't have it here, EPS. Okay, so if I look at the EBITDA is 122 million and their revenue is 2.7, so they are not even making 10%. Also, they are not making even 5% net profit. So very, very low. So I would stay away from Overstock, and it's falling. I think is heading to support, which is previous probably $29, $30. Excuse me, $30. I see Overstock heading. Stay away from it. Looks risky for the long term. Okay, if you're shorting, then yeah, it's perfect because it's a look like perfect short too. It's a little outrageous price. How much you paying on it? Excuse me, sorry man. Let me see now. 20, 36 and 29 cents. I'm gonna take 30 cents. 30 cents into 4. So 120. Excuse me. Okay, so 120, and their price is right now what, 39. 120 comes out 32 times. So basically you're paying 32 time value on this one. So still expensive than the Google, Microsoft, and Apple. So it still has a room to go down. And based on the EPS, so if their revenue goes down, then the Overstock will suffer. So it's not gonna go drastically down. It might play here and there, but this is the support line. I can see 20. I can see 29 going. Okay. Then next question is Overstock for a long on underline and calls. No, I would stay away from Overstock. Okay, I would overstay, but you can do your due diligence. I do not. It does not qualify in my long term, unless they prove to be a turn the tables and make more profit. So what about S? Financial Foundation strong enough to long. What is it? S stock S. Which one is this? Oh, Centennial. This one $37. Oh wow, 37 is, but this is trending down. If you look at it, is basically the trend is downward. So why trend is downward? 17 cents. Wow, 17 cents is low. And look at them, 56 million, only 56 million revenue. So it's a teeny mini company. Growth, there is a growth. 17 cents. So let me see here. What is 17 cents? Why they are making 17 cents? What is this? S Centennial. All right, equity. Okay. So yeah, no, EBITDA is, this company makes negative profitability. EBITDA is also negative 2.60. This company losing money. It turns up this going to $5 stock. Perfect short. If somebody want to short it, beautiful short. I'm gonna add it into my short list. So this is going to be a short. Okay. Alright, so this was, I don't know what your plan is. Centennial Financial Foundation strong enough to go long. Nope, I feel this is very, very weak Financial Foundation because they are negative EPS, price is outrageous, and their profitability. This is a beautiful short. Do not, I prefer to be a short the stock. Is gonna heading to $10. Very stupid people. I wanted to be smart, so I stick with Josh. Ron, thank you very much, man. Last one for me is SQ. Oh wow, SQ. Let's take a look at SQ. Okay, SQ has a bear flag, guys. Be careful. There's a bear flag setup, guys. Okay, if this bear flag in play and breaks, then the floor will be right $81, guys. So right now is 121, and let's see what are their balance sheet look like. Yep. Square is super duper expensive, guys. 27 cents is nothing. EPS 23 times 23 EPS. Wow, let me take a look at why 23 is too low. 23 cents. So let's take a look at 25. So 121. Yeah, so basically you are paying 121 times. So Square is heading to 50. Square is heading, guys, here, guys. I'm telling you, okay. Square is heading down the hill unless they go and turn profitability. So be careful, Square. I could not I'm telling you right now, everybody is bullish on Square on social media because of they think Square used to be $300, right now is 121, and it's gonna go 100, and it's gonna go 99. They seeing is super bullish, is discounted price. Do not go like that discounted. I can show you tons of stock. They were $300, $200, and they are right now 10 cents. So we cannot shop like that. This is stock market. This is not a you go in a mall and shop. This is real money, guys. So stay away. There's a lot of Bitcoin bulls and a lot of things we'll go through if you want to lose money. Do your due diligence, but this is foundation is weak on this company. Okay, foundation is weak at this particular time. When the table turns, company become profitable, then you can go and buy. Show me the money, then you can say I will show you the money. This is how supposed to be, guys. If you want to work with the Josh, and if you want to avoid my goal is not to make money first. Make sure you don't lose money, because what happening here in social media is people are losing money. So I like to teach not to lose money, and what I see here is if you cannot make money, it's fine, but not to lose. And this is what I'm trying to teach you right now. Here people will say, oh, look, discounted price. Same thing happened with the Facebook, and I saved a lot of people's money also, and I explained them. Same thing here also. So be careful, do your due diligence before. My goal is to teach you and educate you so you can take a right decision here. Okay, so that's what I can think about the Square, guys. I know everybody's bullish. Last one for me is okay. Can you take a look at this? Okay, I just checked. Josh, could you please check Verizon ticket V for long term? V already Verizon V. Verizon, really? Verizon sticker is V or V E R I Z O N? VZ. Is it VZ Verizon, right? I think you typed the wrong symbol, guys. Verizon 53. Verizon is about 200 moving average. They give the dividend, so stock price is fair. Yeah, it's good. It's good right here. Dividend they're giving 153. VZ. Let me see VZ. Verizon. Yeah, Verizon is good, guys. Okay, Verizon is good. You're paying 10 times forward P ratio, and they are making 45 billion net pro EBITDA. So they are basically making 30% net profit. Guys, Verizon is really good. It's good. Only thing, they have a huge debt. Look at the debt, man. $178 billion, man. They'll be no. Be careful on here too. But so what happened is they are making money, so they are paying the debt, right? And they are making good money. That's why they can afford. If the company makes money and if they have a debt, they can pay, because they just believe in, say, invest money, government money, and put it into business. So Verizon looking great, guys. I liked it. That's why Verizon is holding right here, holding above all 200-day, 100-day, and 50-day, all above. So Verizon is still holding the price. Look at this. So Verizon normally always plays between 50-60 range. That's why. So Verizon is still holding good. Will be fine. So Verizon is basically only good for dividend, guys. Okay, there just right now market condition is this. That's why the price is. But look, last 3 months it's still here, 50 and 55 in between. So nothing is going Verizon. It's just burning your, testing your patience. But it still is still it's just playing right there in that area. Bear time for SQ 101%. I feel like that. Same thing MSTR. No, MSTR for me is MSTR. I'm bearish because they're if you look at their revenue, $1.32. If you look at $1.32, that's bearish. Super expensive. Bitcoin has to perform well, so then this form. But right now, super expensive. This stock is heading to downhill, guys. Super down. MSTR is a good shot. I think it's in my bear list also. MSTR. Let me see the price. MSTR. I'm gonna add that. MSTR. Yeah, so this is bearish. MSTR is super bearish because of their foundation is weak. Unless Bitcoin jumps to say $60,000-$70,000, then they can probably benefit. But Bitcoin is gonna go down now. So this will go also with it. Bear time for SQ. Okay, yep. MSTR going to zero. No, I'm not gonna say MSTR going to zero, guys. MST is all about right now. Bitcoin will suffer, so MSTR will suffer. Okay, it's Josh. So S is good shot. Yeah, S is the good shot. I think I went through. Yeah, somewhere around 4 5 weeks, 6 weeks, 8 weeks, like that. Or safety is important whenever you want to trade like that. Okay, now I can take the question um, from the Twitters. If anybody has a question, you can go ahead.
Yeah, I just wanted to ask about NVIDIA and AMD.
NVIDIA and AMD. NVIDIA. Are you long your positions? What is it?
Yeah, once again, Josh, I went long.
You went long, and how much you put it in so far?
Not that many shares, just like 50-50 shares.
Okay. So NVIDIA, look at these rounds are right here. They are testing right now the support right here. You see this? So market is testing the support, but there was a month end, and now the books are clear of the market maker. But if you ask me long run, I am very bearish on NVIDIA, and I'll tell you why. Because there is a pent-up demand on chip making companies, but the problem is there's a couple of things you got to keep in mind. They're gonna dilute their share. Probably that's what they said, they're gonna go through approval. Then second thing is there's a supply constraint, and if you know, Ukraine used to produce neon 50% of the world. That neon is now coming zero from Ukraine. So that neon is used to make the chip, the semiconductor chip, to do the laser process. And now big shortage. That's why the problem is right now going on in the world. So chip shortage will be remain for quite a bit long time, guys. So these are two different, and third cloud is economy. Well, market heading into the recession. If that happens, then we could have that one. So, and forward P ratio already 38. So I am bearish on NVIDIA. Short term it can play around here, whatever it, but right now is expensive than Google, Apple, Microsoft. Everything is all, this stock is right now expensive based on this their forward P ratio is. So that's why is heading to 199. So I'm not long on it, but temporary. If market goes here, one of green candle.
Josh, so we see here we tested that. Where's that support at? Can you put your mouse on it, your cursor?
Yeah.
Is that at 212?
Yeah.
Okay, so we tested that 212 on Thursday. So now tomorrow, if we see a break of that with volume, maybe we could come down to, what's the next one? 198?
Yeah.
Okay. So we should put that maybe in our watch list for tomorrow?
Yeah, he's already there. We're just gonna see. So what we do is, you know what we do. We always look at the morning. All these charts we opened up. Everything is there in our list. They are already there.
Josh, what I want to do is I want to get a couple names. I'm only gonna be here for a couple more minutes. But what I want to do is I want to go over a couple stocks. So my watch list for tomorrow, and obviously it depends how we open. You know what the indicators are saying, and if we because we're pretty close to some of these resistances, and if we break below, it could be so we could short the piss out of them and make some money.
Yep.
So what I want to keep an eye on is NVIDIA, Amazon, and Microsoft. That's what I have so far, and look at the QQQs and stuff as well as, and maybe IWM, but. Yeah, so can we get together in the pre-market tomorrow, even if it's like 10 to 15 minutes before?
Yeah, no problem. So we will take a look at it in the morning what exactly happened. Yeah. But what I suggest you is, Sigma, we have let when the market opens up, we need to see when market takes turn.
Yeah, let's do it.
That got to be very careful on it. If you want to be jumping in, then you can take the money out, in and out real quick. That's fine. But I will generate the signals, and you will see that in the morning. Okay.
And then can you keep that chart for a second? I just wanna add those resistances and just give me 1 second.
No
so
problem.
You got a 1 year, 1 day, 1 year.
What's up, everyone?
Is that Dave? Hey, yeah. Dave, what's up?
Oh. What's
How
up
you
there?
doing? Once you're done, I'll take my half couple tickers, okay? Or whenever you're ready.
I'm gonna stay because Dave's here. I'm gonna listen to what his signals.
Yeah, when we get time, I just want to look at Penn one more time.
Okay.
So Josh, hop on with him and let me know when I can go.
Alright, what's up, guys? Alright, so when is Sigma done, you tell me when you're done, then I can switch my screens for other.
Okay, and then the next one's at 198 or what? 198.
This one
Okay,
is 199, 198 area.
Okay, I did want to go over Microsoft, but if those guys want to go first, you guys.
No, I'll take a Microsoft, so it can be. So Microsoft is right now testing the floor. Same thing is looking very bearish right now, but we have remember this is the market right now, and it tomorrow let's see it's testing the floor. So tomorrow if that happens, then we can probably test the floor here again. One more floor, we can go to here next one, and then see. So which is 279 right now, and then we can go test 275. And then we can go the another level, but we'll see one step at a time.
One second here. So for the Microsoft, I have 279. Okay, you have 279, and then you have like 279 resistance, and then we could come down to 270.
Who said 279 resistance? 279 is support.
What's that support I meant? Yeah, sorry.
Yeah, support. Support means you're gonna break, and resistance means you're gonna go home.
Yeah, so 279, and then we break down. We can short to 270. If it breaks 279, then
I would not go right away because market has look at this my support line. I need a major support. 1, 2, 3, 4 line is
so
touching.
276. Then you'd wait for a confirmation at 276.
Yeah, we need to go one step at a time. Intraday, okay.
That's it. Okay. Break 279, confirmation at 276. Good.
Yeah.
Got it.
Keep in mind in the morning.
That's it.
Okay. All right, Dave, you got a question?
No, Sim had a question first. You want him to go first?
Yes.
Hey Josh, would you mind taking a look at Penn for me again? PENN. I'm still holding my short position on it, and it expires on the 22nd.
Looking very weak, man. Pin. Look at this. All the tops are falling. So it's going bad and broke the floor also, which is 38.66. 38.66 is gone. Yep, 100% is bearish right now. Let me see pin. Balance it. 26 cents. Oh, positive EPS, but they missed last quarter. Okay. 26 cents. And now 41, so they're going downhill. They're going downhill. Okay, so if I look at this 26 and then now 41, man, this company, okay, based on this, they're 26 cents, 26 into 4, basically 110. I'll give 110. 37 divided by 1.10. Yeah, 34 times they're asking the value, so he still has a room to go, but not crazy much right now. So it can go to 30. Yeah, okay, so let's take a look at the support where it can go. Just be careful, look for a negative EPS. This one doesn't have the negative, it is still positive, but the price can go to here. It will take little time, but if market crash, this can go, but if market doesn't crash, then it cannot. So yeah, right now, look at this candle, teeny mini small candle. You see this small teeny mini, that means it's still holding, it doesn't want to go down because it's bitten down the rabbit, bitten down rabbit, like here, from here, right here. So now it's holding based on the EPS. So
yeah, I'm looking for 35.
It doesn't matter, whenever you get some opportunity, take the money and run on this one.
Absolutely. Okay. And I guess I'll just have to see about pushing it out if it doesn't come. So thanks, Josh.
No problem, man.
Hi, Josh. I just wanted to ask the last question about the AMD. And once again, thank you so much for the spaces today.
No problem, man. Anytime, man. AMD. Okay. Alright, so AMD is, look at that, man. Horrible, we broke the main support. So AMD heading into this area, cluster area, where been here for about a year, 6-8 months, this area. So this is the area where AMD deserve to be. Let's look at their financial. 92 cents, 482, 452 and 76, Yeah, I mean, excuse me, sorry, they were expecting some, they're expecting forecasting is good. So AMD, let's see the price actually, you know, how much, what the AMD balance it look like. AMD is good, man, not bad, but let's see what it is. Yeah, it's fair value now. AMD is basically $5 up and down is 24 times. So you can get it for 20 between 20 to 25 time right now asking. So if you look at the 25, the balance sheet EBITDA 4 billion. So they are making net 20. They are making 25% net profit. So that is a good compared to Nvidia. They are making good net profit. And outstanding shares are 1.6 billion. Okay, float is 1.9, but debt, they don't have much debt also. Okay, so then if I want to analyze the stock price, if market crash, then it can go here somewhere around, you know what I mean, like, you know, it can go to 80, 90, 85, 86. This is the cluster. You see this area, this yellow, that's where it can, if market crash, this area can go. But I think I would not go immediately long on it. But if you want to play, I don't know what your plans are. You are long or short, or you want to, you're holding positions.
Holding position long.
Oh, holding. So whenever you see a good green day, just try to be a little bit watchful. So if you want to, if you believe in, if you think you want to, this company gonna fly high, it can. But right now we have a dark cloud over our heads. So market makers, you see this right now, they took it up and then it got rejected. So same thing can happen some point of time. There is a doubt, because this was the whole 3 months took. But some point it can, you know, this short, now they have to buy back. Some point they have to buy back. So if they buy back, you might see this floor can be resistance, can be tested. What is your entry point price?
115.
115. Yeah, okay. So right here. So what I right now see is AMD is not going anywhere. It's just gonna play around here and here for a few months. So I would not burn the money. I would put the money where the grow. I mean, you know, those stocks are growing. So there are a bunch of company we go through during the daytime. You can hang in when we are live. We can walk you through. But right now, semiconductor is little weak, but doesn't mean that it can bounce also a little bit. But bottom line is is between 20 time and 25 time fair value times forward PE ratio. So you know, this is the cluster. You see this is the price will be there for some point of time. When the market crash, then this go here. But if market turns, like every time bull bear, right? You see the bull bear, then bear again, bull, like cycles, right? Every day is a cycle. 5 days, 10 days, 15 days cycle, 10 days, 7 days cycle. So we've been 10 days bear cycle, and now it can start a bull. But how far it can go if it starts? But if it does not and continue, then it can go down. So we have to watch now the whole new month. Basically for market maker is a new month and new week starts. So we got to wait and watch for tomorrow and see how the things unfolds, because they've been shorting all the semiconductor stocks. So we need to be a little bit watchful at the next week starts. But I'm not right now. No, I'll be not long on any semiconductor. I like to be MU. I like MU also, but still I feel like, you know, we got to be very careful at this point right now, because we have a different situation going to arise in couple of weeks. It's not going to be looking good. It's not looking good, guys. We have a big problem right now going to happen, and I think if that happens, market gonna crash. So just be careful, and just gotta be a little bit careful. That's it. That's what I can tell you guys. Just watch out right now. Save your money, and just you know, if you need help, just let me know. Whatever you like, we will go through during the daytime.
Hey Josh, I forgot to tell you, I got a new computer.
Oh, nice.
Also, thank you to Josh and Sigma Investor.
No problem, man. Thanks, Dean. Anytime.
Alright, my ticker is ET.
Which one is it?
ET. Echo Tango.
Okay. Yeah, it is ready to apply, man. It is about on a cup break, but remember resistance, right? Remember the cup and handle is ready, and it can break through, man, tomorrow. God knows. Let me see, man. This is in our list yet. Yeah, it's 29 cents. This is cheap. This is great. So company like this, ET. This is this is, I forgot. This is oil or gas?
It's the energy. If it's on your list, skip it. I'll give you more. I'll give you a couple more. Look at
Yeah, no, this is good one. So the guy who just listening to me, this company like this, they are these are company great because look at their EPS, 29 cents, and 30 cents EPS, and ET. Let me see. So
Hey, Dave. Are any of these stocks that you're playing? Are they small caps?
so
most of them are middle or big cap. I go along together. Like the next ticker is EGO.
hold on, so this is forward P ratio 8 times, so it's fair value, and this company is making, almost like a 20% net profit also, so it's not bad. 20% net profit. ET, Energy Transfer, so that's fair. So this is what you can get. This $11 range. If it get rejected, maybe it got rejected, now it's going to break out some point of time. So ET is on a breakout, looking good and reasonable also. So how much is reasonable? Hold on, I'll tell you right. Oh yeah, 8 times. So 8 times is good, fair value. All right, next.
EGO.
What is it? B as in boy?
No, Echo. G.
Oh, gold company, right? This is
Yeah.
EGO. Yeah, 1220. Guys, right now gold is the important thing, guys. Keep in mind, man. I'm telling you, gold going to great if this bond collapse, and bond collapse. That's it. Game over, guys. Gold will be flying like a high. Yeah, this is fair value 14. Just it. Don't go crazy on this one now. Oh yeah, this is gold, but how much? What is it? This is gold 14 cents. That is a history 9 cents. In a long run could be good if they make money. The gold goes higher. This company will make them money. So keep it in a EGO gold. It used to be what, $80. We need to find out what do they do.
It's a mining company.
But where? Hold on. I need to see that EGO. Let me see. Let me see what the profile is.
Bitcoin finally broke below 40. It's at like 39.7. Is it still like heading towards 38, or do you want to take another look at that?
Yeah, I mean, look, I told.
Hey, Josh, I have 3 aces coming in to talk to us about gold.
Oh, nice.
That would be great, man.
Coming right now.
Mining, exploration, development, sell minor product. They are in Canada, guys. This one is Turkey, Canada, Greece, and Romania. The company produce gold as well as silver, lead, and zinc. So yeah, this is good. EG, this company, probably if the gold goes up, and their EPS is great, not bad. So if the gold goes up, they will benefit the most. So EGO is good. We're gonna add in our list.
Make 3 aces speaker. He's gonna give us the.
But right now, you say right now?
He's in here right now, yeah, he's joined.
Oh, okay. What's up, man? How are you?
You have to make him speaker.
Yeah, just add it up.
This is the guy to talk to you about gold.
Hey guys.
Hi, 3 aces, thanks for coming in. We're talking about gold right now.
Cool.
We want your input.
Cool. I have not listened to. I just got in, so you want me to sit and listen for a bit, or do you want me to get into it?
No, I have a ticker.
Sorry.
EQX. I have a ticker. EQX. What do you think about that, dude?
EQX.
Mm-hmm.
Equinox Gold.
Yeah.
That looks terrific
Okay. What?
on the chart. It's lagging for some reason. I mean, I like NEM better, but I know most people like small caps. EQX, huh? Let me go look.
So EQX is better than the previous one, the EGO. If you look at the the revenue.
Yeah, I haven't looked at EQX. Do they produce or no? Eldorado. Oh, they both look good. I mean, they're these stocks are blown up. They're beat up, right?
EQX.
What do you also think about AEM?
The metal itself.
Yeah, AEM is a gold company.
Hang on one second, guys. Remember, I lived in Africa, so a lot of these North American
companies. I'm a miner, so
Okay.
I invest in my companies. I don't invest in other. Like I would never be long a gold stock when I own a gold mining company. So which is what I do. So for me, I use the public markets to offset the volatility in my private business. So that's my primary, interest in the public equities. But, generally speaking, I've got a macro view and stuff like that. AUM, is it on NASDAQ? It says Australian dollar, and no, that's it.
No. A. A is an apple. E is an apple. M is an apple.
Oh, AEM.
Yeah.
Agnesio Eagle. This is an old school one. This one's been around for a long time. Yeah, and they all kind of look the same. I mean, the one that's been killing it is Newmont.
What's the
Again,
symbol?
It's not a cheap stock. Nancy Edward Mary.
Oh, Newmont.
Yeah,
Oh,
it's
wow,
Newmont
look
stock,
at that. What do they do? Same gold miner.
Yeah, a miner.
Wow, this is good one,
Yeah.
man.
I know. That's a fucking good one.
This is
Some of
really
these
good.
other ones, there's a lot of overhead resistance. Look at EGO. They got to eat through a lot of fucking stock to move this stock higher. I mean, it's moving, but
What do you also think about NG?
MG.
No, Nancy, go.
Nancy. Nova Gold. I've heard of this one. Yeah. As a rule, guys, I stay away from, is this one Canadian? Just again, why don't you shoot over, hang on, let me see if I can get him in here. Murray. Did you ever chase Murray down? Remember I was telling you?
No, I did not. But if you send me his name, I would like to have him in sometime. Unless you can get him in right now.
I just sent him a DM. What time is it in Australia? Do we know? Let's see, Sydney. And yeah, he's a doctor, right? But he's a very, very talented.
Oh, forget about it. They're probably in the morning
Sorry,
right now.
I got a call.
Okay.
I sent Murray a link. It's 11:30 in the morning. He'll come on if he sees it. He'll come on.
Mm-hmm.
As a rule, I stay away from Canadian companies in general.
Why?
Well, again, everyone's got their own personal preferences and stuff, right?
Okay, I understand.
So, don't take my personal preference or experience. Just, the old saying, don't take advice from somebody who doesn't have to live with you it being wrong, right? So, just within the context, I spent a decade on Wall Street in the 90s, and, the Canadian companies just had such a bad, way about them. They're just so heavily promotional. And you remember something, if you're looking at price earnings multiples and stuff like that at Canadian companies, you got to add 20% to that. So they're always going to look cheap because of the currency difference, right? It's like these guys are running around in the Canadian oil stocks. They have this chart, of all these Canadian companies' cash flow multiples, and then they're grouped in with all the what's that?
No, go ahead.
Hang on 1 second. What'd you say? Go ahead, honey. Go ahead. Yeah. No, it's fine. Oh, your talk time. Okay. So they're running around telling everybody how Canadian stocks are deeply undervalued on a free cash flow multiple, but they're grouping them in with U.S. dollar denominated companies. So you have to add 20-25% to their multiples, which changes their whole story. But when you tell them that, they don't want to hear it. Because they're just out there trying to promote the stocks. So Canadian stocks are always going to look cheaper because they're reporting in Canadian dollars, right? If you converted their financials to U.S. dollars, well, they're going to be 25% less cheaper, right? Because of the currency conversion, right? So there's little stuff like that you don't really see that shit, on Twitter, especially in some of these groups of kids basically that have never worked in the industry. They've never had employees. They've never managed a budget. They've never financed a company. They've never built a company in the industries that they're talking about. To 30,000 followers. You follow?
Three aces. Yeah. With the treasuries dropping. Are you looking at gold as like the main hedge, and is your main way of playing it just owning like your own personal, physical gold rather than owning any names? It sounds like that's the case.
Well, remember, I own gold deposits from, I own my company. It's my company, right? And inside of my company, I own, claims, leases, concessions. And inside of those concessions, there are, gold deposits, right? From various sizes, 300,000 ounces, 400,000 ounces that are sitting in the ground, right? So when the gold price goes up, the difference between, right, I have those ounces, right? They're just they're not all produced yet. You produce them, X number a month, right?
Right, and it'll be more, I guess you would say, effective or more efficient to maybe mine them in the next year rather than right now, as far in terms of value to cost.
No, so my cost per ounce is $700-800 an ounce. It changes because price of steel changes. A lot of parts that I use are consumable steel parts that you have to replace every day or two for hammers and crushers and and containers, and I'm subject to the same bullshit cost nonsense that's going on in steel and the other things, copper. So but my thing is of course my companies are not in North America, they're international, and so for me, if I produce 1,500 ounces of gold this month, we sell 500, pay the OPEX, and just keep the 1,000 ounces. I don't need to sell it. The company gets income. Yeah.
I have a question for you. So you said
Sure.
Stay away from the Canadian company, right? Can you give Josh a figure that you would recommend so he can evaluate the chart?
Well, again, so one of the reasons why I wanted to have Murray come on.
No, but I'm saying since you're in the gold field, can you give us a figure so he can look it up? That's not in the U.S.
Absolutely. So, for example, if you look at a company by the name, the symbol is PRU.
Prudential, what is it? PRU what?
Perseus, Perseus.
Perseus Mining Limited this is Canadian, PRU.
It's in Australia.
Oh.
Again, so again, in terms of the Canadian junior miners, which is what we're talking about, most of the Canadian junior miners, they're worth $100 million, $150 million, right? There's no production. There's one or two employees. They maybe have 10 or 12 consultants working for them. They've got PowerPoint presentations with pictures of rocks on the internet and talking about, core holes, 2,000 meters of core holes. Go look at, for example, SVE, Silver One, right? This is going to 100.
I think Josh is having a problem. Josh, did you find it?
The other one I did not, but he said it's a Canadian, it's a small company, so I think the best thing is Nugget. Then if it is a minor, then you don't want to go junior one, you want to go the senior one, which is Nugget, and Nugget is performing very well. So what?
Again, I'm not casting a dispersion on anything. What my point that I was going to make was that if you look at the average junior miner in Canada versus the average junior miner in Australia, the quality of those companies is just unbelievably night and day, right? So in Canada, for $150 million, you're buying a PowerPoint slide and a rock on an internet picture, And in Australia, for $800 million, you're buying a company that does $600 million in revenue and pays a dividend. You follow? So look at P. Yeah, that's just again, it's not a company specific thing. It's just in general, for some reason or another, the Canadian junior miners are so wildly overvalued. And the smaller Australian companies are just so deeply undervalued.
How about the Rio Tinto? How about the Rio Tinto is Australian company, right? I mean, in Australia.
Rio is one of the best companies in the world. I mean, it's a fabulous company.
For anybody that's joining late, if you click the pinned tweet in the live space, Josh is going through the balance sheets and the charts of the stocks we're talking about right now.
Yeah. So go to Josh. Go look at PRU. Go look at OGC, for example. I mean, these are like $900.
Oh, hold on. But when you talk about PRU, I mean, there are different exchanges. Should I go in Australian exchange, right?
Yeah, go on. It's Perseus, PRS.
Yeah, I got it. I got the mining.
Yeah, on the ASX.
$1.99.
Yeah, look at the website. And look at their financials. Damn near $1 billion revenue company with $1 billion market cap. With
Okay, so but
massive dividends and shit.
they are pretty much right now like couple of 2 billion business boy, 2 billion revenue, and the EPS is 9 cents. So if I take a look at EPS, let me go and analyze PRU.
Go look at, but also remember that's Canadian. So just like I talked earlier about looking at the Canadian companies, if you're going to use U.S. comps, you have to factor in the currency.
Yeah,
so
you
have
already
to add 20%, right? And the same thing applies to the Australian ones.
Yeah.
If you back out the Australian currency differential,
wow,
they're even wildly more undervalued.
Guys, this is great one, guys. PRU, PRU is like wow, is $1.99. Is ridiculously cheap price because they are positive EPS and they are making 2 billion a year. 2 billion. No. Yeah, 2 billion. Yeah, 2 billion. So
What all are they mining?
Gold. Just straight gold?
Yeah, man.
It's unfucking real. The difference in the companies, the valuations, and the quality of the companies.
You're paying 10 times value. You're paying 10 times, and this gold, this is going to be a gold going to fly, man. This is PRU. I love it, man. I love PRU, guys. Okay.
Right. Look at fucking OGC.
Hold on. Let me add one at a time.
Another fucking monster, similar.
Okay, let me see. Let me add this. PRU.
Josh, hold on. Hey, Oil God, I see you. I have a couple tickets for you. I want you to go over it when they're done also.
And then also, there's another one, Pilbara. If you want lithium, PLS on the Amex. I bought this stock at fucking 25 cents. It's $3. One of my friends is the founder. That's why I bought it. I didn't know a fucking damn thing about it. But they have a huge lithium deposit in Western Australia.
Which one is it?
PLS, Pilbara.
PLS, Pilbara, Western Australia.
Yeah,
I got it. And what do they do?
Lithium.
Oh, they are lithium.
Yeah.
Wow.
Look at that one too, bro. Look at the fucking. I mean, so for me, when I'm looking at stuff, I'm looking at this shit all over the world, because I live.
But how much do you think they produce? Lithium.
Well, you got to look at that one. Let's go online here.
I'm looking at right now actually. So if I look at it, what I see right now here, the revenue is it was horrible for last quarter. EPS is good. I mean, I love the EPS. I mean, I'm sure they must be have a. If you how much you think you believe this company, this Pilbara, yeah.
They have. Well, again, part of the Pilbara story is their reserves.
Oh, they have the reserve.
They have a huge fucking lithium deposit.
Really?
If you look up a guy, his name is Neil Biddle, Biddle.
Dave, write down.
Yeah, he's a buddy of mine. He founded this company, but he's like in his 70s and shit now, so he's kind of, but he's getting a little up there. He's not in the field and stuff like that. But I mean, dude, these guys want to have one of the largest fucking lithium deposits in Australia there.
Hold on. I got to write down, guys.
Yeah.
PLF.
I don't know why the fucking Canadian stocks have such crazy valuations. Go here, look at that, and then go look at this thing, okay? SVE. I mean, it's a fucking joke.
Which one?
150 million. SVE, Sam Victor Edward.
And what do they do?
They're a silver mine,
Oh,
but they have nothing. They have one employee. They spend $9 million a year.
Mm.
They've got one full-time employee. I met the company. They pitched me. I was looking at the guy. I'm like, are you fucking kidding me with this?
No, we don't.
Right? Right? He's got one employee, and he was pounding his chest how he drilled 2,000 meters of fucking core holes. I'm like, 2,000 meters of core holes for $9 million. 2,000 meters. We drilled 2,000 meters of core holes before fucking noon. One day, 2,000 meters of core holes.
Mm-hmm.
It's just a stock promotion. You know, it's just a flat-out fucking stock promotion is what it is.
Mm-hmm. Interesting.
Right. Yeah, so I don't know why that is, but, you know, again, I'm not sitting here kicking and moaning and screaming. I'm just going to the ones that I would want to buy. What's the point of kicking and screaming about it? I just go find the ones that I want to own.
Okay.
Yeah.
What do you think about HL?
Harry Larry?
Yeah.
Let me see.
Harry Larry what? In Australia? Hecla Mining. But they are in Brazil?
They actually listed on the New York Exchange.
Yeah.
It's a good looking chart.
Yeah, I see that Hecla Mining New York Exchange. Yep,
Yeah,
$7.
It's a good looking chart. Yeah.
Yep, they're 185
I don't know
million.
what the fucking phenomenon
No,
is.
stay away from
These
HL.
I don't know why the fuck these Australian companies are so cheap. I mean, these are $5, $6, $7, $800 million a year revenue companies, $1 billion, $2 billion market caps.
Absolutely, because I see the Canadians are expensive.
And shit. Did you look at OGC, Oscar George Charles?
OGC, let me leave.
Look at that one. Yeah.
Okay, Canadian?
No, Australian.
Australian OGC, yeah, let me see.
Yeah.
Oh, wow, gapping up and go.
Right.
Gapping up and go.
Look
Ooh,
at the fucking
la la.
financials.
Yeah.
Look at the financials.
Yeah, that's good. There's the 300 million a quarter, so almost like a 1.5 billion a year, and their EPS is 6 cents. Is ridiculously cheap price. That's why gapping up and go. Gapping up and go, man. This is good. And what do they do? Gold or?
Yeah, they're fucking gold company.
Yeah, this is good. Great one. I love this one.
This is
Oh,
$1 billion in revenue.
1.5.
Right, exactly. See,
Really?
so I'm always looking at the walking into the supermarket, looking at the fruit on the stand there. Okay, the strawberries are expensive today. The blueberries look cheap. The lemons, the tomatoes.
Mm-hmm.
You know, when I look at, especially looking at commodities, you know, that's how I buy stuff. That's why I was saying back in January when I was the only guy on Twitter saying buy gold at like 1790, 1800, or was pounding the table. I said contrarian pick of the year because all the other commodities, there's no fucking way gold could stay down under those circumstances.
No, you watch my words, guys. All the bond money going into the gold. Watch out. Remember, I'm telling you guys, this is nothing what you see right now. You see all the what happened to nickel, what happened to copper, what happened to wood. Same thing gonna happen to the gold, and gold is our exchange of monetary policy. Government was controlling all the gold was down, so people can invest money into bond. But right now bonds are broken, so just give a little time, and you're gonna see all this.
Look at the 10-year. You gap and go.
Yeah.
The 10-year just broke. The
Yep.
10-year yield this morning or 20 minutes ago, whenever the fucking thing opened,
Yep.
broke a 40-year downtrend on the yield.
You're right.
Goodbye. That shit's going to 5.5%.
You got it. See, guys, you listening, right? Guys, listening. Today I gave the session today. About a couple of hours ago, you were not here, and I said that this is going to be the moon, and right here, index is right here. If you the bull, what are the indexes? Index is right here.
And the interesting thing about gold, I'm not a gold bug. I don't give a fuck. Commodity. When it comes to commodities, copper, gold, oil, silver, coal, I don't give a fuck. They're all prostitutes. They're just inanimate objects. It's like a house plant. Okay. It's like falling in love with a fucking hooker. Okay. Right. It's like who gives a shit? I don't care. It's just can we make money at it? I mean, so if you look at gold, there's a lot of forces coming right now. You got, look at the physical demand is up 70% year over year. If you look at lead times, right? Like if you buy gold today, if you call the broker right now, the dealer, and you buy it today, get a price, pay for it, and all that shit, it's 3 weeks to get delivery now.
Oh, yep, you're right. And then on top of you got to pay premium too.
That's right, and there's always been a premium, but the premium's now pretty much a lot higher than it's been.
It depends on what you're buying. Buying bar, buying coin. The more, if you're gonna buy the coin, you're gonna pay more premium. If you're gonna buy the bar, maybe a little less premium.
That's right, and then this Putin, right, pegged 5,000 rubles to a gram of gold.
Yeah.
Right?
Yo, you know what?
So,
Sorry, go ahead. So no, you finish.
No, go for it. Go.
Okay, so like I as America sanctioned on 30 refinery of Russian gold miners, right? And they are the 10% production of the whole entire world. And I'm positive China and India must be eyeing on those kind of gold, because those refinery now they can go and go to the UK, one of the what you call bar gold bar association. So now they can sell that gold somebody probably little less price, and I'm sure there might be gold people must be buying, because there's a lot of mafia love gold, man, and I'm sure they must be heading to Russia to buy the gold.
Well, but here's the thing, right? So like the Vatican, had to buy millions of dollars in rubles to pay their natural gas bill or something. These are just tiny little anecdotes, but the thing is you can't buy the ruble. It's a closed currency. So in order for them to actually buy the ruble, because they can't do it on SWIFT with US, they have to fucking buy gold, because it's pegged to the ruble, right? And then if you look the other day, and again, some of this stuff's been going on for 30 years. I mean, they've been trying to, China and Russia and these guys been trying to circumvent the SWIFT system since the 80s, right? So, but now all of a sudden the BRICS just announced a plan to set up an alternative payment system. It has to be backed by gold. There's no other way they could do it, if you think about it, if you read into it, how it would work. Right. So again, not being a gold maxi, but when, you got the totality of the weight of, 6, 8, 10 pieces of information on the scale, and they're all weighing in the favor of gold, it's like, it's that's generally speaking a pretty good thing, right? Oil too. I mean, I think oil's a monster. I just think it got a little ahead of itself.
Yep.
And, I bought oil the day that Biden, closed down. I've been to 100 countries, guys. I've done business in dozens, 2+ dozen countries, okay? Remember, when you're in Africa and you're in one country and you're putting a deal together, you got 4, 5, 6 other countries that oftentimes you have, you're buying equipment in Australia, you're buying, construction equipment in South Africa, you're shipping through Dar es Salaam, you're doing business in 5, 6 countries there. One deal, right? So when you're in places like that, I've never seen a president of a country unilaterally shut a corporation down for political reasons. I've seen plenty of governments, shut companies down for good reason, though, not political like that. Day one on the job, this imbecile goes out and shuts that pipeline down. I went out and piled into fucking oil and gas. So, but when it hit 130 and, I see everybody and their mother talking about it, and, I just, and we're going into an election season, whether the SPR, whatever the thing is, I just was like, it's too soon. But there will be a time, in my opinion, in the not too distant future, to where you'll see crude pushing $200. But here's the other thing, and here's another sort of red flag for gold. That shit's not going to happen with the dollar going up every day the way it is.
No. Okay. So let me add it up a little bit.
So that's the biggie for me, because I'm in commodities. I know exactly how that works.
But
watch the dollar. Sorry, go ahead.
No, so let me add it up. Actually, I understand there is always equation is like dollar goes up, the gold goes down, right? But no.
Oil and copper and all.
But let me finish. Let me finish it up. Okay, so let me add it up, because the equation what you are trying to use it last 40 years, that the last 20 years basically, but you have to understand this equation. government wanted to sell the bond to the other people, right? Other countries who have billions and billions of dollars to put it in bond. So they have to bring the gold down. They want to bring the gold down. Then only people will think, oh wow, look, gold is going down. The bond is holding, right? Now the equation changing because of the inflation, right now, right? Now the inflation changing, but remember the dollar value went down. If you look at the M2 chart, the dollar went down. Though right now dollar gonna shows the strength for a little bit time, but the bond is gonna go down. So people gonna pull the money out of the bond because it was it's called a dressed up bond. So now the bond is losing like a 20%, 30% value. Some of the bonds are losing 50% value because
TLT is down 35, 40%
so exactly.
I
So
mean, that's a fucking bloodbath.
no,
Just
no, no.
there, and it's not even started yet, really.
So what is the bond actually? A bond is like a hedge, right? If they want to put the money into equity, they can buy Tesla, Apple, whatnot, right? But they don't want to now. The bond was the hedge, but now no more bond is a hedge. So where they're gonna put it in? Gold is the hedge. That's the real gold, right? And that's where the money gonna go. Now watch my words. You watch, give a year or two, and you're gonna see where the gold is heading.
Yeah. So, and if they pull off some of this brick stuff, I mean, look, there's a lot. There's never been a better time to be investing in oil. I call them golds, right? The black and the yellow golds, right? But remember, fucking oil and these oil stocks have gone meteoric, right? And remember something else. I am now currently sitting in an emerging market, and the fucking impact on demand destruction for the inflation, the dollar going up, oil prices, it's severe. So whether it's hit the market, not hit the market, whatever, I can feel it in my business. Let me give you an example, right? So a year and a half ago, right, to buy a shipping container, a steel shipping container, right? So, right, it was $500 or $600 US.
Yep.
They're $4,000 now.
Yep, you're right.
Now, remember, if you're in the commodities business, you have no control over your input costs. Like even Tesla and these guys, they don't have control over the cobalt and stuff. But in the case of Tesla and stuff, they have control over their sales price. They can change their sales price. When you're in the fucking commodities business, you have no control over your input costs or your sell price, right? Because it's all based on spot and LME. Doesn't matter cobalt, copper, oil, or anything. So it definitely, has some very significant implications, what's happening now to this crazy pricing that's happening, with these prices or these things. It's not nothing. That I promise you. It's significant.
Gotcha. Yeah, because right now the Fed is going to announce probably quarter percent. 50 points Fed rate going to announce. When that happens, the dollar gonna go a little bit higher too, and the bond value gonna go down, and slowly, Japan already came to know that hey, look, the bond is already vulnerable right now. So that's why they said we're not gonna buying the bond, we're gonna halt. And now they look at the Japan market. The gold is already high right now today.
Yeah, the Japan yen gold is fucking looks like oil stocks.
You got it. They are smart, man. Japanese are smart.
Right.
Yeah. Yep.
So all of these pieces are related, and stuff. That's why I have a tendency a little bit be risk adverse because I've sat through some very dark, ugly shit for long periods of time, both in stocks and commodities. So when things seem like they're getting a little squirrely for me, I have a tendency to put the brakes on, But I don't really think we've seen the move yet in gold. I don't know, and the reality of it is from my perspective, my personal perspective, the price of the material is not really nearly as important as the material that I'm pulling out of the ground, right? So a half a gram differential in grade coming out of the ground is far, far, far more impactful in terms of operating leverage than the price of the spot gold. Within reason, right? I mean, if it went to 4,000 from here, that's a different story, right? But just normal kind of volatility in the metal is noise compared to a half a gram or a gram differential in terms of grade that's coming out of the ground. That's got the huge, right? If you go from 2 to 3 grams a ton coming out of the mine, right? That's a 50% increase in production with all the same costs. So the difference between 1,800 fucking, spot and 2,100, I know that that's definitely reason to, start popping corks and stuff. But from my perspective, it's nothing compared to, get that difference in grade coming out of the mine. You understand?
Yep.
Right. That's all right. So I'm more focused on managing the things that that I can control, because sometimes it's not sometimes, all the time. It's not like oil. It's a natural resource and it's heterogeneous, right? So you can hit pockets of high grade material and then hit pockets of low grade material. So balancing those grades out to where it's feeding a machine an above average grade at all times and keeping consistent production is far more impactful in terms of operating leverage for a private company like mine than the price of LME one day to the next kind of thing,
Yeah.
Right. So you guys, the biggest thing, if I could teach you one thing about whatever you're doing here with the material stocks, whether it's gold, oil, copper, whatever that is, lithium, is to really, really, really try to find the companies that have the best grades.
Best grade. Oh, wow, interesting.
That's right.
So Australian has the best grade, you think, right? Australian?
Well, no, I'm not saying that. I'm just saying, I have not dug down deep. That's why if Murray, I haven't looked at the screen here.
Whenever she come back, we'll be here tomorrow live, morning to evening. So no worries. If you think you have a time tomorrow, she has a time tomorrow. Maybe her evening time, right? Probably tomorrow we'll be morning here. We joins.
He normally surfaces about now.
Oh, okay. Yeah, because morning time.
No, he's in Australia. I can shoot him a WhatsApp.
Yep.
Shoot him a WhatsApp and ask him if he can come hop on. He'll know grades and stuff. So if you're looking at 6 gold companies, right, notwithstanding any kind of hair, debt and restructuring or whatever kind of special situation, song and dance there may be. What you want to do is you want to pick the one that's got the highest grade coming out of the ground, because that's the one that's going to fucking rock and roll, because they're the ones who are going to just juice up the operating leverage on cash flow. Right? Think about it. Yep. Hang on for a second. Let me just send him a WhatsApp.
That's fine.
ASX, we're talking ASX gold stocks. Did you looked at Oceana? Now here's another interesting one, and this is actually, it's again, some people like this kind of stuff, others don't. But there's a royalty company that he absolutely loves.
Which one is it?
It's called Vox, VOX, Vox Royalty.
Vox Royalty, Vox RTY. It is in Canadian.
No, it's ASX again. The 3 I'm giving you now are ASX. And then I gave you the Pilbara. So I gave you PRU, OGC. Now this is Vox.
But Vox is not coming in OU or AUS.
ASX.
I mean ASX.
Vox, hang on.
Maybe I can see Vox Royalty, but it says Canadian.
You know what? This one may be Canadian. So hold on, that's right. This one may be listed on the Canadian, but it's an Australian company.
Oh, really?
Or something like that. Yeah, go to Vox. If you go to.
No, these are tiny companies, like 1.5 million. This is nothing.
No, but it's a royalty stream company.
VOX.
So they're not a producer. They're like.
Royalty.
For some reason he loves this one. I wish he was around. Let's see if he pops in here. Let me see. Royalty streaming business model here. I'm going to put the thing in the nest. Am I going to screw your nest up if I put a thing in there?
That's fine. You can put it. That's fine.
Okay. Let's see. What am I doing here?
There's a pin on the bottom. You can pin it.
Yeah, I got it in there.
Okay.
Vox Royalty.
Yep, you can click on it. Vox Royalty. So let me see. VOX ROYALQ.
Let's look at their presentation. Did you look at their pre's out? Here.
Yeah, this coming up.
I clicked the investor relations thing there. Let's see here. 1.9 million ounces produced at Edicon royalty linked. Let's see where the financials are in this thing here.
Oh, they are all over. They're in Australia. They are everywhere.
Yeah.
Oh, it's a Toronto company. It's a Canadian company.
He fucking loves this company, this Vox Royalty. This one I could talk your ear off for fucking for an hour on this one. They'll put you to sleep.
TSXV.
20, 30 royalty interest. Do you see their financials in there? I don't see the financials in the
Okay. TSXV. Okay, Vox, but it's a Canadian. But yeah, that's the price right here. The financial is very, very low. I see financial, but it's like this is maybe.
They have like 30 or 40 royalties. Are they just tiny shit little royalties? Because some of these royalties they're talking about. Here, Vox producing assets 13 near term. Revenue growth 750. Upcoming catalysts. Let me see if he looked at my WhatsApp thing I sent him. In any event, I heard a click in there. Is that him?
Okay. That's fine. You know, if she come back, if she hit the comeback.
Yeah. No, he hasn't opened up the WhatsApp message yet.
So, according to you, what do you think the best lithium company would be around the world? You think Tesla will be chasing those companies? You think how about the Vale?
Well, so here's the thing, right? So there is no shortage of lithium right now.
Really?
Yeah.
Then why these guys crying? He say, hey, I need to open my own mining business. This thing is going nuts.
Because of the price. This is what I'm saying. The pricing mechanism. Look, watch. So 100%, 100, not 99, 100% of all offtake agreements, right? Okay, are priced off of the LME prices. Coal, copper,
which is London, right?
That's correct, London Exchange. That's right. Now, right? So now only 5% or 10% of worldwide production, tin, aluminum, uranium, copper, gold, all of it, 5 to 10% of the worldwide production of those goods hit the LME. Yet 100% of the fucking pricing for all of those goods, nickel, is based on LME price. Now, if you look at margin rates for these exchanges, COMEX, Shanghai, LME, they're 5 and 10%, right? So let's just say 10% of global supply actually hits the LME. I have never sold a ton of copper or any of those things on the LME. Never 1 ton of any of my material has ever hit the LME. Okay? Yet 100% of the prices that I've been paid has been LME price. Now, let's say 10% of the total worldwide supply of those commodities, all commodities, okay, actually hit the LME warehouse, right? Okay. Now, and margin requirements are 10%. They're between 5 and 10%. That's 1% of the notional dollar value of the global commodity complex is driving 100% of the prices. Right. Okay. So that's fucking broken. Okay. So basically, right. So lithium, right. Lithium's gone up 400 or 500% recently. Year, whatever that story is. Right. Okay. Now look at the lithium stocks. I mean, Popar is doing good, but look at like LCA, Lithium of America.
Do they? So Lithium of America. Do you think they are big capacity? Do they have or no?
No, they're $5 billion in market cap, I think, or right around here.
Hold on, let me. I can check right now.
Yeah. So watch, but the stock's down 40% from its high.
Yeah.
Right. So that's the first thing, right? That's data. That's throwing, weighing the totality of the weight of all of the evidence and putting it on the scale. That, right, to me, that's saying, how is it that lithium can go up 400 or 500%. And a lot of these stocks, it's not just that one. Look at SLI, another one.
SLI?
Yeah. The
Yes,
stocks are not confirming to me that these prices, you know, now Standard Lithium, right?
Yeah.
Look at this stock, 13 to 7.
Yeah, falling
And
tops.
the fucking lithium's up 500%. There's something's not right there.
There's no revenue
Now,
here.
What's that?
I do not see the revenue. Do you know this the SLI? You think they are making good money?
Again, I'm just talking macro.
Okay.
Right. You know what I'm saying? Like, I'm not getting it. Like, I can't, right? Like, get into detail. That's why when you find a guy like Murray, who knows those things inside and out, you hang on to him tight, right? Because when you need the information there, you can get it from him, right? But me, I'm just looking at the big picture.
Gotcha.
Something's not fucking right here. Okay. So, right, which from me, what I think what's going on. Okay. And again, oil's probably the the safest oil and gas of all of them, in my guess, right? Because there are very serious issues in the hydrocarbon space, right? But but it still applies to oil as well, right? Which is why we saw it go to 130 and pull back, and I'm not convinced the pullback's over, especially in the stocks. The stocks haven't really pulled back. But so here's the thing, right? So we just had the everything bubble, right?
Right.
Okay. Right. Okay. So what did the everything bubble do? The everything bubble took pot stocks from 5 to 300 back to fucking 5, right? Took the SPACs from 10 to 80 to 2, okay? Took the EVs from 10 to 80 to 20, right? Took ARK, all the ARK garbage, right, has gone from fucking 50 to 160 back to 50, 60 bucks, right? That's the everything bubble. The everything bubble took real estate, which we're probably all fairly convinced that even at these yields on the 10-year, the real estate's got a big ass kicking coming. God forbid the 10-year goes to 5.5, which is where I think it's going, right? So that was all everything bubble bullshit, right? And then and then Bitcoin, everything bubble, right? So the everything bubble, tech stocks, social media, all of it. So the everything bubble has inflated everything except commodities. Right? So now the problem is these fucking markets can't handle that. I mean, you take the top 5, 6, 7 quant shops, Millennium, 2 Sigma, DH Shaw, Renaissance, that's $1 trillion fucking in buying power. Okay? Look at nickel. The total worldwide production for nickel is like 2.5 million tons. Okay, right? Copper is like 23 million tons. Gold is 8,000 tons. Palladium, 188 tons. Tin, 200,000 tons. Fucking uranium, 55,000 tons. These markets are fucking tiny, right? So even nickel, if you take the entire worldwide supply of nickel and price it out just before that bullshit happened with the LME thing there, right? It's 1 to 1.5 days worth of liquidity in Tesla's trading. One fucking day, right? So if you take those everything bubble machines, I call them the ZERP bobblehead machines, because they're just fucking computers, right? There's not even anybody in there. They hook a computer up. Where's the momentum? Where's the liquidity? And they point the machine at it, and there go the bobbleheads, right? So fucking, right? Those markets can't handle that shit. Tin is only 200,000 fucking tons a year. And 99% of the tin that's bought and sold in the commercial markets is through commercial agreements. It never hits the fucking LME. So yet now we point this fucking machine, this everything bubble machine at those markets. They just can't handle it. They're not built for that shit. They weren't built for all this fucking zero interest rate policy, free money, fucking all this stuff. It's just not, right? So look at what they've done to lithium. I mean, the total worldwide supply of lithium is less than 100,000 tons of battery grade lithium, of carbonate. I mean, it's fuck, dude. That's nothing, right? I mean, you know, it's like nothing. 100,000 tons. You know, even a small little guy like me, right? You know, 100,000 tons of material over the course of a period of time is not much. So that machine hit these markets. Are you guys there, or did I lose you?
Yeah, I'm listening.
Are you there? Yeah. So the other thing, right? The other thing is this, right? So I'm gonna see if I can. I'm gonna pull this up on the thing here. Hang on, I'll put it in the nest. So there's the business cycle, man. You know. So the business cycle. Let's see. Let me see if I have it here. Here it is. So take a look at the nest. So there's 6 stages to the business cycle. And this business cycle chart that I put here, this is very, very, very commonly known in, you know, technical analysis. All the major investment banks use this. The guy that created this is a guy by the name of Martin Pring, okay? Who's like an old school technical analyst from the 70s and 80s. He's still around. He's on Twitter. He never posts, though. So the first stage of the business cycle is when interest rates go down. Well, clearly not there, okay? The second stage of the business cycle is when stocks bounce, go up, okay? We're not there either, okay? And the third stage is when commodities go up, right? Now, the fourth stage is when yields go up and bonds go down, right? We're clearly there. The fifth stage is when stocks go down. We're clearly there as well. So what's the sixth stage of the business cycle? Is commodities roll over, right? So on one hand, you've got this everything bubble, endless amount of liquidity chasing markets that are basically nothing, tiny little markets on leverage, right? On the other hand, right, you know, all these fucking asset classes have been inflated and have collapsed, with besides real estate and large cap tech, right? So the commodities. It stands to reason that as an industry group, as an asset class, right, would have some sort of a blow off top at the end of the business cycle and then roll over, right?
Three aces. We have some questions here, unless you want.
Yeah, sorry guys.
Okay,
I'm looking at the phone,
Joseph.
so if you got questions, just bring them in.
Joseph, go ahead.
Hey, Aces. Thank you for being here.
No problem.
Yeah, you were talking about some of like the lithium companies. So is that one of the challenges really? Because when you're talking about the companies that bring forth minerals in particular, you can't see their contracts necessarily.
You got it.
So you can't tell whether or not they're getting the revenue, at least before they do their earnings calls, if their earnings are being basically heavily weighted towards a spot price, or they're locked into long-term contract. So doesn't that really mean, as long as you're basically following the financials, you're probably okay, because you can see the actual numbers every quarter at least. So you get at least a little bit less of a surprise.
Right. So you fucking nailed it right on the screws. So basically, right, so going back now to just a little history, for a decade, and I mean a decade, a long, brutal, fucked up decade, where they almost came and took my refrigerator a couple of times, okay, out of the house, right? There was zero CapEx, not a penny CapEx for resources, okay? Notwithstanding oil and gas. So what happened was, Joseph, the Chinese, right? So the Chinese failed miserably in the mining business. They're just a fucking train wreck, right? But they're very, very, very good at manufacturing. Very, very, very good. So what they decided to do, which was wise, was to, instead of building mines out where they were losing money hand over fucking fist in every one of them, what they decided to do was let the miners build the mines out, and then they would secure long-term offtake agreements. Now, the miners, especially like me, said to them, hey, boys, we're not a bank, and without my product, you've got nothing. So this is what we're going to do. We'll enter into a prepaid offtake agreement with you, which means you give me 50 million, 75 million. So I put my plant in, and in exchange for that, we'll give you the lifetime offtake agreement for the lifetime of the mine. Now, I've done that same deal, but with the Swiss, not the Chinese, because I just can't stomach those motherfuckers. If there's anybody here on the phone that's Chinese, please forgive me. But they're the worst of the worst, okay, to do business with. So basically, right, in those prepaid offtake agreements, they're commercial agreements. They're private contracts. So if you look at LCA, their fucking offtake agreement is with the Chinese, even though the company's in Alabama or Arkansas or something, but it's under confidentiality treatment. It's not disclosed. So there's no way for you to fucking model out their revenue. You follow?
Yeah, exactly.
Right.
And just to be clear, I mean, I hold positions right now in Rio, BHP, Teak, Vale, for example.
Mm-hmm. Rio's one of my favorite companies on earth. The CFO of Rio is a good buddy of mine, or he's not the CFO now, but he's one of my close buddies, and just the highest quality fucking operation you'll ever find. But Newmont's a good one. Stock's been on a tear. Right, but here's the thing. Those mining agreements, those offtake agreements, Joseph, are typically done on a VWAP basis to LME. So if you look up the term, there's a term called quotational period. The quotational periods can be one of 2 or 3 different quotational periods, right? Typically, the price of the material is based on LME, which is a little wrinkle in your long-term offtake, supposition or potential pricing mechanism. But where they get you is in the discount, right? So where they get you is in the discount. So typically, right, which is very peculiar as to why a company that was public would file a CT order for their offtake agreement. Right? It sounds to me like they got fucking bent over and taken to the shed, and they don't want anybody to know, which is showing up in the stock, right? But generally speaking, the offtake, the price of the offtake will be 14-day, 30-day VWAP to LME, but the discount, right? Because remember, when LCA or SLI or Pilbara or any of these guys pull that shit out of the ground, what they're shipping is a concentrate. They're not shipping battery-grade carbonate that goes right into the fucking battery. It needs to be upgraded again in China, right? So the cost to upgrade that, transportation, insurance, logistics, clearing, all of those costs that go into that are in that discount, right? So the discount, for example, like for a copper concentrate that's like a 40% grade material is, somewhere between 75, 25, 23% off of LME, right? So that's where you're paying for the money. It's not in a, $5,000 LME, $5,000 sales price for the next 10 years. It's in that discount there. You understand the difference?
Yeah, I do, very much so. By the way, also just for context, I spent a couple of years working as a freight forwarder with the shipping divisions.
Okay. So you have some experience in the logistics and title and all that shit.
Exactly. Yeah, I'm actually very well versed in what's involved in moving large cargoes of materials from one part of the world to another. And I was working at one point in my life with one of the largest freight forwarders in the country.
Nice, excellent. What GLs did you work?
GLs? You mean? I'm sorry. What do you mean by GLs?
Geographies.
Global.
Oh, so you were global. So you did Dar es Salaam, Durban, the big ports of
I
Africa.
shipping materials to every part of the globe.
Yeah. So you know the drill then. The fucking nightmare with that shit.
Actually, it was wonderful.
Really?
Understand me.
From my perspective, keeping track of 200 trucks on land and warehouses on ships in 3 different fucking continents. I was like, no, thank you. Here you go.
No.
So,
But you know what, Aces? I disagree, and I'll tell you why I disagree. Because I was so happy I was not in air freight.
Oh, okay.
I had there were 2 of us that were managing all of the operations. I was in charge of all ocean movements, and my partner was in charge of all the air movements. And I was wonderfully grateful I was not in charge of air, because I'm sorry.
Yeah, sorry. No, go ahead.
Because at least with ocean movements, you had time to move things. You had time to deal with things. Ocean movements, air movements,
right.
you did not. Air movements were a pain in the friggin' butt.
Are you still doing that now?
No.
Oh,
That was actually one of my first full-time jobs when I moved out to San Francisco. And so...
with Maersk then, huh?
No, I was actually with R.H. Robinson.
Oh, okay.
This is way, way, way back in olden days.
Got it.
And they were later acquired by Seeking International out in Texas. They're one of their, how can we say, one of the persons that was like tapped to become the CEO had then gone on to go do Seeking, and then he came back later and acquired R.H. Robinson. And so when that happened, that's what happened. But I spent a couple of years just working on managing ocean movements around the globe.
Wow.
And so I was doing it at a high level. So I oversaw all the offices around the globe for their ocean movements in regards to authorizing how they were going to be paying for the different fees. Because everything was, for me, it was, and was on the financial side, but I also had to understand the logistical side because timing impacted dollars. And a lot of the income, so we had okay margins. I started with our margins. I'm sorry, go ahead.
The margins aren't huge. You know?
They aren't huge. I agree. But what I was doing is I wasn't doing anything that was illegal, but I was making sure I was pushing out to as far as I could on the payment dates to maximize our rate of return on the funds we were holding. Because if you're making ocean movements, you're getting large payments coming in to pay basically, well, like the fees. All the fees related. And so I was maximizing our income off of all the money we had to hold to pay fees out.
You know, you'd be a great guest to have on for Incoterms, because that's one area that a lot of people don't understand. If you, just getting back to one thing, and I don't want to.
By the way, my entire background is in the finance side of operations. So it's things like corporate credit lines. It's in basically
LCs and shit.
Anything that's involved on the finance side of operations. That's where I was. I've worked at major shipping companies. I've done projects for pretty much companies in every single sector of industry. I've done work for KLX-Kencor. I've done work for basically
Trafigura. You've probably done it with all of them.
I've done it for all of the major car companies. I've done it for basically most of the food manufacturer companies. I've done it for basically, Louise's, most of the apparel retailers.
Coca-Cola, Reynolds Metals, all of those.
I've done things I've done projects for Dole, for Nestle. I've done work for basically companies that work in other aspects of like food processing that go to your major retailers. And so my background,
cold chain, all of it, huh?
Yeah, so I've had my hands in deep in the weeds of all of major companies in almost every single sector because of what my specialty is. When I was working at one point was for a company where we took on contracts, and I would get my hands into basically the weeds of, at any given time, a few dozen different companies and managing my teams to make sure that everything was moving correctly for their financials, on how they were managing the day-to-day financial requirements of how they manage their businesses, and particularly for cash flow.
Did you ever have much theft?
Yes.
Yeah.
One
I
time,
was mad.
18 fucking
I'm sorry. Go ahead.
truckloads. Yeah, one time. So you see what I just put in the nest? That's one of my warehouses, right? That's copper concentrate. Okay, 100% of all natural resources that are coming out of Africa, mostly South America, not 100% out of South America. They're moving in concentrates, right? You know this, but I'm talking to everybody here. And so what happens is that material there is a 40% grade material, okay? And basically when it gets to China, it needs to be upgraded, right? To get to that 5/9 looking copper stuff, that beautiful red metal that everyone sees when they open up a wire or something like that, right? So in that discount, right, that's applied to the price of LME, right, is also the costs, right, that the buyer has to incur to upgrade the material to get it from that to the 5/9s, right? So the LCAs, the SLIs, the Pilbaras, all of those guys, none of them are shipping battery grade carbonate that's going right into a battery. They're shipping some kind of form of concentrate, a leach or something, pregnant leach, a pregnant solution, a blister, a cathode of some kind, right, that has to still be upgraded. So when you're talking about those discounts to the offtake agreements, all of that shit's in that discount. I just wanted to close the loop on that thing we were talking about. But sorry to interrupt you.
No, three.
No. Thank you, Aces. And I used to manage basically about a half dozen different office teams that all had multiple projects going on at any given time.
Yeah.
So, yeah. But thank you. You've been extremely helpful.
Oh, my pleasure. Yeah,
hey, guys, Abe here has a question.
Yeah, just one time I had 18 truckloads of that shit that you're looking at in the picture go missing in between Congo and Dar es Salaam, which is like an 18-day journey. They fucking called ahead with the bill of ladings and all the weights and packages and everything, and they had sand sitting in bags. They pulled the trucks over to go to sleep. They unloaded the trucks. They replaced them with sand. They put them in the warehouse. They didn't figure it out till they got to China. That cost me $500,000 or something like that, because they stole the stuff. So in any event, so I was just curious if that shit happens, or am I just the only lucky one that something like that's happened to? Hey Abe, what's going on, bro?
Question. Two questions. One is, where do you think we are in terms of this cycle for commodities, in terms of and how that may be impacted by the Fed? Because everything you've said, I pretty much agree on the. They printed themselves into oblivion. The question is, in all the asset classes, and I fully agree, real estate is really real estate and large tech are the only two that haven't had the crap beaten out of them yet.
Right. That's right. That's right. I fully agree.
The question is, so how long where do you think we are in this commodity cycle? And number two, do you think that the Fed is actually going to crash the party and then reinflate the party all over again because they realize that they're completely screwed? What's your take on those two questions?
I can. Three. Once you're done, then I can add on that.
You want to go first, Josh?
All right, no problem.
Yeah.
So actually, what happens is, Fed has been controlling gold last 20 years. So just to let you know, $119 trillion bond we have. Why? Because every country they wanted to, they trust the paper. They didn't trust the gold because they see the graph. Oh, look, gold is going down, right? That's been going on since 20 years. Why? Because it was dressed up. It was dressed up because of the bond. Now the bond has bottom out. Basically, it's like bond is broken right now. That's what I tweet about it today, that the bond is broken. And now people are going to start feeling that bond is broken. Now where they're going to find it, because bond is all about hedge, right? So where they're going to hedge now? They can't put it in the equity. Equity is like, there's a lot of volatility. Same thing on a credit market. Credit market is the worst one to even get in this time. So now the bond is already vulnerable. So what would happen is people gonna shift the money from bond market to probably the gold, because gold is the one of the monetary commodity where people believe in. And I think that's what's going to happen. That's why the Japan also came out last week, and we announced in our live trading that, hey, Japan is already came out and said that, hey, we're not going to buy the bond now. And if you look at it, Japan already started buying, getting the gold now. So I think bubble about to burst when until the bond breaks the bottom, and we can see parabolic moves on all the yields and it's heading. So that would affect that. Now talking about the commodities, so this is the now it depends on which commodity you are heading. So for example, right now commodity will be in a huge demand for 2022 and 2023 based on the supply constraints we have, and plus this war not going to end in months and months. It's gonna go a little bit longer time, and even though after the war get over, Ukraine has to get back into the rhythm also. That will also takes time, because this anytime war goes on, it takes, once the war get over, it takes another 6 months also. So I think we will be stuck here for a long period of time. And
So Josh, full disclosure, Abe's an expert in Ukrainian steel and other commodities. So we can come back to the Ukrainian thing and let Abe take the stage on that one. But just to answer the question, Abe, the best that I can, right, is that if we're right about what we're talking about, the everything bubbles finally made it to the commodities, and, right, so then the second part of that would be, well, are we right about it from a business cycle perspective, or are we right about it from a just flat out inflation perspective, which could be two different things? Because we've seen commodities run for years, coming out of a business cycle that were purely inflationary. So we don't really know just yet, although you have anecdotal information about some of the commodities that you traffic in. The thing though is that I do believe what we're looking at, if you look at the nest, Dave, and I've showed you this before, I think, in other rooms some time ago, I have been using this business cycle chart my whole career, and I know Goldman and Credit Suisse, and they all do, right? So the author of this chart is a guy by the name of Martin Pring, who's on Twitter but never posts for some reason. So in any event, what this chart says here, in the nest, is that we just went through it. I don't know. Were you on the phone when we went through it?
I've got this chart. It's a great chart.
Yeah. So what this chart's saying is, if it's business cycle related, we're in a blow off top in an everything bubble, and because we're in an everything bubble, all the rest of the shit went up parabolic, the way it did, and for extended periods of time. So. Right, but it'll come down if it's business cycle related. If it's flat out supply and demand related, but again, notwithstanding your corner of the room where there are real shortages and stuff coming from the Ukraine and Russia thing, which I was a little skeptical about for a while there, but I'm actually on board there now, particularly with steel. Like in my stuff now, Abe, I'm in another continent, right? And the only thing I can't get a price on is steel-related stuff. It's there, but I can't get a verbal quote over the phone. I got to be standing there with a fucking briefcase full of cash willing to buy it, because the guys are so scared shitless they don't know what price to give you because the price is so volatile. Right.
That's exactly what's happening. 48 hours.
Right. If that, right? Yeah. It's like, so you nailed that. But having said that, the goods are there. So right, it's not like there's nothing there to buy, right? All the other stuff, excavators, all that shit, that stuff's stacked up a mile high, right? But in some of my stuff, I need raw steel products like they're consumable products for like hammers for crushers, to where you got to replace them every 24, 36 hours. They're just like raw steel blocks with arms on them and a big, huge industrial bobby pin going through there. You open up the top of the crusher every 24, 36 hours. You snap the bobby pins out and you put new ones in. Just consumable things, right? They won't even give us fucking quotes on those unless you're standing there with, cash, ready to buy them. But again, they're there, right? So the question is, how much of it is excess imbalance of supply and demand relative to the business cycle? And I don't know, do we have any way of knowing that for real? In reality, do we have any way of really knowing that? I don't know. It's a question.
Yeah. I don't know. I mean, I'll tell you, it's like what the picture you painted in terms of what I'm seeing is pretty much spot on. Like, it's not that the stuff doesn't exist; it exists.
Right.
It's just
nobody knows what the fuck it's worth.
Yeah.
From one day to the next.
Yeah.
Right. Yeah. Right. I got it. Yeah.
That's a big issue. I mean, look, I think there's some stresses in the system, but it still exists. It's not scarce. Let's put it that way. The other thing that's screwing things up, and I've noticed this because I'm on the phone like Sunday night. Tonight's going to be a real shit show, probably till about 3 a.m. And essentially, it's going to be like, okay, so where are these containers? Where are they? Oh, they're still here. Oh, they're at port. They're stuck at port. They're sitting on the factory floor. They haven't moved.
So they're in journey, and nobody knows where they are. Are they fucking with you because they want to jab you for a higher price? Or why would they do that?
They can't. No, because the ports are jammed.
Oh, the ports are jammed.
Yeah.
Okay.
And number two, the stuff's still sitting on factory floors because they can't get an allocation from these shipping lines. That's the other thing that's going on. So no allocations. Yeah, screw you.
So production's there and the inventory stuck. Is that what it is? At the point of departure, not at the point of arrival.
There's a big shortage of chassis, like where you put all the containers on it, and those underneath the container, those chassis are a big shortage. That's what I today it was in the news. I don't know if somebody heard about it, but there's a big shortage of those also. And plus,
Abe, isn't part of the issue is that the entire the entire aspect of logistics is sort of screwed up right now. It's really hard at the lowest level of just getting persons just to move product, just to do the trucks at this point. I was looking at some reporting, and there was like a 50% plus rejection on just trying to get placements done just to move product.
Yeah. That's exactly what's happening.
And one more thing, guys, just keep in mind, I don't know if anybody knows or not, but remember all the goods come from China to Europe, apart from through the airlines. It used to go through the Russia, so now the airline is already blocked through the Russia. Now also all the train also they are blocked. So the China train goes through Russia. Now that is also blocked. So there's a lot of supply constraint going through the Europe, and that's why they're expecting a lot of inflation high on the Europe side now. So that will take a little time, maybe another week or 2 weeks, and then you're gonna see a more hike on inflation in Europe.
But that's also you can even get a truck in China to move it to a train.
What's happening, guys? There's a whole bunch of things. One is they can't find people. Number two, the people that they do find don't want to do the work. I'm not kidding. This is now it's reached fundamental levels where people have essentially exited certain sectors and they don't want to come back. They really don't give a shit about coming back. So you really do have shortages of manpower because COVID or whatever the hell you want to call it, this whole last 2 years has been a shit show, and people have literally reevaluated how they want to live, what they want to do. And I'm telling you, a lot of these sectors, shipping, trucking, a lot of what I would call the dirty sectors, steel, for example, anything where you get your hands dirty and, it's tough work.
Oil rigs. I hear there's a big shortage in the oil rig patch.
Exactly. They've packed their shit and they've gone. And they don't want to come back.
Hey, Abe, I have a question for you. I know Andrew's got his hand up. Andrew, if it's a burning desire, it's a bigger question. You have something related to what we're talking about, because I want to change the subject to wheat. Andrew, go for it, and then I'll come back with my wheat question for Abe.
Thanks, Aces. Yeah, I was just going to touch on gold because we're close to 2,000, and the last time we were at these levels, 2000, I guess 2050 or 60 was the recent highs, but the last time we were at these levels was 2011, 2100 range. So I guess we really need to take that level out, but we haven't really seen any panic selling in the equities, any forced selling yet, and gold is a flight to safety. We may very well see that in the coming weeks to days. But just wanted your take whether you think gold will breach that level, that 2100.
gold gonna fly to the roof, and roof will you won't be able to even see gold, man, because we have a big problem right now going on. $119 trillion bond, they are vulnerable, and nobody gonna trust anymore those treasury bonds. So where you gonna park the money? Where you gonna hedge your? You gonna go to credit market? You gonna go to equity market? You gonna go to the Bitcoin cryptocurrency market? Crypto is not even derivatives anymore. It's not equity, so people can't put money into that. There is nowhere you can park the money. Big countries, they have tons of money. Where they're gonna park. So the only option is gold, guys. Gold is the safest bet would be right now, because this whole dressed up this bond market since 20 years is that bubble about to burst now. And I've been talking this every time live, and I'm showing the whole proof here. Every day I show the proof what exactly happening. So people who are dummies, those are big institutions and all worldwide, they don't know what exactly happening. They believe America is the best and everything is going good here. But it's what I call it dressed up economy here. We have a dressed up, and Europe is already right now in the verge of financial foundation has a crack on it, big crack there. And China is already 35% inflation over there. And China has a zero tolerance policy about the COVID. They are suffering more because it's a cycle, right? Logistic and all cycle. And then you lock down for 5 days, 10 days, and again you open it up. You think everybody, cycle doesn't work like that, man. Cycle takes a time. When you break the cycle of logistics and supplies, productions, materials, that takes a time. And that's why the China is suffering right now. I mean, if you ask me, China will have a hard time. And their inflation is way high, man. So we're gonna have a little hard time in terms of the equity market. We'll have a big trouble. I think worse than 2008, guys.
Yeah, I think, Andrew, to answer your question from somebody who has been in commodities for over a decade, and has been in the stock market for 3 decades, and has all the T-shirts and the war wounds and all the rest of it, including some of the gray hair. Is gold is going to break out here. When you start seeing gold spaces with 600 people in them every day, sell, okay? Because it'll probably fucking come back, right? Which is why I, had my concerns about oil at the 130. Listen, I'm a buy when there's blood in the streets guy. When I was buying gold in January and had spaces saying contrarian pick for 2022, I had 2 fucking guys in there with me. Okay. Now we got 175 people in this room. Okay. So that's just a barometer, and you'll be seeing me say sell gold when I see that. We're not there yet. And I'll probably be going back into oil because I love oil. But the thing is, so where it goes after it breaks out, who knows? Everything bubble, this and that and the other thing. But I think it's higher from here. It's going to take out this brick shit house at 1800 that's been sitting on it for weeks now. It's going to blow through that. So now, if you don't mind, I'd like to ask Abe a question about wheat. So Abe, listen, you and I were both business leaders, right? When we see a problem, we don't talk about the problem for 18 months. We spend 10 minutes understanding the problem and the whole rest of the time fixing it. So now, why in the fuck are these guys sending billions and billions, and every other day is another billion and a billion from this one and that one to the most corrupt fucking country on the planet, Ukraine? And God bless us. And I gave money to George's Kitchen there, because those are innocent people. And what Putin's done, if it's real, and I know some of it is, I don't know, all that shit, right? But what he's done, any loss of civilian life, in my opinion, is a non-starter. But so the thing is how come not one fucking person has talked about how to fix it? I mean, you got countries like Senegal, you got countries like Zambia, you got countries like Zimbabwe, who are huge fucking agricultural potential. Not a penny has been allocated to fucking fix this problem. I'm just curious, what's your opinion on that kind of story there?
Honestly, that's a tough one. I can tell you that in Europe, and it's probably quite similar in the U.S. too, the thinking has always been, Africa is kind of an interesting place, and you would certainly have a lot more experience than I would, but I can tell you, it's not, if you're talking about Africa, or if you're talking about, domains that are not necessarily centric in terms of daily business,
people have shied away. The only people that have gone to China, Africa, have been the Chinese. They've infiltrated all of Africa in terms of infrastructure projects and things of that sort. But I think the real issue is, what you're referring to is Ukraine. Why are they sending billions of dollars?
Well, why are they sending billions of dollars to Ukraine? It's 10 plus billion, whatever, billion, and not a fucking penny to fix the food problem anywhere else.
Because I don't think they give a shit about solving the food problem. I think, and this is me being very pessimistic, but hey, after 30 years and in my mid 50s, you don't tolerate bullshit much. I don't think they have an interest in fixing the food problem. I don't really think they give a shit. And the reason why I believe that is because as long as they're not impacted, they don't really care. I think the Ukraine story is all about geopolitics, and nothing to do with anything else. I think Ukraine is just is a country that got in the way. And for the large part, it was, again, I'm going to say something that isn't necessarily popular, but I think it was the West's attempt to destabilize the region. And they've done a really good job of destabilizing. The only problem is they're about to get a shit kicking themselves because, they're exporting inflation through various problems, either through the energy market or the commodities market, and now you've got food shortages, which is going to be a real big problem because Ukraine, as you know, produces a shit ton of wheat, and most of it's destined to India, Egypt, other jurisdictions, Europe, etc. And the other thing that people aren't really, have lost sight is that Ukraine actually makes a shit ton of materials, not finished goods, but secondary goods that find themselves into Germany. And now you're seeing factories in Germany that are literally cycling down from 5 days to 2 days to 3 days because they don't have any raw materials. This is a really, really big problem.
What kind of raw material are you talking about? What kind of raw?
I'll give you an example.
Mm-hmm.
Ukraine actually makes car parts. They make a lot of car parts for a lot of the majors.
Mm.
They make, I can tell you Porsche, I can tell you Audi, but Porsche shut down for 3 weeks. And they'll probably do the same thing again. Audi's in the same boat.
Mm-hmm.
So you're seeing a lot of inputs that are coming in from Ukraine or the region massively disrupted. And this is now becoming a real problem. I'm telling you, Europe screwed themselves. If I could short one region and short it like a champ,
mm-hmm.
I'd be shorting everything Europe. Europe's in deep shit, guys.
Wow.
They're really they're in deep shit.
Are you located in Europe?
Sorry?
Are you located in Europe?
I'm not located in Europe, but I'm in Europe literally every 2 to 3 months because all my business is in Europe, all the way to the Ukraine. Not so much in Ukraine anymore, but I mean that whole region, Turkey, etc., all of it. It's a shit show. But Europe, mainland Europe, that's importing all of this inflation is getting absolutely skewered. I said this in another spaces. I think 3 Aces probably will understand because you probably heard me say this. But on a year-over-year basis, do you know that manufacturing facilities in Eastern Europe right now, their energy bills have literally gone 2.5 times. So you could just imagine a factory of size of 5,000 people working, and all of a sudden on a year-over-year basis, unbudgeted, they're paying 2.5 times input energy costs just to drive, just to power that factory. I mean, you understand, this is massive. And so on top of that, you have major wage inflation. You have people that don't want to come to work for various reasons, okay? The whole mental health piece is another piece that's been sort of thrown underneath the rug. But the reality is, this is a really screwed up time in history. And, the big weakling, I think, the global weakling right now is Europe. And they are going to get the living shit kicked out of them, and they already are getting the shit kicked out of them.
And Abe, if I take a step back and look down on top of what you're saying and sort of like, not in it but on it program, it's all got demand destruction written all over it.
Absolutely, it's
Right.
got demand destruction
That's
written
right.
all over it.
That's
That's
right.
why every single spaces. I was talking to Dr. Anas today on the oil sector. The only thing I give a shit about, because I've been around this, 30 years of this, you know that it always ends because prices get too expensive. The inputs to production become to the point where you can no longer pass it on. And the moment you can't pass it on is the moment you start to see massive demand destruction. Because as long as you can keep passing it on to the next fool who's willing to pay for it, you don't give a shit. It's just plus this month, plus 5%, plus 10%, whatever. But there comes a point where somebody on the ground says, you know something? Fuck you, I'm not taking this shit anymore. Take it and shove it up your ass. And you'll start to see it because, if you connect all of the proverbial dots together, look, I'm located in Toronto, okay? And I see what's happening here, all right? It's getting to the point, I'll give you an example. So Toronto's on fire in terms of construction. When I see on fire, I mean crazy, okay? Here's the situation. When you have a guy, okay, earning a general laborer just to show up to your house, okay, give or take the average, they're earning between $500 and $700 a day cash. You got a problem here. You have a problem, okay? And you can't find people. So what's happening is that people are now beginning, okay, and now I'm talking about the consumers. Forget the consumer. What about large projects? Why? Because I see them. I see what's going on. You're seeing large projects are actually being shelved now, okay? Because infrastructure projects, large condos, 50, 60, 70-story buildings. Well, sure, steel's gone up 20% on a year-over-year basis. What am I saying? 20. It's gone up 100% on a year-over-year. All the inputs to production have gone crazy. And so people are saying, you know something? The end consumer can't swallow this anymore. So they start shelving the shit. And what does that mean?
We only want this shit if we can make money with it. If we can't make money with it, who gives a fucking rat's ass?
But hold on a second. But that's dependent upon you being able to get even the supplies for the buildings. The idea right now, the horrible thing right now is you can't even get the materials at this point for this building. You can't get the pipes. You can't get any of the components you need for construction because they're all now on month back orders.
You can't find shit. You can't find anything.
Really fast. If you were talking about Europe and energy, I think it's important for people to understand that the energy issues in Europe did not start when the war began. We were seeing major price issues going back to last fall. When it was coming onto the radar of the general markets, when we were seeing companies having to stop production in Europe because they couldn't afford the energy prices and they gotten priced out. We were seeing chemical companies that were doing specialty gas production, and they had to stop production because it was no longer cost effective. So I think it's important to understand that this didn't sneak up on us in regards to energy issues and pricing issues in Europe. This has been going on at least for over half a year now. Then it got on our radar when we saw it.
I agree with you.
Hey guys.
Yeah.
Hey guys, we appreciate all the great information, but we do want to keep this live space focused on stocks. And maybe if you want to get into some names that you're playing in combat to what's happening with the bond yields. If you want to maybe take it in that direction, we could talk about some stock names, and then we can bring it up on the live.
Oh yeah, that's true. Let's get out of the commodity right now. We have Joseph all day. We right, Joseph. So today let's pause for a little bit commodities and.
Well, actually, I was just what I was talking about was more sector based, and from sectors you can always get basically derive potential plays, but I thought it was important to understand that this issue regarding energy costs was not just something that happened at the beginning of the war in Ukraine. It goes much further back, and there's a much deeper issue in regards to energy costs in Europe and also at a global level. But I think it was just really important to just make it really understood this didn't just happen. This was this was not a surprise.
We know it didn't happen. What's happened is it's just become super exasperated now, and now you're on next level kind of contagion. That's what's happening. But
you know that. Everybody else understands that.
No. So let's go back to talking about bond yields, because honestly, guys, if that's okay with you guys, I mean, I'm just walked in. I think that's because I think that's going to be the big one that's going to literally do a massive shit kicking. Because I'll tell you, that's the only thing I care about is where the hell are the yields going, and where the yields are going will determine where the hell everything else is going. And
Abe, are you on a computer right now?
I am.
If you click on the post pinned to the live chat, Josh there has a chart up, and we're actually breaking down the charts right now. So Josh, if you want to bring up the maybe the 10-year.
Hold on, guys. 1 second. I do want to make a recommendation here. Tom has had his hand up for 20 minutes.
Oh, yeah.
Go ahead, Tom. Go ahead. Can we get to a couple questions?
Yeah, for sure.
Okay, go ahead.
So I was just going to say, if you want to keep your eyes on some companies here in Houston, the large pipe manufacturers to deliver all the pipe for the oil field, that they're going to try to produce as much as they can. But, with the commodity prices being what they are, I know we've already talked about that. That's the big bottleneck right now at oil and gas in Houston that I see. Is it's not really labor, it's more the equipment, it's more the pipe. But I'm keeping a close eye on all the pipe manufacturers and who can take advantage of this market and who can actually grow their business. And that's kind of paying close eye to that. But go ahead with the conversation. I just want to point that out.
Tom, I'm glad you brought this up because I wanted to ask somebody about this. I've been a CEO of 2 oil and gas companies myself, and when we were drilling wells, there was always an option to buy used string versus new string. Isn't there some way for them to go reclaim a bunch of used pipe, or is that just bad thinking?
It's probably not going to pass inspection, and insurance reasons. Drilling wells, you always want new pipe. We bought pipe one time that I think came from China, and that was the last time we ever did it because we had a bad well after we fracked it. The pipe bust seam, and we had to pull the pipe out of the ground and start over. So that's not good. But
you talking fracking or conventional?
That was a conventional vertical well that was 4,000 feet that we fracked at not the highest PSI. So this wasn't some crazy horizontal. This was just a vertical well that needed to be fracked. Yeah. And we had to sue over it. So I'm looking for more American pipe to hit the market. Yeah. People need to figure out that if I'm working at a pipe company, obviously, and you're publicly traded and that's your business, I want to see you grow your business right now. And it's not going to be easy with these commodity prices, but we got to keep cheap energy prices here in America in order to make this pipe here in America. That's going to be the biggest problem that I see that needs to be solved in the next year or two in order to make more oil.
Now, Abe, where's the steel coming from for the pipe industry for the oil guys? Is it Ukraine or what's the story there? Do you know?
I don't know. I don't deal with
South America, right? Tenaris, TS.
It's coming from everywhere, but I mean, it's the fabricators that I don't know who's making this shit. But I'll tell you, they're making it locally too because it's a massive industry in Russia. You gotta understand, all this stuff is being made somewhere. It's being made in Russia. It's being made in Ukraine. I just don't know who they are.
Okay. Hey, Jeffrey.
Can I ask one question?
Go ahead, Bill. Go ahead.
To the guy that was talking about the Canadian mining companies, I couldn't agree more. What's your opinion on the Canadian oil companies?
I don't know really anything about them. To have an opinion on individual names. My interest is I'm a CEO. I own my own company. So if I'm going to invest in any company, I invest in mine. But what I use the public markets for is to offset volatility and risk in the business cycle as it relates to my stuff. So I've never really trafficked long or short in any Canadian companies at all. So I know that Abe and his friends, they all have a long list of names and stuff. I don't really have an opinion there. My thing is if I get the big picture right, I can make all kinds of mistakes. I got the big picture right on oil back last year when this imbecile in the White House who can't spit a goddamn complete sentence out of his mouth killed Keystone. But for me, I've got my favorite oil stock. It's called Diamondback, FANG. So for about a year there, I kept saying there's a new fang in town, making a joke out of the Facebook, Apple, Netflix fang. I made 230% on that trade. But that's, to me, my favorite oil stock. Tom probably knows that company better than anybody on the call.
I'll just mention before myself, I was lucky enough that I saw all the mining companies in the territories. I saw where they were, what and saw. Was there actually better? Later on, I was on a Hertz, so I flew into all the oil companies. I flew out to the Kellic in the middle of the Beaufort Sea. And the difference between the miners and the oil guys was night and day.
It's unbelievable.
The miners, I thought they were just playing.
It's fucking embarrassing. The
was.
junior mining companies in Canada are embarrassing.
I totally agree. But the guys in oil patch, they weren't playing. They were very serious.
Yeah. Anyhow.
Hey, I'm not sure what any of this would mean, but I'm seeing more and more posts about home prices actually for sale going down, like in Ontario and in Canada. And it's scaring the crap out of me seeing home prices go down, but the price to build go up. And I don't know how that's affecting things. I don't know where that's coming from. But it definitely is throwing up some red flags from the mortgage, side of things. To see home prices drop in Ontario, suburbs and stuff, is just alarming. And I'm not sure what kind of pressures around the market are happening right now that are affecting that, but it seems like there's a tidal wave coming. And I don't want to be like the sky's falling, but if there's an expert that, can say, hey, this is probably what's pushing on that, it's definitely got my attention. But you definitely see the drop in mortgage-backed securities, but we all expect that right now anyway.
Oh, man.
Abe, I know Abe is the expert there, but Abe, while you're answering that, can you fold in this new permit increase in Ontario? I think they jacked it up 50% to 150,000 Canadian for a new permit thing. While you're answering that question, please.
Yeah. So, if you're talking about permits for large scale development projects, is that what you're talking about? Or per unit? Because
there was an article that I read about 3 or 4 days ago that said that the cost for a permit for a new building in Ontario is now 149,000 Canadian, up 50%. They changed the price. Did you see that?
No, that I haven't seen, but
All right, answer his question. Yeah. I'll go try to find it and put it in the net. Go ahead.
So Canadian real estate is something I've followed for 30 years. I actually built a statistical model when I was in business school back in 1992. So this is an area that I know really well. Here's the issue. You have to understand, the cycle started in Q2 of 1999, okay? That's when the cycle really began to take off. And it's been parabolic ever since 1999, all the way to 2022. And you saw pretty much a doubling of asset values in less than 5 years. Last year, on a year-over-year basis, Toronto alone appreciated a little over 30% year over year, which is absolutely insane, because from an after-tax perspective, your discretionary spend couldn't possibly manage any debt servicing at that clip. So, and this is something that I have warned and actually got skewered in January by someone who's a 5-year realtor, who clearly is delusional and doesn't understand what the hell she was talking about. But nonetheless, I remained somewhat reserved, and I essentially told them, you are going to see over the next 90 days, things are going to get quite real and quite ugly. And sure enough, fast forward, we're now in April, and you're seeing a dramatic softening. And what you're seeing is essentially what I would call a blow off top, where things just got super euphoric. Everyone was just buying shit. They were tripping over themselves in order to buy, a piece of real estate, which is absolutely insane. And now what's happening is this. There's two factors that are going on. Number one, if you're looking at the suburbs, completely different market from the suburbs as in GTA. And so a lot of employers are actually telling their people, you need to come back to work, or at least they're getting them to come back. So the froth is now dissipating in the suburbs, as expected. Okay, you'll see the same shit going to happen in cottage country too. So that's part of it. The other thing is, no one expected the Bank of Canada was going to move 50 basis points last week. And you at the rate and the clip that they're moving, they'll probably do another 100 before the year is out, without question. And so I've said, listen, the party is ending, the credit cycle is ending, you're at a 22-year bull run. What the hell did you expect? The after-tax portion and affordability in order to be able to support these asset classes is not there. The incremental and marginal buyer was the foreign buyer. They introduced a 20% tax on foreign buyers, and they also said that for the next 2 years, although we both know that there's loopholes around it, but nonetheless, they signaled the next 2 years, they will prohibit foreigners from purchasing Canadian real estate. Okay? Imagine that at a federal level, to make that kind of an admission when all along we knew that it was the foreign buyer that was fueling all of this shit. Okay? And so what you're witnessing is a bit of reversion to the mean. And I have to tell you, I mean, the sky's not falling, in my view. You're just seeing a dose of reality, because you can't have assets like this, okay, appreciate 30% year on year and believe that this is normal. I mean, let me tell you, I live in Toronto at $1.5 million. I wouldn't stick my dog in the goddamn house at $1.5 million. They're shitholes.
Hey, Abe, I live part of the year in Vancouver.
Yeah.
And you can see what the Chinese money has done to the real estate market there. And when you use the term prohibit, what do you mean by that? Like, they've already got the vacancy tax.
You can, as a foreigner, you can buy. That's what he mean to say, as a foreigner. But if you're a citizen, you can buy.
Yeah, I understand that, but realistically, to prohibit the foreign money coming in, I don't know if the federal government would want to turn away that kind of money.
Yeah, except for students. Okay, and this is the loophole, because essentially you're seeing this, and it's not just from Asia, it's from all over the place, right? I mean, holy shit. If you take a tour in one of the most expensive districts in Toronto, all right, you've got oligarchs that have got pads there. You've got steel magnets who've got pads there, with security on the outside. It's a shit show. I'm telling you this. Canada has essentially been put up for sale. I said this 10 years ago. Actually, I figured this out about 20 years ago that this shit was actually happening. And now it's become too big to ignore and too big to hide. And so the public is enraged because, the running joke in Toronto is this, and my wife constantly tells me to shut the fuck up because I'm going to get into trouble. She's, we're at a party, and the big joke is, yeah, you need $500,000 in order to exist in Toronto. Exist. That's the joke.
Yep.
Okay? So, obviously you can't say that in public because, $500,000 isn't exactly a little amount of money. It's not a ton of money, but it's certainly, it's a decent, it's a high-paying income. Let's put it this way. It's top 1%, for most jurisdictions. And so it has come to that. So what I'm trying to tell you is that the level of change, the rate of change in these assets over the last couple of years have been so unprecedented that they're sitting literally 2-3 standard deviations above the mean. And so any reversion back, in fact, was healthy. And if you ask me, if the government continues, if the central banks, and I keep telling them, stop looking at the Canadian central bank because they don't matter. You need to look at the Federal Reserve because they matter. Okay? And so ultimately what's going to happen is, if you believe, that's why in all my discussions, I don't give a shit what the Bank of Canada is doing. They don't exist for me. It's what is the Federal Reserve going to do? And if the Federal Reserve continues, with this, 200-300 bips, and you start seeing, the overnight rate hit 4 and 5%, it's sayonara, baby. And, 3 aces is dead on the money. I think that the next thing is that's going to roll over in the U.S., and it's coming, is going to be real estate, without question. And then you're going to start to see some real contagion, in Canada, because our prized real estate market has only been kept alive through the importation of immigration and essentially foreign capital flows. And everybody knows it.
Oh, we have a bigger problem in the U.S., man. I did not know about anything about Canada, but over here, man, if you ask me, oh boy, look at right here for the chart. If you take a look at it right here on your screen, if anybody can see that, look at that waterfall. It's like a straight down to the hill. So we have the biggest problem going on, and that is like $18 trillion market we have, and out of that, they'll be dumping around 35 billion a month. They'll be starting actually. Right now we have a 5.6% mortgage rate, and that 5.6 going to be 2-digit, guys. Okay, if somebody who's listening here, just give me about another month, man. You will be saying 7% mortgage rate here.
You're calling for 7+%. Listen, so now just from my gray hair, PTSD, fucking t-shirts in the closet, whatever you want to call it. My experience has been the real estate market leads the stock market by 6 months. The last couple times we've had a problem in the stock market. I don't know. Any idea? Any thinking there? Or you think it's
all the voters, the people who vote, the people who do the stock market and all, they don't go and vote. The people who go, to the vote, those are the people who have all the mortgages where they are paycheck to paycheck. Here in the U.S., it's 64% people. 64% people are living on paycheck to paycheck. Imagine right now we only have a 0.25% interest raise right now, 0.25%. Now in May 4th, they're gonna come out and say, hey, we're gonna have another half a handle, 50 points gonna go up. Imagine what would happen to the mortgage market. And banks not gonna lend because the inflation is already 8.5%. They're not gonna risk their assets. I'm giving money to the people at 5.6. So that's why right now mortgage gonna go to. If you take a look at it, I'm telling you, if you go and take a look at the history, when the inflation was 8%, 10%, 11%, the mortgage was 15%, guys. It has to be above. Remember, it has to be above the CPI data. Otherwise, it's pointless for the bank to go and lend money to somebody 7%, 8%. It's like a loss-making business.
But they're not going to take it to that. I'll tell you, and sorry to interrupt you.
Yeah.
There is no way that you're
That's why something's supposed to happen. It's going to happen. Something going to happen.
Listen, something is going to happen, but in order for it, that's like saying, you've got 850 bips of inflation running in the U.S. 8.5%. That's like saying that the Federal Reserve, in order to quash that, it's going to be 12, 13%. The problem with this, and this is something I've made very, very clear, is that there's a portion of this inflation that is indeed transitory. There's no question. We all know that. It's either supply constraints. It's all these containers that are stuck at ports. It's a whole slew of issues. Okay, and now Ukraine and Russia is just going to further exacerbate it. The problem is that they're going to increase rates. You're already seeing a weakening economy. All right, it's not weak yet, but you're starting to see it. You're starting to feel it that things are changing. The sentiment is changing. And as the sentiment changes, they start to increase the rates. I got news for everyone. It's still not going to change the inflation issue because a lot of this shit is being imported and it's daily business that will continue. It's just that you're going to be paying a higher cost for much longer. So my personal thesis is that the Fed is not going to go to 12%. The Fed's going to probably end up at 4.5%.
Yep.
Shit's gonna hit the fan. They're going to allow inflation to run hotter for longer, and they're going to essentially say, let's give them the narrative, the bullshit narrative, which part of it is true, but most of it is bullshit. Is that inflation at some point will revert back, and it'll be more transitory because we're going to iron out the supply chain issues and whatnot. Except for one big problem. That I don't think the Ukraine crisis is going away. So you're going to continue to get energy inflation. So you can get more importation of inflation through energy and byproducts of petroleum products, etc. And so guess what? You're still going to be stuck at elevated inflation, except now you're going to have a crushed economy in the process. And the equity markets can take a shit kicking as well. And what's happening now? We're at the beginning of earnings season. Okay? You already saw it with Jamie Dimon. Jamie Dimon came out and said it I don't know how many fucking times. We've got risk of recession. Things are unpredictable. We're not really sure, this and that. He's already telling you that things are getting soft. There's no question. So that's the problem that you're running into, and that's
No, but we have a catch 22
I
scenario
you're running into, and that's
No, but we have a catch-22 scenario right now. I mean, I hope you understand that what the people are listening here. We have to do. There are two things. One thing is the moment you try to increase the interest rate. Right now we have 0.25%. Now they are talking about another 50 point. If you look at on your screens, I've been sharing my screen, so if you can see that if they just go and a half a point interest rate, how much debt gonna increase right here? It's gonna be another $1 trillion, just another $1 trillion. We have a more debt going to increase right here on the brown area where you can see on your screen. If we go another one handle, which is probably by end of the year, probably we're gonna have a 2 handle. So if you look at it by the 2 year, if we go for whole year 2% interest rate, if they're gonna increase the interest rate, Fed rate goes to higher, then we'll be adding another debt, $3.7 trillion on top of what we have right now. So this is another catch-22 issue we have. The higher the interest rate you go to fix the inflation, where the debt gonna go higher and higher, and that's another mess we have.
I just don't think that I agree with you. My point is this: is that they're going to move. They're going to move rates in order to curtail. And I'll tell you what they're most concerned about. They're most concerned about wage inflation. Make no mistake. This is something that they can try to manage. Okay, is wage inflation, because wage inflation.
We don't have a wage inflation. If you ask me, we have a wage cut right now, and I'll exactly explain you right now. We have a wage cut, guys. We do not have a wage inflation. Wage inflation means if you have a 15, if your pay, say for example, you're getting like $10 labor, right? $10, $15 labor, whatever, and they are saying you are right now inflation is on a wage inflation is 8%, right? So if you no, for 5%, I guess, but we have the inflation is 8.5%. So that means it's called wage cut. You are already, if you so that's why pulling.
Yeah. Also, just for the broader audience, just want to make sure that everyone, just want to make a statement. Okay, stocks are leading economic indicators. They're supposed to tell you what's happening in the next 12 to 24 months. So nothing that any company announces in earnings season that has to do with their historical quarter, unless it's gruesome or something like that, is as important as the guidance going forward. And that's really what you're going to want to pay attention to, because just like Abe and I and others are talking about what we're seeing on the ground that's affecting our businesses and supplies and prices and all this other shit, that's what you want to be paying attention to with these companies. So, hey, Tom Jeffrey had his hand up around the same time your hand up.
Yeah, he's been asking.
You mind if we go? Hey, Jeffrey.
Yeah. Hey,
What's
guys.
up, bro? How you doing?
Awesome spaces as always. Tom, just to let you know that Tenaris TS is the largest producer of oil and gas pipelines. So it's in Mexico. So I don't know if it's close to America, but yeah, they're the biggest one. And then I got a question for the rest of the room, and particularly Abe, because I love his thought process. With China and this COVID crisis, with just 3 deaths, do you think it has more to do with importing inflation to the West? To me, it just seems pretty strange. So
absolutely.
I'm wondering if they're trying to hurt us via inflation, add more inflation on top of it. Okay, thank you.
Absolutely. It's the weaponization and the exportation of inflation. The Americans made one blundering mistake, in my view. I couldn't understand how a superpower essentially hollowed out its entire economy, okay, and they basically said, sure, let's just hollow out the entire Midwest, clean it right out, and get rid of these factories, get rid of traditional manufacturing. They exported all of those jobs to Mexico, China, Asia, wherever the hell it was. And at the end of the day, now they're stuck, and they're looking at each other and saying, we got completely screwed. And the truth is they did. And so now it's coming home to roost. And so guess what? The Chinese are not stupid. Listen, guys, I've said this before. This is about a global repositioning. This is what it is at a macro level. What you're seeing is not a coincidence. This is global repositioning. And the Chinese, want to assert themselves for the next 50 to 100 years. And I'll tell you what they see. They see that the U.S.
is looking weak in the global stage, is looking rather feeble, if you will, in terms of just the way things have been managed. I think they view the president as being weak, and as a result, they're taking advantage of everything. You've got 8.5% of printed inflation. We all know it's bullshit. We know it's probably 15%. And guess what? It's going to start to skewer the middle class and the lower classes. It's going to start to hurt. And the Chinese are very happy to just say, look, no problem. We'll just keep exporting more of this bullshit. Why? Because the U.S. is the largest consumer in the world. And they have been programmed in order to consume. The whole 70% of the total GDP in the U.S. is consumption. So guess what? They're essentially saying, like, are you kidding me? Like, when I heard this, that they're shutting down, Shenzhen, Shanghai, and a lot of these ports, I'm thinking, what the fuck is going on? Like, there's something quite sinister going on here. Like, there's something not right about this.
I totally agree with you. And the fact that they were stockpiling pretty much every commodity for years, it almost seems like with Russia and now China. So Russia hits us with the commodities and China hits us with everything that we purchase and buy. It just seems a little bit too coincidental. I think we're importing inflation from both countries, and I do think it's an economic war.
Hey guys, I don't know if we covered this yet, but I just saw this here. Chinese GDP year over year actual 4.8%. Forecast is 4.2%. Previous 4%.
Yeah, and their unemployment is the highest it's been in 2 years. The data's coming out of China now, as fake as it is. Sorry to interrupt.
So what do we believe? Do we believe that they're starving and they're running through their stockpiles, or they're actually prepared and they're driving inflation higher to the west? That's kind of my question, Abe. Thank you.
They've bought everything in sight, guys. They've bought everything in sight. Listen, the Chinese play the long game. And I'll tell you the difference. It's very simple. Look, I live in North America. I'm part of the same culture. We can't handle adversity for too long. Okay, we get pissed off if I can't get the right coffee in the morning. Okay, all of a sudden you're going postal because you can't get the right coffee or you can't whatever. We have been accustomed to a certain standard. It's a completely different animal over there.
Breaking news, guys. Breaking news. China to deploy most advanced fighter jet to disputed East and South Asia, South China Sea.
Okay. So what do you think is going on? I've said this, and it's not popular. All right. And look, I live in North America, so I have a vested interest for North America to remain strong. I've said it before. Our best days are behind us. It's just the way it is. Empires come and go. That's just the way it is. And Three Aces can tell you a hell of a lot more, dealing in Africa because the Chinese are there. They've been there for the last 40, 50 years doing a whole bunch of infrastructure projects, and they didn't do them for nothing. They did them because they knew that they couldn't pay, and they're going to end up setting satellites all over the place. It's all about minerals. It's all about raw materials, and they're going to get their piece of the action.
They're positioning themselves for Taiwan. They want Taiwan. They keep flying over Taiwan's airspace.
Can I tell you something? They're going to gobble up Taiwan without shooting a goddamn bullet. You mark my words. It won't matter.
I mean, what? Look, guys. China supplies Taiwan with all their raw materials. Why? They don't need Taiwan. They just shut off the fucking supply of goods.
Exactly.
I mean, it's just it's just that simple. But what's really happening here? I don't want to hijack the call, so we can talk about it on another spaces, not tonight. But with the whole thing that's going on with Davos, Russia, China, North America, there's a bigger picture there. And if you guys want, I can take a good hour or two to get into it. But again, the boys here, they want to talk about stocks, so I'll yield the floor back to the questions or however the hosts intend on moving the call forward.
We will take some questions, guys. Now we've been talking a lot, so I think Sigma, if you want to take the stage, and if anybody has questions about anything before we sign off, probably in a few minutes or so.
I just want to thank Three Aces and Abe and Joseph and everybody else who spoke and brought some of this really important information to the space. Thank you so much.
Thanks.
Yeah,
my pleasure, bro.
Thank you, everybody. And if anybody has questions about anything related to stocks, please.
I think Tom's hand was up. up, and then Joseph had his hand up again. If anybody else in the audience has a question for anybody here or something, now it sounds like the boys are getting ready to wrap it up in a few minutes. You may want to come on up now and get in line. This way we can go through some questions before we call it a night.
Yeah, hey Abe, I could listen to you talk all night, Abe. You practically read my mind when you speak. It's great. It's like I don't even have to comment because you're saying exactly what I'm thinking usually, right on, and put it very well. But I'm looking for the real estate prices in Texas to finally come down. But I'm afraid there's so many people moving here. The demand for real estate's not going to allow that to happen. Unfortunately, this is one of the places in America where people are fleeing to, kind of like Florida. But when we do see real estate prices maybe start coming down here in Texas, then we'll really know that it's, by then we'll probably be clear in the thick of it. But I'm really looking to see what happens here in the next 6 months, 12 months. Thinks the world's going to start reshaping up, just like you say, in reference to China. They're going to keep steamrolling across the world, scorched earth campaign, economic warfare, whatever they need to do. They won't even fire a shot, and we're going to wake up 5 years from now. The world is going to be a different place. But great room tonight.
I have a question. I was from China. Okay, I see you guys talking about like inflation and commodity price, and you're Canadian, like a house price.
You live in China or you live in US? Where do you live currently?
I live in US.
Okay, go ahead.
But I was from China. Okay.
Yeah, I understand. But you have a connection in China currently, right? You have the information.
Yes,
Okay.
Yes. You think about this now, like American government will start a new Cold War. So now Russia is in. Okay, but Russia looks like is only a small fraction of GDP globally.
Mm-hmm.
But China is 17 or 15 or something like that.
Mm-hmm.
I would say if America will start a new Cold War with China, all those things will be solved, right? Like this commodity price, or even like the house price or everything, because you will be free. So maybe China has like a 20 trillion US dollars in the Western countries.
What do you mean by Cold War? Could you
I mean, this may be happen. You see here, like America definitely want to start a new Cold War. So the new Cold War will solve everything. So what do you guys said? But I want.
No one wants a war with China.
No. Let me read his mind though. You know what he says, Cold War. Like, could you describe in a Cold War in which are the points you thinking as a Chinese?
Yeah,
he's talking about a Mexican standoff.
Okay, we can see like now America has our Western countries has the Cold War happened already with Russia, right? We kicked off Russia banks out of SWIFT and banned all the this imports like from Russia or export to the high technology things.
I see, gotcha. Yeah, you are right actually. Yeah. So what happens is there are treaty between the different countries, right, and all. So what happens is the way right now Xi Jinping is what he's thinking is he's trying to keep his both the leg in a shoes with America as well as in Russia also. But then the Biden made a call to India, Biden made a call to Chinese and said, hey, listen, our goal is here to make sure that Russia is isolated. Just like, if you remember, Venezuela was the world's richest country. If you remember, the Venezuela was the world's richest country, now the poorest country in the world right now, right? Just like the Iran, we sanction Venezuela, we sanction Iran, we sanction many places happen. Now what happened is Russia is going to be one of them, because Russia tried 20 years and we also tried to to fix the Russia, but I guess the Putin was not listening. So with the sanction what we have put it on Russia to corner, it takes a little time. You got to give about a year, 2 years, 3 years, and then slowly you will see the power of Putin will be over. It does not happen in a month. So right now what you guys are thinking about China, I do not think so. I do not think that anything like that going to happen, that hey, we're gonna go and do the Cold War. Yeah, there will be a little, there's always in between the country when the one superpower, another superpower, and they try to benefit each other. And I think that's what's going to normally happen, because China does know that all the money coming from US, because right now in the world, highest inflation we have is in China. 35% inflation we have. The biggest financial foundation crack in the whole world we have right now is in China. But China is right now, what is doing? Printing, 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 and giving it to the people. All this grab real estate, wherever they see problem is, go shut your mouth and just take this money and just continue what you're supposed to do. That's what China is doing right now over there. Is you so
No,
what
actually, it's already the war is already started. Okay, the first actually is already started from even from Trump administration. Okay, so technology now is you see you ban Huawei, right? You ban all the chips like import to China. Technology. You even Chinese student. MIT doesn't admit even one Chinese student. You understand that? Even no single any Chinese.
Because now the America came to know that Chinese used to come here and study here, and they go there in China, and then they do advance.
Becomes too big, and then that's technology. Technologically, like that's started, and then financially, now they will be delete all the Chinese companies from New York Stock and from Nasdaq.
No. So we're not gonna delete like that. But look, you are 101% right now. What you're explaining to me, because look, what happened? There'll be no headline anywhere. Nobody government gonna come out and say we're gonna do this. But bottom line is if you look at all these Chinese stocks right now, Baba, Neo, and all. But you have to also remember, Chinese government does not want Baba to be celebrity. Chinese government does not want Neo to be celebrity. Why? Because the moment the company becomes the celebrity, the power of the government goes down. The Chinese government doesn't want, because those are communist politicians. They do not want any power to give it to the company. That's why what happened to Baba? Why the Jack Ma was lost in pound bin, right? Because he was trying to open his own financial system with this. Hey, I'm gonna lend the money. The Chinese government said, no, how the hell you gonna go ahead of me and lend the money? What happened to Jack Ma? Shut down, sit down, and lock him down, hijacked, right? That's what happened.
Yes.
So
yes, but that's Chinese internal policy. They want to maintain their control, right? Like Xi Jinping, Communist Party, they want to control. They want to control everything.
Exactly, you're right.
Cannot play. So
They want to control everything, and I think this is what happens in America. Is completely free here. People know, over here people do not want to go to the work. In China, people have to go to work. Otherwise, the government will come to their house and say, hey, go to the work. Over there, they can rip it. Over here, we can't here. Over here, people wants to sit down and watch a movie and play games and play stock market here. Over there, they want to work harder. That's the difference.
Yeah, okay. Regularly, the American people cannot compete with Chinese, because Chinese they work
like a dog.
They work 12 hours a day, 6 days.
I've been traveled to several times in Chinese, man. If you go to China.
Hey, Josh, hang on one second. So, Mike, I'm just curious. I'm starting to see the videos coming out of China. Is there any chance that the Lao Baojing over there takes the CCP out, or zero chance?
Zero chance.
Zero chance. 100%.
Chinese is, China has a so long history, right? That history is everybody is be trained as a slave. They follow things. Chinese in America, they never causing problems, right?
Yeah.
They just work hard. They just save money. They just they never even they are treated unfairly. They didn't speak out. Same thing with all the Chinese. So,
Chinese government doesn't want to be exposed to the Western world. They just want to stick to the Chinese, everything Chinese, so that way all the people, they don't get exposed and they can raise their voice. Just work here and die here, and that's it.
Yeah,
that's what they want.
Okay. You don't know. I don't say the regime change in China. No way, no chance. Okay, but what I'm worried now is okay, if America want to start a new war, from my understanding is Ukraine is a trap for Russia, and Taiwan is another trap for China. America will be induce these two countries to take them and then maybe start a new war as an excuse. Now, Russia is in, now next will be China. So the war already started technology and now financially. Now next will be trade. So I don't know, if quickly, or if Cold War is cut off immediately what is the effect to American stock, American economies.
So Mike,
It's a bloodbath.
Cut off,
It's a
if
bloodbath.
cut off completely, no
It's a
even like
bloodbath.
Yeah, exactly.
It's a bloodbath. If something like that happens.
So Mike, let me ask you one quick question about the Chinese. What do you think about the inflation over there? How's the inflation over compared to US and China right now?
inflation there is not a problem. The big problem is the high price of the house. People, the housing price, people cannot even. So now, like the young men, they don't want to marry, and they don't want to marry again, like because they. Chinese families, you must have buy a house and then to get married. If you no house and no marriage, so that's the big problem.
But Mike, isn't one of the difference between China and let's say the West is the fact that you have price controls in China, so that you're not going to have the level of inflation on certain items. You might have though access issues.
You think okay? You see, Russia has the inflation now. Russia has low inflation, not big change. Because my fiance is Russia, so no exchange, like almost no price. So that they have all control of their currencies. So that's no inflation. I don't think they have a very big. But but everything now goes up because like. The house price is very high, and then the labor cost is high, and then push everything goes up. But now China locked down the Shanghai, Shenzhen, the big lockdowns. So this will also cause more broken of the supply chains. They causing more problem. But that's a joke, right? Now they will lock down half of China. They didn't lock down like a year ago, right? Now this one. No big sequence now the virus, then they locked down. But because the Chinese President Xi Jinping make this decision, they know this decision is wrong, but they will not change it.
Mike, I got a question for you.
Yeah. Okay.
All right. So Mike, you have family in China, right? You'll know more about that leader. So my question to you is, I have three questions. My question to you is, that the leader in China, how do you think he's going to hurt us financially? And when he probably wants to take over Taiwan, right? Wait, hold on. How do you think he's going to take Taiwan without physically going to war? And like how you know the president or your family member knows the president? They'll know us. They'll know him better than us. So can you give us make it very simple what you think his plan?
Three aces answered the.
If no by force.
No, let the mic go.
Never take Taiwan. Taiwan will never be reunited with like mainland China if Xi Jinping is in power. So that's why if you read the news now, America is pushing Taiwan to be independent. If Taiwan is independent, then China must be taken. Then there must be war. So you say like now the senior officers from America now visit Taiwan. It never happened. It never happened before. So now they will be. That's what I said. Taiwan is a trap for China. If China will behave, do something, acting on Taiwan, then the new Cold War start. That's the excuse.
Right.
Biden, if start a new war, he must give an excuse to American people, right?
Man, China needs US, guys. Dave, remember China needs US because they need US dollars. So China, though everybody think about that they're gonna take the Vietnam, but the problem is the way right now all the sanctions are happening around the Russia. China think, man, if one single sanction happen to China will be broken to the pieces, right? Because they need US dollars. So I doubt now the way sanctions US are now putting, and particularly Biden, he doesn't think second thought. He said, hey, if you do this, they can exactly see what happened to Russia. Same thing China were gonna think, man, it can happen to us, then they'll be broken. So they don't trust Sri Lanka, they don't, right?
Yeah. This Chinese, this Xi Jinping, they don't care. These people people, they don't care about like a regular trade or something. What they are afraid of is the section, individual section. You know, they put all their money, their children to the West. They have maybe how many like allowers or like private bond kids they are living in like that's what you said in Toronto, in Vancouver, in LA. They buy all the houses, buy cash, those kind of. So they are afraid of those kind of things. Their senior officials, they send all their kids to America. So like my classmates, all the children, all their children, my classmates, they study here, they live here in America. They give money, they give all the money. They are very afraid of these individual sections. That's they are afraid of.
But Chinese come and study here and they go back to China. That's what I've been so far I met so many Chinese and everybody say most of the people the Chinese they come here, they are so rich, so powerful, they can get into any college here, including top notch college. They come study and they go back to China. That's what I notice here. Now, I mean, this has been happening because in the US, what was happening in America, all the colleges are business, super duper business. They care about the money. Hey, somebody's giving me $100,000. Okay, then if somebody who's living in US, he's giving $50,000, they're not gonna give it a $50,000 admission. They're gonna give it to the guy who is giving $100,000, and they're gonna jack up their fees. And that's what is happening. And that's why Chinese were paying big money over here to study. And they study here and go open a company over there. And that's what's been happening. It was been happening, and I guess it's happening.
I guess we're not talking about stocks anymore.
Well, I was about to bring it around to that.
That's what it is. Anybody like tell give product like next few weeks like how the stock we can sell or we just buy,
Well, so Josh, I sold all of my Chinese holdings. Any company that was Chinese based, I sold them all. But I am just a retail investor, right? I'm not a market maker. In your opinion, Josh, how do you think the market makers may react in the future with this Chinese, threat or Chinese relationship?
Oh, okay. So absolutely. And when it comes to Chinese stocks, no matter what kind of company it is, no matter what technology they are using, for example, many, as you know that we are always live since morning 9:30 to 4 o'clock, 5 o'clock. I go live every day. Market open. I'm live streaming my screens, right? So if you guys are here and if you do stock trading and you want to learn about the stock, I am always live, constant 7-8 hours live and streaming my screens and teach everybody how to trade here. So I teach free. Live, YouTube's, Discord and everywhere. So to answer your question, Sim, so what happens is now US government, just like Mike said that in US, the Chinese Cold War, US Cold War, now we don't have a Trump who's going to tweet and he do his, the way he used to do. We have now Biden, what he thinks is, man, if you're going to do this, then we're going to do this. And what? It will be silent war going on, Cold War going on. So we have a three entity above retailers. We are all retailers here who's listening here, right? Above us, we have all the banks which are market makers. And above the market maker, we have the Fed. What Fed job is to control the demand and supply. Above the Fed, we have the politician. Whose politicians are? All these congressmen and everybody, they who create the law. So what happens is they are the one who go and tell the Fed, hey, I want this. Though Fed is an independent entity, no connection with the politician. But as you all know, we have a lobby here. We have the things that are going here. So when politician says that, Fed has to continue that. Now what Fed does is, Fed define the rules, right? And they have all the market maker, all the bank, they have all the leverages, they have all the benefits, right? They go and do exactly what they're supposed to do. So they have been told that, hey, make sure that all the Chinese company, because their goal is, remember Huawei, we were fighting with the Huawei many years. So if the moment you try to make those companies celebrity, like we all social media, Neo, XPEV, Kathy Wood comes on XPEV, and one day Neo, and that's it becomes celebrity. So market maker job is to hammer them down. So the moment you hammer down, put them into the rabbit holes. And that's what market maker doing. But they're not gonna come out and say why we are doing this, because they can see their balance sheets. They can see that because China, look, all together, guys, America has created the name around the world. Everywhere is a brand. America believes in brand. What world knows about China is not brand. It's about no quality. Just go and dump. That's how things are. So world around across, people not gonna trust Chinese product, even though it is excellent neo car would be, even though this would be, but the way we are very very polished. Western world is very polished to how to sell the product. We create the name, we ask that price, we create that thing. They, it's all about brand here. So people world will trust US, people will not trust Chinese companies, and we all know that. So eventually what happens is Neos and all these companies, no matter how great technology it is, there is so many companies who they can have a great future, great bright future, bright technology, but they need a platform, guys. There is you know what I mean, like, there's so many superstar around the world, but they need a platform, guys. So platform is America, platform is not China. China is a labor country, and they will remain, Asian country will remain as a labor, and they want that. Why? Because the politicians are like that. Politician wants their people to be labor. Politician doesn't want their people to go and become a superstar and branded company. The moment they become superstar, the politician will bring them down. And that's what is happening, because over there is all power, superpower. Over here in Western country, we are here in US, we don't have superpower here. We have freedom here. So this is the good thing about here, and that's what's gonna remain here. And that's why world will not like it. And in Europe, we are united here. USA, Europe, all the Western world, they will not like China. They will not allow. Forget about it, liking, not liking, guys. It's not about like. Remember, guys, Bitcoin you like, but do you think Bitcoin can have a space in this world? No, right now would not. If there are, I was the first one to tell you that Bitcoin will not be easy, guys. Not be easy. Even the best product on earth is Bitcoin right now, but Bitcoin will not achieve the thing what, because politician, guys, politics is the biggest things here. World, anywhere you go, in politics is about power. It's about the power, about the lobby, about so same thing applies to here also. Chinese company, we won't be able to come out. Only thing, we are holding the hopes. So people who are trading on Chinese stocks, they are holding the hopes that Neo go to $100, $20. If you want to really know about the Neos and any company you want, come out here and I'll exactly nail it down, each and every company and where they are going and how far they can go, and where if they're going to go to rabbit holes or they're going to go to the sky, to the moon.
Fast question for Aces. So Aces, you were talking earlier about the different phases of market.
Yeah.
So my question to you, my thought to you is, when you talk about stocks, what?
No, I'm sorry, Josh. That was fucking epic. I wish I were to record. Oh, it is recording.
No. Yes, this is every day, man. I go on.
Absolutely fucking epic, man. That was a rant, bro.
He does us these favors every single day, all day long during the market trading. He is amazing to help us. He's stopped me from getting wrecked several times.
Hey, Josh, you do these spaces during the day like this?
Oh, yeah.
I gotta follow him.
We're in here 8-9 hours a day.
This is fucking unbelievable.
I'm gonna change this world, guys. Watch out. I like to change.
Hey, Mike, you gotta come in here too. And I love listening to you two go at it like that. That was fucking epic. Sorry, guys, if I've been dying over here just laughing at this. This is great. No, not in a bad way. I'm just incredibly entertained and in a good way, not in a bad way. Go ahead.
Yeah. No, bro. So Aces, my question to you is, we were talking about the different cycles of the market earlier, and one thing you were talking about is, for example, real estate. But my question to you is this: do you agree with me that basically we shouldn't look at real estate as just one big solid block any more than we would look at, let's say, equity positions in stocks as just one big solid block? We should look at the specifics and the sectors. And in regards to that, maybe for sectors you're talking about markets. Maybe specifics you're talking maybe about a different component of the real estate market, like the price points. Because when I look at how stocks have moved and how they reacted to the corrections, you see radically different changes that happen in equities depending upon what the stock was. So, for example, if someone had an investment in, let's say, Procter & Gamble, that moved very differently than if someone had a position in the UPST, or let's say...
Well, I mean, so first of all, if you look at the last couple of real estate problems we've had, there are blue chip, parts of the real estate market, just like there are blue chip, parts of the stock market that they don't get wiped off the face of the earth like some of the garbage like ARK or like Vegas, in the last couple of,
cycles. But, by and large, real estate is unlike any other purchase that anybody makes. When you go to buy a washing machine and dryer, and you're sitting there, and the guy says, okay, here's the $1,000 version. It's got this set of features. Here's the $1,500 version. Got those set of features. And here's the $2,000 version. Got this set of features. You sit there and you go, well, I don't know, blah, 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 blah. All right, give me the $1,500 one. Right? People don't do that. They go, I can afford $3,000 a month. Go find me the biggest fucking house that you can find. So when when interest rates are going down,
Ace is just really fast, really fast. What I'm talking about or focusing on, I guess, in my mind, isn't buying your house. I'm talking about more about the REITs, the mortgage trusts, the property trusts, the investables you can do. So when we're talking about what will impact, excluding a personal home, and we're looking at, let's say, on the investment side, maybe understanding that as we're looking at how the real estate, the greater real estate market will impact us if you're an investor, that maybe it means also going back to some of the fundamentals. In addition, of course, to if you own a property to own.
There's a guy called Donut Shorts on Twitter, and he's a very, very smart commercial real estate guy. Listen, I think it's the Marriott or the Hyatt in Times Square in New York. Just sold. It's the marquee property there. It's been around for a while. It just sold for 50% of the price that it last traded at. If you look at New York, San Francisco, LA, Chicago, I think 40% of the Miracle Mile in Chicago is vacant, the retail. I was in Santa Monica about 6 weeks ago. 20-30% of the building of the retail space in Santa Monica by the promenade was empty, and the restaurants were empty. Why? Because it's like checking into a goddamn government building to get a slice of pizza or an ice cream cone. They want a temperature check, show your papers, got your mask on, be a good slave, be a good boy. Go down an hour south of there to Newport Beach. There's not one iota of COVID fucking compliance at all, nor has there ever really been. And those places there, you can't even get a parking spot, to go get a sandwich. So, you got it. I mean, you look at the population migrations, anybody. Listen, my 3 kids were born in San Francisco. Okay. I'm a hippie, right? I mean, I was absolutely in love with San Francisco in the 90s and stuff like that. It was a great little city, no traffic, everything was cheap. The food sucked back then, coming from New York and stuff. But, now, fucking forget about it, man. I mean, it's a no-go zone. They have turned that place into a dump, right? And many parts of New York and stuff, too. So, yeah, I mean, listen, I'm not a real estate expert. I'm not going to pretend to be. But, there is a common sense element to this here. I don't care who you are. Who in the fuck wants to walk out of their apartment, whether it's $2,000 or $20 million, and walk over guys shooting up heroin and littering and going to the bathroom on the floor there? And that stuff's been going on in San Francisco for well over a decade.
What we're talking about basically is some of the issues we're seeing in the blue cities.
Yeah.
Be that Los Angeles, San Diego, San Francisco, Portland, Seattle.
San Diego's all right. I mean, San Diego, I was in San Diego maybe 5-6 weeks ago. The fucking restaurants close at 8:30 at night on Friday night. I don't know where they come up with that stupidity, but you don't have those same problems you do in
Well, 3 Aces, like I'm right here on the front lines. I was surprised that I could walk down the street and see people shoot up or pass a pipe right in front of me on the sidewalk. It blew my mind.
What city? In San Francisco?
No, San Diego. And I'm originally from Orlando, and it blew my freaking mind. I'd never seen anything like that ever in my life. And then I have a friend who actually works for a cleanup crew, and they go downtown and do cleanups all the time, and he stays fully employed, and so does his crew and multiple crews. So there's a problem, like, has been expressed so far in this space, But what I do know is that we've got this great community from spaces to spaces to spaces. 3Aces, I've heard you talk so many other places. I've heard other people who've come in here talk in so many places. We've got a really strong, growing community here that's helping each other out so that we don't make mistakes, so we stay aware of what's going on in the community, and I think that's wonderful. But I do see what's going on right in front of my face with the markets, and it comes to bring my question is, where do we find a safe haven for our investments and our funds when we know that we're getting wrecked if we keep cash, and that inflation is being, marketed to us as if it's 8%, but really we're probably looking at a realistic 16% inflation, and they're not talking about how unemployment is right around the corner and stagflation may knock us right in the face. So I'm looking for places to start putting my funds now to protect me from stagflation, and I'm no trading expert by any means. So you and Josh and everybody else's guidance and input is so precious to me, so valuable to me, and I'm so grateful, guys.
You're welcome.
Yeah,
I mean, it's a tough investing environment. The only thing I would say is stay away from anything that's leveraged, which gives you no fucking real options besides maybe gold, physical gold, and cash. But hey, guys, we got a rock star that just came in. Hang on one second, Jeff. Then you go up. Hey, Gordon, I don't know if you came in to listen, but if anybody's got any Tesla questions, Gordon's here. Johnson, who is regularly on CNBC and is an absolute fucking genius when it comes to Tesla. If he wanted to raise his hand,
Gordon, if you want to come up and speak,
at least say hello. He doesn't always like to say hello, but China just reported a bunch of numbers. Gordon's got a big edge there, and then Mike is here. So anyhow, Gordon will send. Sigma, if you can send him.
Yeah, I already. He requested. I made him speaker.
Jeffrey, go ahead. You're up next.
Yeah.
Bro.
So seeing Gordon in the room and then MG over there.
Yeah.
I'm sorry. I'm bringing it back to the markets a little bit. I love when MG brings out his advices. I'm just curious.
Also a rock star.
I'm just curious if you guys see anything that we don't see. Right? Is there something under the water that the markets haven't seen yet? Is it these commodity shops blowing up? Is it credit default swaps somewhere? Is it something in Europe? What do we not see that should be scaring us? Is there something out there?
Gordon, let's send that one off to Gordon and MG. Hey Gordon, what's up, my bro?
Hey guys, if you don't mind, can I just listen to this one?
Absolutely. Go ahead.
Thank you.
Yeah. Hey, MG, I'm not going to dox you, but MG
Hey, how you doing?
The supercomputer level brain. Hey, MG, what's happening, bro?
Hey, good to hear from you, man. I've been listening for about the last 45 minutes. This has been incredible, Josh. Very entertaining. Your rant on China is pretty epic, dude. We definitely need that. We definitely need that put in some sort of place for posterity. No, look, I've been just kind of perusing kind of what's been going on with FinTwit, DMing people back and forth. What I've noticed is people are incredibly bearish going into this week. So if you look at the people who are kind of, the futures traders, focusing on indices, focusing on, individual names, I'm just hearing a very bearish tone across the board everywhere. The biggest concern that people have is whether or not the big tech, mega tech guys can actually hold their levels, because everything's kind of trading at like the edge of 50-day, 200-day, whatever you want to look at. March was just like, rah, all the way up. April has just been the opposite direction. And so right now people have, and this has very little to do with the valuation and a lot of the kind of macro type of stuff that we talk about. But, I just want to kind of ask people, what, is this just my sample, kind of sample error on my part that I'm seeing a lot of negative sentiment here, in which case it might be slightly positive, but, or am I seeing something different?
Did you see the S&P futures open interest go to 43 billion? Here, I'm going to post this in the nest.
Hey, MG, I'm just going to throw this out there. It's complete confusion. We don't know which way is up, and that's what it's been. A lot of hesitation because you don't know.
Yeah, I mean, I think that that's the part that's really challenging for people who are not quote unquote value investors. I think, you know, if you have like a thematic thesis and you kind of believe it and you believe in it into your bone, it's much easier to hold on through a name when it's going sideways or down. I mean, that's why, I analyze with the best of them. Started out, I'm formerly a math and stats guy, and kind of I can get in there with the best of them. But the people that I've seen that have just absolutely crushed it in the investment game, from the guys that are sort of like near-term traders to the long-term investors, it's about 70-75% psychology. I don't give a shit how smart you are. I don't give a shit how much you think you know. If you don't have the psychology for this game, you're done. And the most important question always is, why do you own something? If you feel like you understand something, you will be able to hold it when it goes sideways or down, because every strategy has a period where it goes sideways or down. And so you just need to, in your mind, to have that sense of like why you own things. And, you know, some people have very strong beliefs in certain technical indicators that they see, you know what, fuck it. I've seen this pattern hundreds and hundreds and hundreds of times over my years. I've been tape watching forever. I know this is going to work for me. And other people, you know, I know how to read balance sheets and income statements, and I have thematic ideas on certain industries and certain businesses that can kind of generate cash flow. If I see good management, buybacks, things like that, I'm all in. And, you know, I've been in situations where I bought things 50% down, and, you know, it's been like 5-6x from there. And that's me. But, you know, so it's just interesting to kind of like be on FinTwit, because you got so many different varieties of sort of investors out there. And just near term, I just noticed kind of like going through my timeline, people are just so negative right now. So I just wanted to kind of bring that up.
But MG, it makes sense to be, I wouldn't say negative, but I would say apprehensive, because we know what the landmines are, at least some of them at this point. We all know basically that interest rates are to go through the roof this year. We know that basically inflation is still out of control. We know that the Biden administration is not industry friendly, neither is the Fed. So, I mean, we know there's a war going on. We know there's still basically a pandemic going on. We know there's supply issues. We know that it would just take one little sanction from Russia and stopping energy flowing into basically Europe to have that entire economy just seize up. So, yeah, it makes sense to be apprehensive right now, I think.
Okay, but here's the issue with that is that most of those kind of things haven't changed. Certainly not from like just 4 weeks ago, right? And then second of all, there is actually, even within FinTwit, a huge amount of divergence with regards to whether or not interest rates are going to rise. So, for example, if I were to ask you guys, you know, are interest rates going to be 4% at the end of the year or 2% at the end of the year? You know, I would imagine that the majority of people would say 4%. There's actually a very sizable and kind of loud minority, and I'm sort of leaning towards that direction, that would think that interest rates at the end of the year are going to be 2%. And, you know, like Hedgeye, for example, is one of the big guys. I don't know how much you guys respect them. They've been right about some things. They've been wrong about a whole bunch of things. But they think we're kind of in a deflationary kind of state right now. So there is some disagreement there. You know, there's, and also, even though, like, you know, you can kind of point to, you know, valuation issues, war, you know, all this crap, there's still the problem of the fact that, you know, everybody's 401k is kind of just going inexorably into these passive investment vehicles. And same with, you know, a lot of people who are actively managing institutional money. They're basically saying, give me my money back from active managers, and they're just putting it into, you know, passive vehicles. And passive vehicles have a very simple algorithm. It's like, if cash comes in, they buy. They don't give a shit about what the price is. If cash comes out, they sell. And that dynamic is leading, you know, a lot of things higher, even though you're absolutely right, Joseph. Like, when you look at like the situation, things look kind of dire. And so, you know, when we talk about the real economy and we say, yeah, things look kind of dire, we can kind of all agree on it. But how that translates into asset prices, that's where things kind of get a little murky, precisely because the algorithms that determine how asset prices, you know, are moving, you know, have little to do with that, unfortunately.
Excuse me, I fully agree with you. I mean, that's why when you go into basically ETFs, into funds, especially when they're passive, as far as I'm concerned, those are basically landmines, because you don't control what they're going into. and a lot of the stuff they're going into tends to be, in my opinion, shit. I find that when you're having the movements happen, though, what I have an issue with is that you get the retailers freaked out, and that causes a lurch in pricing, quite often to the downside. And then you need time to recover from that. And so whenever you have something coming out in the news, something coming out through an act through the Fed, through the administration, any of these little things that come up, all of a sudden you get this lurch, and then you need time for corrections going back to what maybe the real sentiment should be based upon some basic fundamentals. That's all.
So I got a question, MG. Where does Hedgeye, is that Keith McCullough? Is that Hedgeye? Where does he see the deflationary forces? Is it
like those guys have a whole bunch of data streams? You know, obviously, the most famous one that everyone's talking about right now is used car sales prices dropping. But then, impending home sales are dropping. There's this idea that, mortgages literally, within the last 60 days, mortgage rates went up from 3.5 to 5.25. That's going to result in massive sort of slowdown in kind of home sales to some degree. So, there's these signs that, and those guys keep track of about 200 different time series, and they do that, pretty much internationally. And they are, I'm not a subscriber to them anymore just because it was data overload. I was a subscriber before. But, they keep track of a lot of this stuff. And, I agree with their data, but I don't necessarily always agree with their interpretation of the data. But, they have a very strong opinion that, we're seeing broad slowdowns everywhere. And, I do think that, I know, people feel very strong that the Fed has to do this, the Fed has to do that. I personally don't believe that the Fed will be able to raise rates. I think with a 1/4 point hike, they managed to break a lot of things already. The fucking 10-year went to 275, and I think that if they go 100 bips, you're at this rate, the 10-year is going to be at 5%. I know a lot of people think, yeah, that's great. We've been at 5% before. But, with a $29 trillion debt load at the federal level, we can't afford high interest rates because, go ahead, Three Aces.
AMG, question for you. So, listen, the TLT is down 35%. What if the Fed went out? What if the Fed went out and bought all those bonds back? Because that $30 trillion is at par. I mean, is there a play there? I mean, I'm just curious. I'm not a bond guy.
Well, the Fed can't. The Fed can buy that bond and put it on their balance sheet.
No, pardon me.
But they can't defease it.
No, not the Fed. The Treasury. Couldn't the Treasury? Let's just for shits and giggles. Let's say that the whole debt load is $30 trillion. And then given the interest rate move, just the TLT alone, I think is down 30-some odd percent. And let's say in the market value, mark to market, it was 20. Couldn't they sell new bonds and then and then sell $20 trillion worth of bonds and then buy those bonds back from the open market? I mean, they'll at least get the Federal Reserve.
No, they
bonds.
can't.
I mean, how does that work? So that wouldn't.
They can't do that.
Just
But go ahead,
cause
Josh.
more inflation.
No, they can't do that because they would actually have to raise more money to do that. Races. That's the problem. And so then
that's a bad concept.
Yeah, that's what we just discussed about it a few minutes ago. I guess about the even though I'm just sharing the screen. If people are listening here, if they want to see their screen, even if they go 50 points basis a little bit high, what would happen to our debt? Probably about $1 trillion gonna rise up. Even if they go 50 handle, if they go to about a 1%, then probably it will rise up $1.9 trillion debt. And then if we go to 2 handles, that will on top of whatever the debt we have is gonna be another $3.7 trillion debt, because we have almost like a interest rate is almost 303 billion. Plus we have the transportation, disabilities, food stamps, housing. All this will jack up. Everything will jack up, and that's how it becomes that. That's how it will become. Even though we go with the 2% a year by 2022.
One other question. Let's say we do get one of these fucking, big moves down. Okay. I mean, I mean, listen, guys, I've been around, the early 90s, okay? I've seen bear markets and stuff like that. But, I've never seen these guys own 1 billion shares of things, And we all know that Wall Street's like a fire hydrant. Either it's on or it's off. And, I mean, how in the hell do these big, Black Rocks and Vanguards and these guys get the hell out of, how the hell do they sell that kind of stock and the who when this thing rolls over legitimately? We still haven't really seen that, in my opinion, the real kind of selling to the downside. It's big time. I mean, what's your take on that?
I think that's actually, a huge dilemma is that we actually don't have the liquidity that we think we do. And that is a serious problem with one party owning such a large, or controlling such a large, number of shares. So BlackRock is sort of like Fidelity, though, Three Aces. Like within BlackRock, there's hundreds of different funds with different competing, interests. So with, sometimes one fund might sell something, another fund might buy it. Same with Fidelity. So they actually, inside of Fidelity, for example, they have a huge internal crossing team where, before you go to the exterior market, you literally put, in the trading system, Peter Lynch might want to buy something and then another manager might want to sell something. They're that big where they actually cross a lot internally. But going back to to Josh's point, if we raise interest rates across the board, 200 bips, 2%, and the Fed, or the Treasury has to refinance the $29 trillion worth of debt, that's an additional $600 billion, roughly $600 billion a year that goes to paying interest. So that means that either taxes go up by tax receipts have to go up by $600 billion, or government spending has to go down by $600 billion, which would basically imply massive reduction in growth. And so for that reason, things would literally break, at this point, because of how much debt we have.
So these guys have themselves cornered in such a way that, so it's almost like some of this interest rate stuff, at least the policy stuff, just can't happen.
So
if they don't raise interest rates, how are they going to make the bonds look profitable to sell them? They've got to raise interest rates, otherwise these bonds aren't going to get sold.
No, right
They're not
now.
gonna be profitable.
So let me add it up,
What
guys.
do you mean, Sam?
I'm
So
gonna
if
go
they
ahead.
don't make the bonds look like they're a good investment, no one's going to buy treasury bonds. So they're going to push up the interest rates so that places like Japan keep buying treasuries. That's the whole reason why Japan's not buying them, because they're not profitable right now for them.
Well, I think, look, if you're Japan, you have a choice between their treasuries, which are not yielding that much to begin with, and then the American market, which is, slightly higher. So, 100 basis points higher, and everyone's all over it. One of the reasons, just remember, one of the reasons why the housing crisis occurred in 2008 was that people were basically, the demand was so high. If you could bunch a whole bunch of shitty mortgages together and some S&P or Moody's would rate it AAA, and or the top tier of your mortgage-backed security is AAA, and you could say, hey, look, these are AAA rated bonds, but they earn 75 basis points more than treasuries. There is a fucking line as far as the eye can see for that paper. If you can charge 75 basis points, if you can give people 75 basis, even 50 basis points more than treasuries, and still have relatively comparable, kind of ratings and credit quality, dude, there's a fucking long ass line for that. I'm talking $100 billion deep that would be demanding that kind of product.
Yeah, but you look at the mortgage-backed security market right now, and you just see a nosedive. So we don't have that option right now. When you're looking at when the curves are inverting like this, I think the Fed has backed themselves up into 3 different corners where they have to raise interest rates to make the U.S. dollar look more valuable.
No, right. What I'm saying, though, is comparable, if you're Japanese, though, and you're looking at really low yen base rates, the dollar-based rates and playing the currency basis is something that they're willing to do. They haven't been willing to do. I think that the dynamic of foreign countries not buying our treasuries is more due to the fact that people are worried about, our ability to kind of keep our reserve status, our ability to actually pay back our debts. And, the fact that, I think that a huge regime shifting event happened on Feb 26 when we just told Russia, hey, all these treasuries that you happen to have at your central bank, by the way, we're not going to honor it. And we've effectively, we're going to, the reserves that you have, you can't trade it. You can't kind of, in any sense really use it. I think that, if you're Mohammed bin Salman, and almost everything that you sell is dollar-based, because all your oil since 73 in your deal with Kissinger was that you would sell your oil to everybody else in the world in dollars. When you get those dollars, you got to put them somewhere. And historically, they purchase treasuries. But if you're Mohammed bin Salman and you're sitting there going, if I kill another journalist, I might be put on this fucking bad guy list, and they might kind of fucking swift boat me, and I can't trade anymore. Maybe I should sort of diversify. So you're going to stop buying treasuries. You're going to go to China, which is what they did. And they said, hey, you know what? We'll buy some of we'll settle some of this in yuan instead of dollars. So you're slowly beginning to see all of that stuff. So 3 Aces, you put up that, you put up Alan's quote about the, dollar as a reserve currency. I agree that right now and for a while it's a reserve currency. But there's that old quote from Hemingway, the sun also rises. The guy asked him, how did you go bankrupt? And he said, at first slowly, then suddenly. These things aren't linear. They happen very slowly. But then once they go, they fucking goes really fast.
I'm fully expecting the BRIC nations to somehow or another use gold or whatever kind of story they come up with to start migrating away from the dollar. Fully expect it.
Are we as Americans just too arrogant to see the writing on the wall that we're in a 50-year decline and that the order of the world is going to change?
I think that I've been shocked by how just watching just something simple, and I know I might get a whole bunch of people fucking pissed off at me, but just watching something that's simple by the Ukraine-Russia coverage in the news, both right and left, Fox News, MSNBC, it doesn't matter. Just the woeful ignorance on the part of anybody who's commentating on sort of the history of how things went down with the Soviet Union and, why they agreed to kind of give up Ukraine and why they agreed to split up and everything that happened. And the idea that for example, Leslie Graham, all these other guys, that Putin's the singular bad guy, that somehow all we need to do is get rid of Putin, and that other major senior Russian strategic thinkers wouldn't believe that losing Ukraine to NATO would be an existential risk to Russia. I mean, that boggles my mind that nobody would. This has been since Catherine the Great. This has been a strategic imperative of the Russian state, and so since all of Soviet times, everything. The best that Ukraine could have hoped for, in my opinion, was something like a Finland type deal. The fucking Soviets fought a brutal fucking war against Finland. 250,000 Soviet people died. Okay? Brutal war, and people were like, oh yeah, the Soviets want to conquer everybody, Russia just wants to conquer. Guess what? Finland was a fucking neutral country and has been for years until now when they're threatening to go to NATO. So you can say all you want about all that stuff, but they managed neutrality. Same with Yugoslavia. And potentially Ukraine could have handled that. And for whatever reason, Ukraine just kept going around saying, we want to be part of NATO, we want to be part of NATO. They had their own reasons. They're a democratic country. They're allowed to say stuff like that. But the other guy next to them with 7,000 nukes is pissed off about it. So, when I hear the coverage around all this stuff, and especially after we've come to, through 2 defeats in wars, and let's just call it what it is, we Americans were defeated twice. We were defeated in Afghanistan. We were defeated in Iraq. When, I'm an old theorist, Clausewitz on War wrote, and the first thing that he says is, war is merely politics by other means. Our objective in Afghanistan was to basically push the Taliban government out. Guess what? They're back in. That means we lost our objective. That means we lost the fucking war. Our objective in Iraq was to stabilize Iraq and make sure that, like, you know, terrorists and all these other people couldn't kind of take over, and that Saddam would be ousted, and somehow Iraq would be some sort of friendly country to us. That hasn't been met. The Iranians control Iraq more than we do. So in many ways, we've been defeated. And so, and people in America, you know, didn't hear that. And so there's a lot of things that are wrong, Sim.
Those are the stupid mistakes we have done that.
Guys, I was inspired by Josh.
So MG,
and so you're bullish? You're bullish this week?
and MG, just really fast. When you're talking about,
he's using margin.
MG, when you're talking about Ukraine and the mainstream media conversation that's being pushed out there, would you agree at least that they're not really being forthcoming about the true history? I mean, if anyone was to look at the history of Ukraine, Russia, the United States, this situation didn't just happen. This has been going on for over a decade now, where basically there has been a push and pull between Russia and the United States to be able to retain or to exert influence in that area. Correct?
Completely, dude. I'm old enough to remember when George Bush W. brought Putin over to Texas in high school after September 11th and was like, this guy's our new partner. I've looked into the eyes of this man. I looked into his soul, and he's a good man. And apparently Russia was our friends because they let us like land planes and refuel and logistic support through like the old former Soviet states that were over there. And they were supposedly our buddy. And then we basically, you know, slowly kind of, you know, and also I remember 92. I remember that whole thing about like, you know, when 90. It was like Edward Shevardnadze was the Soviet foreign minister at the time. What's his name? Baker was our Secretary of State under Bush Sr. And, you know, Gorbachev and those guys would have never let go of the Soviet Union unless they had explicit guarantees that we wouldn't expand NATO. And the whole fight was, okay, well, what the fuck's going to happen to East Germany? You know, because Germany's going to reunite. Is East Germany, is Warsaw Pact soldiers going to basically occupy all of Germany? Or is NATO soldiers going to occupy all of Germany? And because we were stronger and because of a whole bunch of reasons, you know, the Soviets were willing to agree that NATO soldiers would occupy all of Germany. But the only way that they would agree with that was that you got to make sure that you don't expand NATO at all. And on many occasions, and many people heard this, and Baker even admits that he said it. You know, they said we will not expand NATO by 1 inch eastward.
It reminds me of that phrase from the movie The Godfather: "You keep your friends close, and you keep your enemies closer."
Right, and like you know that you know whether look, we can say that was fucking 30 years ago. That doesn't matter anymore. There's a statute of limitations on that stuff, but that was said.
Well, remember, Obama gave up Crimea, right? They just gave it to Russia, basically. So we
2014.
Yeah, I mean, we didn't even break. I mean, most people don't even know about that.
Yeah, but Jeff, you're right that Crimea was taken by Russia, but you'd have to go back, you know, to a number of years prior to that, when the U.S. began to push Ukraine to move towards NATO. And they basically, the United States helped push out and force out the sitting, I guess a president or premier, whatever it's called in Ukraine, through basically our efforts. So they had a standing, legal, approved, voted in government in Ukraine. And we caused basically that government to be tossed out by a coup.
And I'm agreeing with you guys.
And so I think it's always important when we're talking about any of this that the Crimea situation, that was after many years of war, actually a massive war in Ukraine. That was on the very tail end of that. So when we're talking about Crimea, I guess I get kind of pissy with the mainstream media that they don't talk about all the years before that led up to that moment and led up to the moment that happened this year. That's all.
The United States doesn't want nuclear missiles sitting in the island of Cuba right off the coast of Florida any more than Russia wants NATO weapons sitting on the borders of Ukraine.
I'll give you guys a very simple thought exercise. Let's just say for shits and giggles, Mexico became very friendly with China. Okay? Mexico became very friendly with China. China started investing in Mexico. By the way, China wanted to do that with Nicaragua. So it's definitely plausible. And so Mexico and China signed a security deal. They're sort of allies. And as part of that security deal, China's going to go build a naval base in Cancun, or the Yucatan Peninsula. We all know what would happen. The next fucking day, we would invade Mexico, and we would have a regime change. And that's just the way it is. And people are arguing and yelling and screaming about independent nation and sovereignty and blah, blah, blah. That's not how shit works. Germany's not independent.
Hey, Josh, you haven't commented on the 10-year because you're not looking at the gap and go. But hey, Beth, come on up, dear. Do you have a question for us? Nice to meet you.
So, hey, Beck, I'm listening, and boy, the conversation is traveling everywhere. You guys are interesting. I don't want to, do a deep dive on what's happening with Russia and Ukraine, but everything that's been said, and MG, whatever your real name is, your take is valid and accurate, and also incomplete. It's too much to explain, but I just want to add a little clarification so that everybody's heads are at least open to there's more to the story. As who is the guy who had that program, the radio program, who would say, and there's the rest of the story, or there's more to the story. What was his name? I can't remember. Anyway, the rest of the story. Maybe none of you are old enough to remember that.
And now for the rest of the story.
Who was that? Paul, or what was his name?
I used to listen to it every morning, but I can't remember his name either. But yeah, epic man.
So a couple of things. Putin has, intentionally been doing everything he can to wreck Ukraine.
Really fast. That was Paul Harvey.
Paul Harvey. I knew it was a Paul. Thank you. Yeah, Paul
You're
Harvey.
You're welcome.
And now for the rest of the story. Oh, perfect. Putin had actors within the government who had marching orders to sabotage. He had particular actors within Ukraine to try to siphon off as much money as possible. He wanted to keep, from his agenda, Ukraine crippled in any means possible. And, the United States, through, people like Paul Manafort going over there and all of the problems he created, it's a very, very complex story is all I want to say. Each point is valid, but always incomplete. Putin blaming NATO, it's very specious. It plays well, and it has some truth, but it is also a false argument. It gave him a launching off point. There's much, much more to it, but...
Beth, why do you believe that that's a false argument?
His argument about NATO?
Yeah, he's had that argument. That has been a Russia kind of...
I know.
Sort of line since 92, since 90, even before Putin. So why do you think that's a false argument?
Because he uses it as a cover for the existing economic and political hollowness in his own country. Russia at one point was poised to consider looking at joining NATO itself. Now, if we examine that interest in and of itself, that could have been, not as fully genuine, because for Russia to move in that direction and improve their economic trading status and a whole other number of metrics would have required some measure of political reform vis-a-vis transparency in elections. People think that the vote, being able to vote means you have democracy. Far from it. And along with political transparency, banking reforms, all of these other metrics have to be involved with being a part of the larger community of nations and whatnot. And Putin, at some point, made a decision, probably because of his KGB, FSB mindset training, probably because of his personality, to go down the deliberate path of corruption. Well, there are problems, infrastructure problems in Russia.
Beth, can I ask you one question? Just one question. Do you believe, in all honesty, do you believe that either Ukraine or Romania or Bulgaria have met these standards that you're talking about?
Not fully. But, wait, let me finish. I'll play it this way for a moment. When the United States wanted to break away from Britain, that was an argument made by the king and those in Britain to say, hey, these people can't go down that path of independence. They don't do this. They don't have a functioning government. They can't work. They can't handle democracy the way they're saying they want it. There's no way this is going to work. What determined that break was the people in the United States eventually, through a series of missteps, said, we want freedom, irrespective of the consequences, irrespective of what it's going to cost us. And Ukraine these days is following that same trajectory. Not perfection, but it is signaling a decided determination to pay the cost to have their freedom. And no country
I think.
Hey there, everybody. Sorry to interrupt, but I'm signing off for the night. Josh, I'll see you tomorrow on the pre-market.
Well, that's my man.
Get on 20, 30 minutes before the market opens. That'd be great.
Yeah, absolutely.
It was a pleasure listening to everybody speak, and feel welcome to come and join us tomorrow for live trading. Have a good night, everybody.
Good night,
Have a great night tonight.
Thank you
Josh,
for being co-host.
The 24-hour plan, Josh. We got a big night ahead of you. Go get some triple espressos ready.
Absolutely, no, but
He's talking about the 10-year.
I mean, everybody's done, I think, probably, but if people want it, I'll go through the 10 years. But I'm sure there's a lot of questions I would have it, even MG have a time, or maybe Gordon have a time next time. I would love to talk to you guys a lot, man, on the space, man, so. But again, right now, I mean, MG, if you're around here, I wanted to ask you quick questions about it. About the $119 trillion right now, the bond are out there in the market. So when the interest rate goes higher, the bond will be the people who are holding the 10 year, 20 years, 30 year. The bond will be more vulnerable because it depends on types of the bond. Some of them are treasuries, some of them are municipal, some of them are corporate bonds, and also so all are vulnerable at this point. So those market, how the people who are holding, how they will react, because when the yields are rising up like the way I see right now, yields gonna go to the roof. If that happens, all these $119 trillion bond value right now people are holding, if they will sell it or they will not sell it. If they sell it, then do you think they're gonna invest into the gold? Because gold is the one is right now going to the roof pretty much, because nobody has a trust now on a treasury. The way I feel right now, treasury was dressed up for 20 years, and now people came to know that hey, inflation is taking the tolls on their bond, and that's why people they're losing their value on their bond, and now they can't put money into the equity because equity is already vulnerable, and they are volatile basically. Equities, you can't trust on equities, and credit market is already, it is crazy in this market condition. Credit market, you can't put money into credit market, so that could be another disaster. So in these cases we have $119 trillion. On top of that, we have the Fed issues, which is Fed rate. Inflation is 8.5%. Fed rate would be They just started quarter. Imagine if they, in order to go to 2%, then the inflation is 8.5%. To control the inflation, if they want to go 2% is nothing, because always inflation has to be below the Fed rate. If the inflation is higher than the Fed rate, it's pointless to even have the bond value the bond market will be biggest. They'll be suffering. And then on top of that, we have another scenario here: $18 trillion mortgage market. The mortgage-backed securities we have. That out of that right now, 10 out of $18 trillion. I mean, the Fed said they're gonna shrink the balance sheet. Now, if they shrink the balance sheet, if they said 95 billion a month, they're gonna shrink. Out of that, 35 billion would be the mortgage-backed security. If they're gonna shrink every month 35, that is going to be a crazy market. What would happen to the mortgage market? That will be like a skyrocket to 2 digits mortgage market. If that happens, then we have 64% people are on the paycheck to paycheck. What would happen? And what would happen to corporate debt? There is all interest rate gonna go high, corporate debt gonna go high. So we have the record-breaking debt, and plus, even if they go 2% higher rate, then our debt will be like a skyrocketing. It's trillions of dollars gonna jack up every year. 3 trillions a year probably, if that happens. So then our debt will be go through the roof also. So we have like a catch-22 on 4 different angles. What is your take on that?
Yeah, no, you're asking a great question. I mean, I think that all of that stuff, it points to the fact that we just have too much debt. There's too much debt problem, and there's very little that you can do if you want to raise more debt, and you're just raising more debt to solve the problem, which is essentially what we've done for the last 12 years. And that can't persist. And so one of the things that you could there's a couple of different solutions that are possible, and several of them are totally politically untenable. One thing that you could have done is austerity, where you say, you know what, fuck it, let's just pay higher interest rates. That just means that more of our government tax revenue will go to paying off interest rates, and we'll just kind of incur a really steep austerity kind of period, let a whole bunch of people fail, and then on the other side you have a whole bunch of creative destruction, and then hopefully out of the ashes arises a new economy and a new set of industries that are kind of leaner, meaner, and better.
So worse than 2008, you mean?
Yeah, they'll never do that. They'll never do that because, I mean, that's the thing that I learned in 2008 is that for whatever reason, our country politically has zero tolerance for any sort of pain. And it certainly, our rich folks.
Hey, MG, can I break in here?
For any pain. Go ahead.
I just want to make an alert. Like, if anybody was waiting for Bitcoin to break down below 39,000, we've just had a huge dip. I just keep that up here for the people who listen, and sometimes I break in and let you guys know when it takes a big dip, but it just did if you're interested.
Thank you.
Yeah, so that's another negative sign for risk assets, right? I mean, Bitcoin right now is
most vulnerable.
Yeah, definitely. So the other thing I would say is that with regards to the debt, I am not worried about valuation arguments about why stocks are going to fall. When people say, oh, things are overvalued, I'm not that those kind of mean revert. I'm not worried about that. Mm-hmm. I'm really worried about credit crises.
Yep.
And so, the thing this year that kind of freaks me out is what's happened in, basically bond spreads. Mm-hmm. If you look at the ETFs, LQD and HYG, I mean, they probably had the worst start to the year than since I can't even remember when. Maybe like you got to go back to the early 90s to see a worse start to the year. So when companies can no longer finance their credit, the Fed doesn't really, I mean, they sort of care about, what's happening in S&P, but they don't really. I think that the biggest worry that the Fed has with regards to S&P is what they don't know is how much loans are collateralized by financial assets. Historically, loans are, collateralized by homes, by fucking factories, by land, by things that are tangible that the bank can say it's worth X. Now, like, for example, all of fucking Silicon Valley is Elon Musk, every one of those guys, all of those guys, they finance their whole entire lifestyle by basically putting up their stock as collateral, and they, get loans of like, I'm talking like 500 million, $1 billion, multiple $1 billion loans are completely collateralized by their stock. And so the way it works is they say, okay, give me $3 billion of stock at mark to market, and I'll give you $1 billion loan. And if it drops, a certain amount, we have the right to kind of sell that as collateral. And that's how a lot of these guys operate. And so, what the Fed doesn't know is like, well, how much of those loans that banks have made are based on financial assets. So S&P is a concern for them, probably more now than it was before. But the biggest concern for them is if companies can't, essentially get access to the credit markets. So in December of 18, if you look at Powell, he came in talking a big game. I'm going to stop inflation. I'm a market guy, blah, 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 all this stuff. Trump hired him. He kind of raised interest rates. He did QT. He did all this stuff. He talked a big game. And as soon as the market went down, he wasn't even worried. What happened, though, is that the high yield market completely got shut down. And that's when everyone was like, oh, shit, no one's going to be able to finance themselves. I think Neiman Marcus at that time couldn't even finance, themselves at 14%. And so, that's when the Fed starts to get really worried. And so if you look at HYG and if you look at LQD, I'm worried about that. With regards to gold, I actually think that if people have access to liquidity of short-term, high-grade credit, like short-term treasuries, short-term, AAA securities and money markets are relatively stable, then gold will be fine. Gold will probably increase. But guess what? If people don't have access to that kind of liquidity, like look what happened in March of 2020 during COVID. What happened was that you had a huge liquidity crisis across the world. So India's buying, they're buying like a whole bunch of stuff from Spain. No one's going to settle in fucking euros. No one's going to settle, or let's say they're buying wheat from Ukraine. They're not going to settle in Harbadi. They're not going to settle in rupees. They're going to settle in dollars. So India's basically, from a payables perspective, they have a whole bunch of payables in dollars. They have a whole bunch of receivables in dollars also because they're selling stuff to the rest of the world. But let's say they're looking at everybody, who's basically going to stretch their, not make their payments or stretch it. And so they're saying, oh, we need like fuel and things that are essential. So we need every dollar we can. So that means all treasuries get sold. Everything that's like, that they can use to trade to get liquidity gets sold. And guess what's in there? Gold. So gold got sold during that period. And so if there's a liquidity, issue, and you're going to notice it when you look at the short-term, debt markets, even then, gold's going to get sold.
Oh, wow. There's a lot of scenario things are going on probably. But, based on right now, things are happening. The bond market looks to me most vulnerable at this point right now. The way things are right now, it's like a can of worm is about to get open. Probably before it get open, probably on the 4th May, probably the FOMC meeting starts, and I guess market maker knows right now that that's going to spill the beans.
It's interesting because they brought it like last week. It was like one after the other. It was like every day was a Fed speaker, and every time they spoke, they freaked the shit out of the market. Like Lyle Brainerd came out last week, and historically, she's like been like the dovest of the doves, and she came out guns blazing.
She was reading the screen. Actually, she was reading the screen. Did you see that video? She was reading the screen.
No, I didn't see. What happened, Josh?
No, she was literally reading the screen, and she was reading. It was all teleprompter. Everything was teleprompter. She was reading. If you look at it,
probably like fucking.
Everything was agenda. Everything was agenda driven, man.
It was a completely different thing than she'd ever said before. She came out guns blazing, all hawkish, quoting Volcker, quoting.
She was the one of the dovish woman in the Fed, and how come she become all of a sudden hawkish?
Yeah. And it was every day, dude. Every day those guys came out until they basically broke the technicals of the S&P.
We got Bullard and everyone coming out this weekend too. This week.
Even Jerome Powell is coming tomorrow. Wednesday.
Powell, Bullard. I mean, who's the hawkish? That's Bullard.
I think it's all I think it's all fun and games until they literally break something in the credit market. And
exactly right here.
Refinance their debt. That's when they're going to turn tail. They're gonna be
QT,
like,
QT.
oh, no, we
Everybody interested in QT, right, MG? Everybody interested in QT.
I'm actually more scared of QT than I am of raising rates. I think I think QT is going to just like collapse the market compared to raising
Because of the
rates.
mortgage-backed security, 35 billion, and plus whatever everybody's closing their mortgage securities, and today's date, they also piles up every month. If that happens, man, that's the most vulnerable, mortgage security right now in our economy would affect, because there's a lot of people, man, paycheck to paycheck, and
Also because our stock market is totally addicted to liquidity. There's a fantastic paper going around in academic economic circles.
Mhm.
The authors are Croyan of University of Chicago and Xavier Gabe of Harvard. And they basically they have some fancy econometric technique where they're estimating the elasticity of stocks relative to liquidity. And what they showed is that stocks are incredibly inelastic. The demand for them is incredibly inelastic. So if as soon as a little liquidity is kind of thrown in there, it's like fuel to the fire. And if you take that liquidity away, things go down very quickly.
Oh yeah, so so MG, you just mentioned about it, right? So every day I go through lots of companies' balance sheet, right? Every day I go through a lot of companies. I analyze those fundamental financials, and when I look at their balance sheet, and everybody has a huge debt, including Apple. Man, look at their debt is to cash ratio is almost like 1:3 in Apple. Other companies have like 5:1, 10:1. Those ratios, so they have billions of dollar debt. And when I look at that, what used to happen in 2020 when we had a QE, everybody used to take the loan from the government and say, hey, what the heck is 1%, 2% interest rate, and take the loan, and just you come out and say buy your own buyback program, right? You buy your own stocks, and the stock jumps 10% when you announce your earnings. You get 10% right there jump, and you are getting the loan for 1%, 2%. Excuse me. So what happens is you are still benefiting out of this. So now all these debts are right now lined up, and what would happen is interest rate going up, right? When the interest rate goes up, what would happen to them? All the debt, they will be paying off, and now the stocks are already treading the water. Basically, if you take a look at it, it is tanking. I have many stocks, many companies right now. Their EPS, if you take a look at, when I see those EPS are like 5 cents, 10 cents, and those stocks are trading like $100. Those are outrageous. Those stock has to go down to the floor, and I still see a lot of air in the balloon, and I guess they gonna take those one out, and then what would happen to this market, man? This is a huge, the high record-breaking debt we have right now. Record-breaking debt we have. I'm not talking about the leverage more, even I'm not even considering that leverage is. I'm talking about just pure debt for the corporate. If the corporate debt is vulnerable, they gonna first thing they will do is they will sell their own shares into the market to pay off the debt probably, or company go to bankrupt. One of the thing can happen, and then third thing would happen is they're gonna lay off the people, and this is what's going to happen. It's very scary right now, super scary. If you ask me, man, that would be the first impact in equity market would happen, is the credit and equity market is going to be most vulnerable. And I think bank knows that, but I think that they've been dressed up with the Fed instruction probably, and Fed has the instruction from the politicians.
Hey, MG, pardon my ignorance, but are you implying that the increasing interest rate hikes from the Fed is going to create quantitative tightening?
No, I'm just saying that, like, I'm actually, the mechanisms for interest rate hikes don't scare me in terms of like having a negative effect on the equity markets nearly as much as quantitative tightening. I think quantitative tightening.
So where is that going to come from, the quantitative tightening? What's going to create that effect?
I think once they just start buying back, paring down their balance sheets and so, and getting rid of a lot of that stuff, I think that the liquidity loss and might cause the banks to completely seize up any sort of activity, and that's sort of what happened in December of 18, and that this, like, if you actually look at what happened from October 18 to December of 18,
right here on my chart,
that's a great thing to look at, because if we repeat that, it's going to be much worse.
You mean like the credit tightening that happened after 2008? After the mortgage-backed security scandal?
They did 500. I think they did something like they did a much smaller amount.
I can add on that, MG, actually.
So banks aren't going to want to lend to each other.
No, that's different thing. No, he's talking about
Okay, thank
QT.
you.
He knows Sim. He's talking about the QT. So 2018,
I'll
he's
go
talking about.
study QT better. Thank you.
Yeah, QT. So basically, what happened is a QT. So in 2018, at that time happened, Apple dropped from September to December. In October to December, it dropped 39% when that particular time in the QT happened in 2018. Apple was dropped 39%. Just like the many other stock also dropped at that time. So, but remember, right, guys, that time QT was only $40 billion, 40 billion, right? This time we have 95 billion QT. On top, we have a
They're
30.
saying they're going to do that per month, Josh.
Yeah, this is for month per month. I'm talking about. So
I mean, that's why if they do that per month and Apple drops 39%, what is that, like $110?
So that time with the split amount, so Apple was there at that time. I'm looking at right now chart. Apple was $58 with the split, and it dropped down to 58 to 35. So it's 39%. I'm looking at the chart. 39% dropped from October.
But right now, Josh, how much would it be? It would be like $110 if Apple dropped 39%, something like that.
Oh, okay. Let me.
I think I see where my confusion was. Like, isn't the
Yeah, I can check
federal
right now.
bank still doing quantitative easing as they're hiking interest rates?
They have recently stopped. They have recently stopped, according to several people, and and that's what every speaker that spoke this last week. They were so aggressive about their language about how fast they're going to do quantitative tightening.
Okay, I understand now. Thank you.
So the big question that everyone's asking is: are they serious? Everyone, or they're playing a game of chicken. Everyone, it's literally wild that like
Apple would be $110 if they drop it to 39%. Apple would be $110 from the top. 182 Apple was, right? So from 182, if they drop it to 39, would be 110. But if you count from the current price, probably there's a huge gap here, guys. Okay, there's a gap here at $96. So if that happens, maybe that gap will be filled at 96, and that price will be from the top would be 47% from the top. And if a current price would be, let me see that, man. This is a huge one. This is a good one too, actually.
Josh, what do you think? What do you think S&P will be 3,800 if Apple goes to 110?
Sure, I can take a look at right now. So 39. So S&P 500. My prediction on S&P 500 is 3. Hold on, let me see. S&P heading to right now. So from here top to bottom.
I don't know whether to laugh or cry at that scenario. It's hysterical.
No, man. Look at the
guys.
guys.
QT is scary. That's why QT is like, in my opinion, a bigger risk. Like the last time it happened, it was bad.
Quantitative tightening and stagflation. Like if unemployment starts to go up in the United States, then like it's over, right?
Yeah, if you do that, that comes out the S&P 500 will be 289. 289. If that happens, but remember S&P 500. There is a lot of another 500 companies. So S&P 500 comes to the last one. But I'm sure if depends on this can of worm is very, very, for the way I analyze it, because of the mortgage-backed security. That is the bigger play. Also, it's not just it's not about just the QT of the corporate. Debt, and we have another different types of debts in the market too. Student loans, this loan, mortgage. So many things will play. On top of that, bond market is also vulnerable. Then we have the debt, our government debt, that is also vulnerable. So we have
Josh, can I ask you, do you think that home builders are good short then?
Oh, we already shorted BLDR home builder. If you want to short the mortgage, you can look MBS.
Got it. What about the XHB, the ETF?
Oh yeah. So I'm sorry, which one? The home builder H?
Yeah, the home. Which one is it? Is it XHB? Is that the home builder?
You're talking about SPY?
No, the home builder
Yeah.
ETF.
Home builder ETF is right here. Let me look at my indexes. So home builder ETF was H. It's H and X. Hold on. Let me type it in.
Yeah, I think it's XHB.
XHP, let me see.
B is a boy.
Yep. X-ray home boy.
Okay, HXB. Yep, that's the one. Home builder ETF. This is the one. I think I have this one, an ETF. 6B. Yeah.
We're gonna look at DR Horton tomorrow. I'm gonna ask.
So, MG, is it possible that they're just jawboning, or are they actually pointing out their actions that's going to happen if the most dovish Fed head comes out and is hawkish?
That's the big fight in the bond market, guys, is like there's a whole bunch of people. I mean, the people that inverted this whole thing, like the fact that the bond market inverted means that the bond market essentially called their bluff and said, this is bullshit, that's not going to happen. They're just going to cause a recession and the whole thing's going to get unwound. And so, the fact that it kind of steepened pretty viciously means that some people believe it, but the jawboning is a theory that's out there big time.
Yep.
Hey, Deathcross, welcome.
Is there any historical precedent for them bluffing and then changing and doing something opposite of what they're saying they're going to do?
Yes,
Okay.
absolutely. Yes. So what I understand about what happened in 2018 was once the S&P tanked, and again, to support what MG is saying about it's not about the S&P or the equity markets. It's not even about the bond markets, which is still kind of shitty. And as we've been talking here, I think, what was it?
10 years at 288.
The 10 years at 288. It
Yep.
started at, 2.7? Like, holy shit, 2.7s? Like, it was like 2.6 last week. So we were talking about 20 basis points since like the end of last week. So, but yeah, to what MG was saying, it's not about the equity market. It's not about even the bond market. It's about the credit markets. What I understood happened, and this is rumors and everything, but they come from people that I think are pretty reputable, was that GE came to the Fed with hat in hand and said, well, shit, guys, we're going to default on a fucking loan, right? Like, we can't have fucking General Electric default on a fucking loan. So, and that just tells you, like, where we're at with all this. And the last time I understood, there was over $2 trillion in liabilities tied up with zombie companies. If you guys don't know what those are, they're companies that the only way they can survive is to refinance their debt because they don't make enough money to make even their own interest payments. So if we're talking about $2 trillion of that shit going on, and just tonight we've went up almost 10 basis points on the 10-year, and that's not including everything that's happened in the last month.
Last
That's
3
a fucking
days
problem.
has been about 20 basis points. The last 3 days.
It's fucking incredible.
Buy
Right,
TBT, man. Just buy the TBT, and that's it, man. That will make you some great money on it.
I'm triple leverage short the Qs with SQQQ.
Oh yeah, that's true. Just go get a SQQQ or QQQ short.
With all this fear in the credit markets on the top, and then all this fear about food shortages, like right on the ground in the streets, like it seems like the American people are about to get pinched.
Oh man, all these growth stock will gonna be. Look at these, all the tech stock. They're gonna they'll be in a big time trouble.
But that's not such a big problem for the masses of American people. 70% of which own like less than $1,000 in stocks.
Mhm.
Right, so most average Americans aren't super exposed to equities as being like a significant portion of their net worth, right? So but from a food perspective and inflation, that is problematic.
It certainly affects the buying power of Americans.
Absolutely, absolutely.
With houses in particular.
And that's going to directly affect China.
But the fact that, Deathcross, mortgage rates in the last 60 days went from 3.25% to 5.25%. That's just in the span of most families. They make a decision on what buy, unless you fucking have a gun in your head and you got to move for work or something like that. The decision to buy a house takes 3 or 4 months minimum. So just in the time that you said, hey, let's go look for a house, whatever, in that fucking time, your mortgage payments went up 60%.
Yeah, because you get a lock-in rate typically, and it's like a 3-month transaction.
No, but this is how the mortgage-backed security works, guys. So when Fed comes out and they're gonna announce they were gonna have a $35 billion a month, they're gonna mortgage-backed security. They're gonna shrink in the market those 35 plus every day whatever all the mortgages closes. Though that security also those all the notes also will come in the market. So imagine probably around 40 to 45 billion a month, and every month piles up is on autopilot. So those 40 billion, and now where they're gonna go? They all used to be in a, remember the Fed announced in 2020 2021 said we're gonna buy all this back, all this mortgage-backed security. Now they will come in the market for 2.5% interest rate. Right now is 5.6. And who gonna buy those mortgage-backed security? They come in the market, nobody gonna buy. So what happened? Mortgage rate goes up.
Sorry to interrupt. I actually want to ask a question about this because 3 Aces hosted a space the other day with Alan. I don't remember his surname, but forgive me for that. Kind of describing the banking crises. Sorry, the banking crises that have occurred since basically the 70s in the United States. And he made no mention of the federal home loan banks that were lending out massive amount of money prior to any of those banking crises.
Yeah,
and
but
I have to question whether or not the GSEs, the government-sponsored entities like Fannie Mae and Freddie Mac, are worth investing in at this point.
No way you can short them.
You can't short them.
No, I'm just kidding. You know what I mean. Right now, real estate market will be the most vulnerable market. It's just a little early stage. The more you see that, what would happen is mortgage-backed security come into the market. What happens is that the mortgage rate is gonna shoot up to the sky. And why? Because you look at the inflation rate also. We have higher, and then every bank is expecting that Fed rate going to be in a 2%, maybe by next year, probably probably maybe 3%, 4%, 5%, depends.
Well, it's already at 5. It's already at 5.5.
No, I'm talking about Fed rate. When the Fed rate goes up, also Fed rate, and then the.
I don't know if they'll have the guts to actually do that.
I mean,
but,
we have a catch-22 scenario, guys. So I'm not saying it's very difficult. I 100% agree. Very, very difficult. But if you look at compare the scenario of 1980, at that time we jack up the rate, but that time we did not have inflation issue. Right now we have inflation problem.
So if you jack up the rate, as the market has done on the
done. We have a big problem
on the 2-year bond. It's basically been crashing.
Yep.
So the mortgage-backed securities that the Fed were buying back over the last 2 years are trading under par. Right? If you look at MBB, which is just like an
waterfall.
ETF.
It's a waterfall right now. MBB is like a straight line down.
Totally.
Yeah, we track that like a hawk.
Look, the price of money is not just about interest rates. It's trading under par. It's $98 on. It's 98 cents on the dollar. So the bank balance sheets are having to go into defensive mode because it's trading under $100.
Right.
Right. So they're having to sell in order to accumulate cash. And if you watch anything like what Jeff Snyder has talked about, when things trade under par, there is a balance sheet destruction process that goes on, and that is deflationary.
Okay.
Notice you said deflationary and not disinflationary.
No, it's
right.
It's demand destruction.
Right.
Basically.
Absolutely.
But like in the opposite direction of commodities, because like when oil goes over, $100, $107 a barrel, the NASDAQ responds because energy is too expensive for tech workers to commute to their jobs because oil is too expensive. And in the same fashion, when mortgage-backed securities trade under $1, everybody gets defensive. So I don't see how this makes any sense. And any sort of like off-balance sheet commodity or resource will probably become more valuable because of that.
I see the consumers like going into saving more because they're seeing the prices of things going up, especially families, and they're just gonna like not even know that they're gonna take a hit from inflation. Like they're just gonna save mistakenly and take the hit, not knowing how finances actually work, and they're gonna get hit with the inflation anyway.
I was wondering, I'm curious, guys. Can I ask a question real quick, please?
Go ahead.
Sorry about that. But, I've been trying to find a book to, understand exactly what you guys are talking about, like the economy, how the banks work and all that stuff. Can you guys just give me a quick recommendation or anything, please? I've been trying to find one for a long time.
Depends on which area you want to focus on. Macroeconomy, just you probably there must be just look for macroeconomy, and
this is all macro stuff.
Yeah.
This is all macroeconomics, and I would also say keep listening to these spaces.
Yeah. If you want to learn, man.
Everything you need to know into one book. Like,
I'm not a finance guy. I'm a software engineer. I don't know. I learned everything through CNBC and through these guys.
So I'm also a software guy. And the only word of recommendation I'd give you would be a book called The Zurich Axioms.
That might be a little complicated, but you could try that. You know what? I do know a book. You might want to look into the fiat standard. That might give you a little bit of insight as to what we're talking about.
The fiat standard.
And Ian, give him that other title.
How do you spell Ziak? Z-I-A-K?
Fiat.
Zurich. Z-U-R-I-C.
Z-U-R-I-C. How do you spell the axiom?
A-X-I-O-M-S. You're not going to
And then,
rich
do you guys
anymore.
know any discords for day trading in the morning? I just finished a TD Ameritrade course, a technical analysis course, and I feel like I'm ready to, maybe start paper trading, and I want to, maybe...
See the guy in the yellow?
You
Josh?
should, yeah,
You should be on Josh. Trading at
follow Josh.
Josh? But I don't have money to pay, bro. I'm not...
No. That's why we tell you to follow Josh. It's
He's
free. It
bro.
starts in the
And he's
morning
good.
every day, and it's fucking amazing.
And he has a Discord?
Yeah, we have a Discord server. It's all on his page. Just go to his Twitter, and you'll see everything.
That's what I've been looking... And there's a voice chat, too, yeah?
Yeah, this is everything you're looking for. It's exactly the same thing I was looking for, and that's exactly what you're talking about. Go follow his links, jump on the server, follow us every morning on Twitter Spaces, and you can even pick us up on YouTube.
Mo, to that I'll say just good luck. There's a lot of people with backwards hats and Discord servers that will shill services to people. But
yeah, dude, I know so many fucking day traders, bro, or I don't know if you guys heard of Jay Mazzinis, but I know so many Jay Mazzinis out there who just sell courses, trading courses and stuff.
No, so what I teach here, guys.
What's your goal, from a day trading perspective? What do you want to get out of it?
I mean, so I'm also an aspiring software engineer, and I think long term I could see myself maybe coming up with a fintech application. But I just want to learn how the economy works. I want to learn the fundamentals and everything. When I hear you guys talk about the Fed, inflation, it's not very clear to me. So I need to, understand that a little more.
Okay, I totally get that. The only reason why I ask is because day trading for me, it conjures up essentially a big game of poker, whereas the kind of questions you seem to be asking are more tilted towards investing. And
Also,
Like
but I
Josh is
wanna,
looking
like,
at balance
swing trade.
sheets,
I wanna
income
swing trade
statements,
as well.
stuff like that. That's more like geared towards investing, I would say.
I meant to say swing trade. I mean, maybe swing trade or options actually is what I'm looking for.
Yeah, then you're in the right community. This is exactly what you're looking for then.
But day trading, yeah, that's like too much. Huh?
I teach everything. Mao.
Would you say swing trading is like poker still, or is you have more of a leverage?
It's more investment, and it's more like the best swing traders, in my opinion, tend to be really good technicians or really good event-driven guys. Day traders, I only know like a handful of people that I know that are phenomenal day traders, and they literally just sit there and watch tape all fucking day, and that's how they get to be so
what
good.
I'm not trying to do. I'm not trying to do that. I want to like dabble in trading like here and there, and that's where I think I could become like a swing trader, right? Do you think that's still possible?
Josh can help guide you to get into something and get out of it, and then spend the rest of your day playing golf.
Yeah, that's what I'm looking for.
The good one, Shim. So
you guys gonna be tomorrow morning?
Every day, guys. Every day we are live 7-8 hours.
Morning, I was thinking about taking the TD Ameritrade class.
Mm-hmm.
I don't know if I should go there, or maybe just I'll hang out with you guys maybe after like in 2 days or something.
So what I teach here, what I teach here is how to not to lose money first. I don't teach in the beginning how to make money. I teach here first not to lose money. Remember, first, this is my first step when you join the group, and I don't charge anybody anything.
I'm not a complete noob. I just finished the TD Ameritrade course too, so like.
Yeah, no problem. You can do paper trading, man. We had a couple of guys. They did a paper trading, and within 10 days they started making money. So yeah.
So question back to Ian. Ian, you said mortgage-backed securities are going down, and you feel that commodities will be going up. Was that kind of how you ended it? Did I hear that right?
There's a possibility that the smarter guys in the room, like Zoltan, have been talking about this lately, about the price of money and how it's like a multi-factor sort of thing, not just determined by interest rates, but also determined by par prices. So like when you buy a bond on a short-term treasury bill, for example, it gets priced at a discount rate. So you're paying 96 cents on the dollar for whatever you put into it. But when you take that into your broker as collateral, they are willing to lend you money to hold treasury bills, because that's the risk-free rate, and they have to hedge against risk-free rates if they're trying to sell options, or if they're trying to sell futures or any sort of like derivative product. And that's very much how hedge funds work. Their main line of income is basically just reinvesting in treasury bills, and then shorting the treasury market on the derivative market in order to make income and take a spread off of it. So it's turtles all the way down in that sense. But from like an individual investor, there's some opportunities to kind of do the same thing, just not to the same levered way that the hedge funds and banks do. Does that make any sense to you? I'm sorry if that's total nonsense.
Go ahead, MG.
No, I was just going to say that, like, what he was referencing earlier was Jeff Snyder and the deflationary argument. I would say, look, like, bottom line is, just to keep things simple, I think we all agree that we're in a bear market. We're in a bear market big time. We've been in bear market since January, and any rallies are essentially counter-trend rallies. And so, that being said, not every market is in a bear market. I would say, there's
Agreed.
massive sector rotation going on. You look at growth tech, especially the ones that are like, under 50 billion. They've been all fucking decimated. Like some are down like 80, 90%. I mean, just decimated. And there's just been massive sector rotation going around. And in addition to that, the mega cap stocks and tech names have held their value for the most part. So
well, except Netflix, but
right, but like Netflix's market cap was not even close to like the big fucking Google, Amazon, Microsoft, and Apple. So in terms of and even Tesla's held its ground pretty well. So so as a result, like the indices don't look like they're that bad. I mean, S&P is only down like 8-9% on the year. So, but every single rally thus far seems to be like, I mean, if you look at the violent, swings up and down, it looks like a bear market. But having said that, not the whole market's in a bear market. There seems to be about 20-30% of the market, like commodities, agriculture, some parts of industrials, basic materials, things like that seem to be on a definite kind of bull market, And so right now we're just kind of saying, okay, like,
right.
Is this some sort of reprieve so that like, and there's some other factors that are kind of playing into it. One, you got a massive number of people just every week piling money into passive investments, and kind of those guys are just kind of like, keep stocks going up. You got, there's a whole bunch of microstructure reasons why people just keep buying securities. One is passive investments. One is what's called the vanna trade, which is, hedges rolling off. But on top of all of that, you have this question of deflation, which Ian brought up, which is also, I know a lot of people talk about inflation, but there's a huge thesis out there among a lot of people, that there's deflation around the corner, and that the price increases that we're seeing are largely due to significant supply chain constraints, the end of globalization. All these kinds of things have resulted in massive price increases, largely in input costs. So oil, commodities, agricultural food inputs, all that stuff, there's massive prices. But because the money supply, for all intents and purposes, hasn't been increased, it's been increased in the financial markets, and it's been slightly increased due to all of that fucking fiscal stimulus over the last 2 years by the government. Aside from that, people's budget constraints are still fixed. It's not like it's increasing. So if you got to pay more for gas, guess
yes,
what?
Something's
going to have to get hit, right?
If I may interject, just to provide an example, average person in Russia pays more in food than shelter on a monthly basis. So imagine the United States or North America or Western Hemisphere or whatever. I don't know where everybody is, but imagine if you had to pay more for food than shelter.
Well, isn't the communists, don't they provide the shelter to these individuals?
No, it doesn't have anything to do with like communism or capitalism, really. It has to do with like the availability of money. Because if there's not the money to actually like provide for your inelastic needs, like food and energy, and those costs go up, and your speculative choices for your budget gets constrained, what happens? You spend less on shelter, and you spend more on food. And I think that's a way to try to tie in what MG is talking about and what I was trying to communicate.
But also, like, for example, discretionary consumer spending is just going to get crushed. So, like, XLY is the discretionary part of the S&P, and then XLP is like consumer staples. XLP actually has been rallying and did pretty well in the last few weeks, whereas XLY has been kind of fucking it's just been in a free fall.
So MG, what percentage of the S&P is FANG, like Apple, Microsoft, Amazon. Isn't it like
it was like 20% back in the day? Like I want to say like a year ago. I don't know
really
what it is
high.
now.
It's
Josh,
really
do you
high.
know?
Yeah, so the Q, I mean, if you ask me by the QQQ is like top 8 company I tweet today, yesterday about a 50% weightage on QQQ, Nasdaq top Nasdaq top 100 companies, Nasdaq top 100, which are 8 companies which will take the weightage of 50%. And
so
actually,
that's the largest cap tech, right?
yeah,
That's
mostly,
Amazon.
mostly though, yeah,
It
mostly.
was north of
So
20%
Apple is
at the
Apple is
high
12%.
for S&P. For S&P, it was north of 20%.
So
Yeah.
and then going with your theory about liquidity leaving the market, isn't that where the biggest money would go to hide? Is these high names such as
I
Apple?
mean, when you talk to the old school like equity guys, they'll tell you that one way that you see a bear market is that money slowly starts to leave everywhere and basically starts hiding and hiding and hiding at the top guys.
That's
and
what
like,
I'm saying. Yeah.
It seems like everybody wants to hide inside of Apple, so or Google.
That's what I'm
or
saying. So
Microsoft.
when they crack, everything goes. Like that's the
That's when
last
the fucking
to
flood.
leave.
That's when the floodgates just completely open.
Well, Apple is kind of a special stock because it's the most highly allocated company in all ETFs. You know, they've got a really high ESG score. It's the highest allocation in QQQ, TQQQ as well, which is the triple leverage ETF, and SPY. So on what I've seen over the last year has been, despite bad Apple earnings, basically the passive flow is still allocating in a Migrenian sense money towards those companies, despite the fact that Warren Buffett hasn't sold yet. And they're still buying back stock, but at some point, if Apple has a major employee attrition due to inflation, which I think is a possibility, there's been some friends of mine that have been taking these crazy fucking hedges, buying $1 worth put options on Apple at every quarter end, hundreds at a time, just waiting for that to get to $1 a contract, because that will be like the 1987 type portfolio insurance crash. And I'm really excited for that to happen. I don't know when it will. I've expended a lot of money over the last 2 years just waiting for it.
You can short
not
now.
to my benefit.
You can short this week now.
I mean, look,
There's Josh's theory, right, of going to 110.
Not 10. No, he said he's going to the few cents, blowing up the. It's like putting us in the slot machine.
Dude, I think 3 Aces said San Francisco is like a fucking shithole. I think if Apple and Microsoft and these guys go down, if Apple goes to 110, I think San Francisco will be fucking the Escape from New York from the 1980s movie.
Yeah.
No, guys, we have a big trouble.
Death Cross is in here. I know Death Cross. Aren't you short the big tech?
Oh, 101%, man. Right now we have a forget. You got to get out of this talk, and you got to start looking at the bond market. Then you come to know what exactly happening. Look, you got to look at the macro economy. Forget about the stock. Equity is most vulnerable. So if you get out of the box and think of outer world, which is real world, is bond market. That's the biggest market on earth, right? That's the bond market. You got to focus on bond. What the market makers are doing right now. Focus on there. You come to know exactly what happening over there. So this is how I take a look at it. Our stock market is like a cash cow where market maker goes and rip all these retailers and make some money, and then you see what happened. All these banks, they perform very well in this international bank. Basically local bank, they were underperforming, but all the Citibank, JP Morgan, then Goldman Sachs, look at they were so exposed to the international, Europe, world, Russia, everything. They had so much exposure, billions of dollars they lost, and look at their earning, man, outstanding earning. How they ripped the retailers on stock market and they mint money and came back with the profitability. That's called, those are the bank, man. This is how they make money, because we have so many dummies on stock market to blow up everyday money, and they become bullish every day they come and they blow up here. And I can see every day how much money they want to blow up, even though every day they're getting slaughtered here, and that's how they're making money here. So our equity market is like is a cash cow for them.
If this is your first time listening to Josh, like, I just want to let you know that every time he has told me something, it has turned out to be correct. And that's what has made me a very loyal follower. And if you stick around for a while and you ask him questions and you listen, you will see the exact same results. I guarantee you.
Oh, thank you, Sim.
I like it.
There were two kind words, man.
You know, one of the issues with Apple is that I know that a lot of guys literally look at the bond market and like say, okay, 10 years trading at 288.
Mm-hmm.
They look at Apple and they say, okay, Apple's trading at 30 times. You invert that, that's roughly a 3.3% yield with like a dividend that's growing, and it's going to go. Fuck it. I'd rather own Apple than the 10-year bond any day, because, like how, a lot of people sit there go, the credit of Apple's equity, as foolish as this thinking is, that they think this is comparable to as bankable as the U.S. government. That's how they look at it. They look at it as
I don't know, MG. I'm very weary of Apple with the chip shortages and with consumer spending going to be tightening in the future. Like, I think Apple, even though they're going to stay strong, they're probably going to see, the same type of effects as a company as well.
I agree with you. I think Apple has a lot of risk, but people perceive Apple to be like this crazy bond. Like,
It's the cash
the iPhone
balance.
hasn't been improved for 5 years, yet people go and fucking buy it every year.
They almost have more cash.
It's the cash.
Yeah, they almost have more cash than the U.S. government.
Right, it's the cash on their balance sheets that people are looking to hide in my opinion.
But guys,
Cash is king right now, evidently.
Apple has over 200 billion. How much debt do they have, Josh? They have
163 billion that they have. They increased the debt so much high versus 1:3 ratio of the cash. So cash is 1 and 3 is the debt.
And I guarantee you, if Apple came out and said, hey, we want to raise a $40 billion issuance, they would get it immediately. Just like
Yeah.
Amazon did 2 weeks ago.
Yeah, that's true. Sometime right now our market is so inflated. If you ask me, man, when I look at those balance sheets and all, man, look at that Tesla 100-time forward P ratio. Who cannot pay it? Apple is 29-time forward P ratio. Microsoft is 27-time forward P ratio. Google is 21-time forward P ratio, and Tesla is 100-time forward P ratio. Man, this Tesla will tank to the floor, and people realize, oh shit, I lost a lot of money because I had hope. I was holding hope, and that's what's gonna happen to the people, because I have
Do you
seen
think
this.
that Tesla is going to be one of the all-time great shorts?
Oh, 100 and so what I look at these guys, okay, right now this is not the normal standard market what we are trading right now. We going to the can of worm going to open, and that can of worm which we already just little discussed today, that can of worm will have a ripple effect on it, domino effect, right? When it starts, it kicks in, and I have seen in 2007, I have seen in 2000 dot-com bubble, and even 2018 also. Let's not go too far. Little bit 2018, when we have little cutie, right? That 2018, that little cutie. Imagine now what we have right now. We have so much different areas where we are vulnerable right now. We have nothing. Fed hands are tight right now. Handcuff. Fed hands are handcuffed. He cannot even do anything. He can't do anything. If he goes increase the interest rate, he is also putting himself into trouble. If he goes down, there's nothing. That's the reason people are blaming. Oh, Jerome Powell, he's not, he's behind the curve. But poor guy, what can he do? Because the politician on top of his head, he say, hey, don't do this.
He's totally trapped. He's totally trapped.
Well, that's tough shit because he was the one that decided to keep this thing going all this time.
No, the Trump put a gun on his head, dude. And then he said,
Do you honestly think that Biden and Pelosi and those guys don't have a gun to that guy's head?
no, everybody has a gun. Right now, we are out of the thing. But what happened is,
I agree, but he got himself in that position.
Yeah, yeah, exactly.
And this wasn't. Let's not pretend that this was going on just with COVID. This has been going on since 2010.
Exactly.
So that's the thing, right? That's to me. That's
I got a
what.
question for Josh. What do you think that Modi is going to do as a populist in response to the positioning that the Russian ruble has been making lately?
Okay, so Modi is just like another China. Okay, China is the kind of guy. Asian country. There's a politics is high, powerful over there. But the Modi is not a communist. Xi Jinping is a communist country, so he can control his population. Over here, he has to control all the politicians there in India. So Modi will go where slowly he will change his colors based on how he will see the movement, what Biden is offering him, what are the options. So I remember the Biden day before yesterday, 3 days ago, Biden called Modi and said, hey, please, our agenda is to make sure that we can, just like how we did with the what you call it, Venezuela, right? Venezuela was the richest country on earth, and then we make them right. Same thing now. What's going to happen? They're going to happen to the Russia, but it takes about a year because all the sanctions and everything that takes time to do these. So probably.
Okay. So as a coda, do you believe in like a U.S. dollar supremacy?
So
on that basis.
So US dollar will be little stronger because of right now the way all other countries also vulnerable with it. They show me which currency is good because everybody is inflated. Everywhere you go, Europe is inflated. China is 35% inflated. Japan is already negative going on. India is already printing that. India has a little gold, but it's still same thing. India is also inflated. Everywhere we have the problem right now. Biggest problem also, I'll tell you right now. Look at the 5 countries I'll give you. Peru, Sri Lanka. This is just the starting, guys. Okay, Peru, Sri Lanka. They have the civil riots going on just because of the inflation. Then Spain. Then we have I think Greece probably, and Turkey. All these 5 countries. Look at that. What happened is 61% inflation, guys, in Turkey right now. 61%. Can you imagine? And Sri Lanka doesn't even have the electricity right now. There is nothing. There's a whole riots on the street. And Peru, same thing. So this is all just the starting. Keep watching and see how it goes through.
Brazil, right? Because like these types of movements happen first in currency markets before they happen in like stocks and bonds.
Mm-hmm.
Right. And what limited availability that I've been seeing out of Sri Lanka is like horrifying.
Yep. It's horrifying right now. But the problem is, you guys have to understand, is the politics. Our market, our bond market is like dressed up so well that even if you go and ask in Europe, say, hey, where would you invest? They will say, yeah, I will invest into US Treasury bond. Till date, they say that's the safest bet right now. Safest place to invest is in US Treasury bond. So what can we say now?
I think what you're saying, Ian, is that the currency threat to the United States will happen over time, but it's going to happen slowly. Okay,
exactly.
Right now, 80% of the world trade is dependent on dollars. So nobody's doing anything.
Because they are holding the dollar. That's why they cannot say anything to that. And plus, already Japan came out say, hey, we're not gonna buy the Treasury bond, and they are smart.
That's true. But these things take time, right? Like India and Russia agreed that they're going to do a whole bunch of trade, and then they're going to settle it. So whatever the net difference is, they're going to settle it in rubles and rupees. I don't know exactly what the mechanism is. I don't think they do even right now. But they've agreed essentially to trade based on rupees and rubles. And India basically said, that we got to look after our own. And so they're not going to play ball with the rest of the Western Alliance regarding Russia.
I think
Ukraine.
you're exactly on point here, and all points of honesty are totally in agreement between you, MG, and Josh and I. It's just like trying to figure out like where the currency markets are going right now, because I'm watching the yen, and it's
dog shit.
It's failing.
Yeah.
And if you from an American point of view, if you look at any sort
They
of
just
currency
did a
pair,
QE, so they're gonna fall. There's no way, and they haven't. They're in a dip.
Guys, have you seen the number of people that can even enter Japan over the last year? It's plummeted because of their crazy COVID policies. Like, no one can even enter Japan.
Oh, okay.
I'm curious to hear Ian what he had to say.
So okay, if you go onto any American brokerage right now and look at any currency pair, the one that goes the furthest back is the USD / JPY pair, and that actually had some pricing data pre 1971 before the USD went up the gold standard. So you can look at the entire history, technically, of how the yen and the USD has traded. And it used to be flat for about a year, if you look at like the month-to-month chart. And from a technical perspective, people have talked about this since the 90s, all the gray hairs, the George Nobles and Grant Williams of the world have been talking about this for decades, dude. But right now, if you look at the USD JPY chart on a daily basis, it's like they're hyperinflating right now.
Exactly.
Yep.
And I don't know what to make of it. I'm short it via options on an ETF that's priced in dollars. Maybe it won't matter. Maybe I won't make any money off of it. I've already pulled my risk off. But it's a development. And like, currency markets are way bigger than the stock and bond ones.
101%, because there's so many countries, so many currencies. And you can trade 24 hours.
For me, the only thing I can hope for is volatility. And the reason I say that is because I can make money off of volatility, but what I can't make money off of is something trading sideways for an extended period of time. So that's what I'm looking for. That's what I'm hoping for. And, as long as I'm keeping some cash in the back to fund these moves, I can hopefully pull some money out of the markets. But it's a bullish position. Other than that, as far as long-term goes, if I see some juicy-looking bond investment that is real cheap, I'm going to say, hey, I know that it's going down. I know that the yield is not going to be what it should be. But if I can buy it up cheap and hold it for, an extended period of time without tying up too much cash, then maybe that'll be my long play. But it's really hard for me to make any decisions right now because everything is so freaking confusing.
Yep. Hey, Tuki, how are you? Long time. What's going on, TQ?
Hey, Josh. All good. Busy saving lives this weekend and trying to join in your call in the interim. But hey, I have a question for you. I kind of jumped in a little bit.
That's fine. Go ahead.
Right before you guys were talking a little bit about Apple. And we talked about it earlier in the week. Remember, I had mentioned that one of my friends who does a ton of DD, especially on Apple, they're thinking it's going to drop down below the 140 range. And, some of you guys were talking about wanting it to go all the way down, which would be nice. But I have a question for you. This is probably more my uneducated side of trading. But you know how you were talking about all the pricing for stocks back pre-COVID? And then how much they have gained over the last 2 years. So, all these big stocks that are coming up, like Google and Amazon and everybody doing all these splits, right?
Mm-hmm.
Now, if you go back and take into consideration how much each one of those shares cost pre-COVID, now you take the splits. Well, won't the splits kind of bring the shares back down to what, or close enough to what the pre-COVID
No.
valuation would be?
Those are adjusted. So when the split will be not occurring right now. They'll be occurring in the summertime, right?
Yeah.
So whatever the rate is going to be divided by, just like Apple always splits, right? And the Tesla also splits, and many company also splits at that time. So that will be pre-split price, and that's how whatever the price will be divided by that. There is no gain in that. Only thing gain is all this social media. They have their dummies, and they just want to go and just as if like they are going to just repeat right now. And anytime, if you notice, go and take a look at the history. Whenever announcement happens, then all the social media get slaughtered by themselves. Look at the Google, what happened. Check the announcement and see what happened after the Google chart. You will see everybody got slaughtered. In a pre-market, Google opened up at $3,000 and everybody got slaughtered in 3-4 days. Same thing will happen with the Tesla also. You can look at the history. Same thing happened with Tesla. Amazon also same thing. This is all goes on and on. It's just like a herd cattles. They just go into the news, and then they get slaughtered, and they again put that paycheck back into the stock market. So that's what people are doing. So that's what I teach here. We don't want to go into that herd community. We want to be very smart here. Otherwise, we lose all the money. Let it happen. Let it happen. And right now, we have a dark clouds over our head. And that clouds are very, very scary right now. Forget about this subprime 2008. We have a worse time going to come. So we got to be very careful.
So about the splits, I would say this. So Josh is totally right. The split's not going to change the value of the company, right? So if a share is $200 and they split 10 for 1, right? You get 20 shares, or you get 10 shares for 20 or whatever. The reason that the splits, in my opinion, are a valuable thing for these companies is it makes purchasing their options cheaper, and because the options trading has become insane compared to what we've ever seen before, that kind of gives some mojo for these companies to have options traders bid their stuff up to reach these option expiration dates. But keep in mind that it works both ways, right? So if your call options, I mean, that's how Tesla got where they are today, right? It was all options trading, call options, all the way to the frickin' moon.
Well, options all thrive on volatility.
Correct.
Right.
But it's cheaper to buy them when the stocks are cheaper. So
exactly.
If the stocks, but that also means that it's cheaper to buy puts as well. So if shit starts going down, well, now it's a lot cheaper to short the shit. So that's I think is going to play an important role here, because these AMC ape guys, right? A lot of them are buying options to take their thing to the moon. Well, when they figure out how to buy put options instead of call options, that could bury things.
Well, I don't think that AMC is going to become one of those like gamma or IV monsters like Tesla has become.
Well, it already did, right? It did back last year, where they had giant gamma squeezes because of the Melvin head.
But not in the same way. Not in the same way, because there were Wall Street bettors back in 2016 buying the top available Tesla options for cheap. That have made
went from $2 to $70.
Buku money. You can't reproduce that, and you can't reproduce it on GME either, and you can't really reproduce it on AMC, in my opinion.
I agree with you.
And Tesla was really the first meme stock, and I've tried to short it. My broker wouldn't even allow me to borrow shares.
Man, this is the first time I heard from somebody.
That's the Widowmaker, dude.
I know, right? So there's other trades to be had, and in my opinion on it, it's like the only reason why Tesla's options ID is so high is because institutions have been short.
Yep.
I find that when we hunt as a pack and like people are being like, hey, I noticed this movement, what do you think? And we get an expert opinion on the target and they say, no, don't do that. We are stronger when we hunt as a pack, when we're looking for things together, because then we can call out something that might actually have potential like downside that we can short, so on and so forth. But when we try to do this alone, we're going to get freaking murdered because there's no way we can predict what the market's going to do.
Absolutely.
All right, so I guess, Mike, and this is the part that I'm trying to figure out the math in my head. And so, for instance, let's say Google. You know how, if I'm correct, they're doing a 20-to-1 split, correct?
Mm-hmm.
Okay, so, and it's running right about $2,600 or something like that. By the time they do that 20-for-1, hypothetically saying, let's say it doesn't drop and it stays consistent right now by the time June arrives. And if they do, then each share is going to be worth like $130 or something like that at that point, given that nothing changes with the stock. But going back to what you're talking about, how all the stocks are highly inflated right now. So when it splits and it's $130, and now let's just say, is there going to be that $130, is it really going to be truly, is it going to drop down to 70? Or either way, like Google can drop down to 1,400 by the time the split happens, and then it will be 70-ish. So I guess I'm trying to figure out what your thoughts are.
So what I would do is everything is market maker, right? Remember, you have to keep in mind what market maker, how market maker will play, because any headline created, it costs tons of money to those not the tons of money, but that it happened to happen, those headline come out of it, and market maker love those headline, and based on that they will play that thing with the consumer, because consumers are the cash cow. When we go and play with those headline, they will set up a trap, and that trap, everybody gets slaughtered in the end of the week or end of the month, option expiries and all, and this is how people lose the money at that time. So what I would do is just to wait for the better opportunity. There's always opportunity arises, and I'll bet you even after a split also you will see the lower price. What happened to the Tesla? You saw that it went to $690, right? So do not need to go into that zone, or that hey, it's gonna split and I'm gonna buy it and just gonna hold it because I want to buy it to the cheapest one. Believe me, market always creates the opportunity. Just wait for the better opportunity. Forget about that headline. The moment you set your mind that I want to go in this direction and I'll be the first one to grab it, then you are the first mouse who's going to be trapped. So we don't want to be first. Let it happen. You will have ample opportunity. Right now, market condition is not what we used to be in stimulus money, where everybody had a pocket money and just dump it in the stock market. This is going to be changed now. So relax, just relax. Don't even think of dreaming any stock to buy right now. Just relax. You will see a tons of opportunity. Every day, remember your AMD. I don't know, you were there or somebody was AMD and still it's going down, right? So just relax. Just let the market go. Market is still going down. It's going to be crazy. This is nothing happened yet.
Just remember that the market is designed to basically wrest you away from your money. So whenever you see guys on CNBC saying, oh, like the other day, Scott Menard was there from Guggenheim. It's like, things look a little cheap. It's maybe time to like dip your toe in. The way I interpret that, and I'm a really cynical fucker, like he's looking to sell his shares and he wants someone to basically bid it up.
100%. Yeah. That's seeking liquidity is what it is.
All right. And so I learned my net lesson with Tesla, because I had the shares, before they did that split back in, what was it, October of 2020?
Okay.
I think it was back then. And so that, by the time they did the split, it was valued at $400 or something dollars.
Stimulus money that time. Remember, there's a time change, TQ. I know where you're going, but this is the time. This is not what it is right now. The clouds are different. That time, right now we have nothing. We have QT right now. That time we had a QE. It's a whole different game now.
Right. So what I noticed, and this is where I got stuck, is so I bought it, it split, it was 400, and then it went up a little bit, and then it dropped down to like 300 and something.
Mhm.
So this was post-split, whereas the mentality was it's
Mhm.
going to shoot right back up into the thousands.
Yep.
Right, and there's always a major shakeout after those types of events. And if I recall correctly, immediately post-split, on Tesla at least, there was a buying event from Vanguard,
Mhm.
where the closing price of it went up by like what 10% in a day.
Mm-hmm. And then it dropped back down within a couple of weeks too.
Which is totally nuts. I mean, and there's some opportunity there because of what, not to interrupt too much, but like Mike Green has talked about this a lot, where you have this passive bid that's always buying, as long as people are employed, right?
Mm-hmm.
And if you can find companies that are about to enter indices and about to be allocated towards in passive funds, and if you can capture them before they get bought in, you can sell into that. And it's a wonderful thing.
But that's not the splits, right? I mean, the reality is that splits post 3 months have almost zero impact on the valuation of the stock.
Yeah, I mean, splits are almost like a top indicator. Like the last time the Amazon split was like during the tech bubble.
There's zero evidence of splits having, and I've researched this over 50 years of data. Like splits past 3 months almost have like there's no discernible impact on
because it doesn't have a net effect on like the market cap of the company, and if
Correct.
anything, like reverse splits are even worse because it just means there's more common shares to short. And
reverse splits do have some information, but the other splits don't. Reverse splits precisely because there's more to short. Usually companies that are doing really shitty, they'll do a reverse split to try to bolster their stock price, and it doesn't fool anyone. People just short more.
Yeah, because there's more shares available, and the fact of the matter remains that most, if you're really going to look on a historical basis, there are minor exceptions of stocks that continue to go up. Okay, most of them go to zero. Rare exceptions would be like Ford, IBM, the blue chips, and whatever. But the fact of the matter remains, like, stocks are transitory.
All right, so
they don't go to zero, dude. They either get purchased or something happens. But bankruptcy is not like the median, the mode outcome. It's a very rare outcome.
So here, I guess this is where I'm looking for perspective, and I think I've got the answer from everything you guys have said. But just a little backstory. I used to work for IBM, and they had a really good stock purchase program for the employees, and I bought whatever I could during the time I was there, so that was over the course of 10 years. When I left, I maybe had $25,000 worth of IBM shares. That was ending of 2005. All right, 2005, I have that much shares. They're sitting there, they're growing, they're doing their own thing. I didn't touch them. I really didn't even look at that account. Fast forward about 10, 11 years, found myself in a nasty divorce, and I needed to buy myself a house, and I needed a nice down payment so I can get the house I needed. Well, for the first time, I went in and I opened up my account to see where my investment stood. Somehow I had $150,000 in there at that point. So IBM had done a lot of splits during that time frame, and whatever happened, there was a nice accumulation over a 10-year period for what I had in there initially. So with the Google splits and all these big tech splits that are happening, which I don't plan on buying any of them until after they split and hopefully drop some more, which is what I think you guys are trying to tell me to wait to do, is what I want to do. But at that point, the same stocks that we're talking about, are they still going to have that same growth capability that we know they have, or is this whole environment changing how we used to look at all these big tech stocks?
I think you're nailing it. I think the last section that you're talking about is you're nailing it, because it's not about the splits that I'd be focused on. I'd be way more focused on what's the environment going to look like going forward here, because it could be a long time before things actually turn back around, because economically speaking, consumers are a lot weaker, and that's going to trickle all the way up to the big guys.
I really want to scream here, because IBM, as an example, is the longest running blue chip stock in the Americas. Don't sell all of it. I'm not a financial advisor, but if you feel the need, if the cash that you'd be able to get for it is worth it to you right now, maybe sell half. Keep the rest of it.
This was, unfortunately, this was 2014 when I was in the situation, and I did sell it. But again, I looked at it in the idea that, I had $25,000 by the time I left IBM. By the time I needed it, it had grown to over 100 and something thousand. That was without me touching it, just letting it do its own thing. Dividends reinvested, splits, continuing growth over and over and over and over.
Right.
And yes, I ended up using it up, but I also understood that I had $25,000 in there of a good stock, didn't touch it, didn't look at it for 10 years. I'm trying to kind of repeat that same scenario, but but now I want to buy some of these other stocks that are now going to at some point drop after their splits. So if hypothetically, if let's say Google drops down to $70 after.
Okay. So
then I want to buy.
Basically, what you experienced was like a uniquely compounding motion, where a high dividend stock that's undervalued and that you're able to reinvest in compounds like that, because you're able to take the dividends, reinvest it into the stock, and then maintain higher dividends. Okay? And because the post 2008 environment hasn't really allowed for that so much. Some of the smarter gray hairs that I've heard from call it a yields crisis because of that very reason. Like, you used to be able to do the same thing with like U.S. Treasuries when they were trading at like 13%, where you could just like buy a Treasury, recompound the yield, and just like have this linear accumulation of wealth. And the fact is that that's becoming harder and harder to find. At the same time, while inflation is going up. So, frankly, I don't think anybody really has the answer for you. But that was a unique point of time where the equity was basically compounding in this really wealth-building fashion. And everybody around this space is equally in shambles trying to figure out what the next opportunity like that is. So you're not alone.
Okay. Yeah. Yes, I know. That's why I love this group, because it sounds like all of us kind of have our own experiences, yet we're all trying to find the same answer. Maybe we're just saying it differently or whatnot, but yeah.
100% agree.
One of the things that I really like about IBM is that they have more awarded patents year over year than any other company. So I watch what they file for and what they're awarded as far as their patents go, and they are just a patent producer.
But like MG and Josh said, that was during QE. Now we're entering QT.
Exactly.
It's a different time frame.
Exactly, and that's what happened from 2008 around 2008 all the way till now.
Market always. Yes,
And
sorry.
I think Ian's right. Like you're not seeing interest compounding anymore, like yield compounding in the same way that IBM used to do it, or you could have done on treasuries that had high yields. But what's happened? Let's replace that is stock buybacks, right? And those stock buybacks get funded by companies
by bad debt mostly.
By bad debt, exactly. Yeah, I mean, but where does that come from? QE, right? And now QE, as far as we know, has ended, and we're going to start going the opposite way and start doing QT. And so, as a result of that, what can we expect to happen to these equities? So,
I actually have a slightly different view, Death Cross. Like, one, I think that, we love to opine on macro, and I love to do it with everyone, and I've learned to do it, but that's certainly not where I started. I'm typically I started as a quant investor, and then I morphed into just a kind of a traditional bottoms-up value investor, and that's kind of where I like to be. I actually think companies that do buybacks, for the most part, I've made the most money over my career in investing in a few companies that have done simple buybacks. AutoZone was one of my, literally one of my best investments. I've owned it from 2000 to 2005. Then I owned it from 2010. I still own it now. I wish I'd never fucking sold it. That company literally in 1999 had 165 million shares. They have about 25 million shares now, and and that company, it's a sleepy little company. It's grown at 5%, maybe a little bit above kind of inflation. Its operating income has increased. The revenue is maybe top line has grown by 5-6%. Operating income has profits have grown 7 or 8% because they've had some scale, but the EPS has grown 20%, and the stock price has grown CAGR at 20% because they've just been brutally good at buying back stock. And it's literally the opposite of the Mike Green effect. If you just take a whole bunch of stock away so that people can't buy or sell them, and people slowly come in, it just I don't know. I'm a big fan of buybacks. I know people don't like them, people poo-poo on them, but I think companies that do buybacks well are fucking incredible investments.
Yeah, I'm not saying that. So yes, I'm one of those people that thinks that buybacks suck. But regardless, I'm in agreement with you that the way that the equity accumulates now is not by a dividend yield getting paid. It's through buybacks, which often is more efficient for companies because they don't pay the same tax rate to perform a buyback that they would if they were to provide a dividend.
Yeah, any company that pays a dividend versus a buyback have to question their CFO and why they're doing it, because it is just, the taxes are night and day different. It is so much more efficient for investors for them to buy back their shares than to pay out a dividend.
Well, it's really just reducing the amount of common shares versus paying off debt, right? So look at oil companies that have a lot of really, really badly priced preferred equities, and they're not necessarily incentivized to pay those off at the moment because they know that they're necessary to the actual real economy. But when you look at Apple, they're just all right, we're just gonna eliminate 10% of our common shares. And then on earnings,
well, what's wrong with that? That's actually excellent. That's excellent. That's exactly what they should be doing. In fact, they should do more of it.
Well, that's a way to give back to the investors for sure, right? Because that provides some liquidity.
It's a very efficient use of capital, right? Their return on invested capital in their business is in the high teens, and so for them, if they're borrowing at 3% and reinvesting in their stock, which generates a return on invested capital in the high teens, that's phenomenal. That's very accretive.
from an investor's point of view, but from like the real economy's point of view, I don't know. I'm not sure if that's a productive